every trader's focus is to get low spreads and finding a perfect strategy. They also focus on proper entries and exits. However, before any decision is made, look for a reliable broker. We all want to have good spreads and commissions that allow us to get into the blue faster. At IKUTI, having spreads as low as 0.0 pips with leverage available up to 500 times is just one click away. You may also choose from 3 different account types, with a minimum deposit as low as $10. Built by traders for traders. Trade and control with our recommended broker, IKUTI.
Good morning, guys. Welcome to the live session with Stock Sniper Trading. My name is Dave. My partner is Ron, guys. It is the end of the month here. Okay, we have some 8:30 news, so it should be pretty exciting. Current time is 7:50 here. We started a bit late today, guys. Had to take care of a few things. But with that being said, guys, not a buy or sell channel here. Here to provide free technical and fundamental analysis. Okay, check the disclaimer at the beginning of the stream. We're not financial advisors, so any trade you take are upon yourself. Make sure not to risk more than 1%, especially in these volatile markets. All right, so be understanding of the risk that you can withstand. All right, we're going to do some, I'm looking at US 30 right now here. I'm going to chart GU, and I'm going to focus on some gold. All right, so let's see how things are going to move. All right, we have some news at 8:30 which we will go over. All right, so let's get ready to rock here. I'm going to start with the top down on US 30. All right, guys, so you can see US 30 on the daily here. We are running. Okay, you can see that we're still selling off, guys. I'm looking for a nice level of rough demand area and then around here. Okay, and then my supply I can see starting to form. Obviously we have one up here. We'll make a smaller supply zone coming in on this area. Okay, I see some daily resistance coming. Okay, you guys can see this too at the rejection here. Okay, and then I see my daily support coming right back down at the bottom candle. You can see we're testing it right now. All right. You can even place it at these lower candles right here, and we can get that at the 4 hour. It's whatever you feel most comfortable with. As long as there's a higher time frame that we get to challenge, we can go from there. Okay. So let's take a peek now at the 4 hour here. All right, just gonna make a quick little update. Put it at the bottom structure. I'm looking at my 4 hour support coming in right here. You can see it's approaching that bottom wick. Okay, so 4 hour support. Okay, looking for my resistance on the 4 hour. Okay, pretty straightforward coming in right here. You can see it was once acting as support. I'm gonna move this up here, guys, for 1 second. There we go. Resistance. Okay, so let's take a peek now at the hourly. Okay, looking good. Price is getting some rejection here. Okay, so 1 hour resistance. You can see the hourly support kind of coming in. You know, we have 4 hour right here, so I'm not looking at gathering much there. I see a nice hourly wick below. Okay. Okay, and you can see we're still falling here, guys. Okay, let's take a peek at the 15. Okay, I see some nice 15-minute resistance area rate forming. Okay, and I see some 15-minute support level just tapping these wicks. Okay, sorry about that. So 15-minute support. Okay, we're gonna drop to the 5-minute. We're just gonna let this thing kind of do its thing for a little bit. Five-minute resistance here, 15-minute support. Okay, and then all right. So let's just watch this for a little bit, guys. Give it about it's just under 1 minute now until the new candle comes in. I want to see if we're going to continue the downtrend or if we find a little bit of bottom here. You can see that on the RSI, we're showing a little bit of divergence. Okay, so let's take a peek at the 50 line. Okay, we can see we're just below it, and you can see that we are just below the 9 EMA. Okay. So let's give this a couple times here. Okay, so you can see we're testing that 9 EMA. Still forcing that continued downtrend here, so we're coming to that. Here's the new candle, guys. Just give it 30 seconds in. You can see that price starting to get a little bit of resistance, the top wick down on that 9 EMA. So let's just add some alarms here. I'm going to mark just in case we do break above. Okay, going to add an alarm. And if we do get back down to that 15-minute support level, I will add one here too, just so we can get both areas so we can come to the chart. Okay, and let's go take a peek at GU for now. And then we'll chart. Actually, we'll do gold right away, and then we'll look at GU. Okay. All right. So let's take a peek at gold on the daily here. All right. See what we got going on. Remove this 9. Okay. See some nice demand area. You can see we're coming in here. It's approaching previous structure, so I'm going to gather. Yeah, we'll get GU, guys. Absolutely. This is demand. Okay, going to get a little bit below. You can see what we're looking at right around here. Okay. Okay, so you can see nice structural support. We broke previous neckline here. Okay, we're approaching this demand area. You can see that we've tapped anywhere between 1800 at May 13th. Okay, and prices started to go bullish here. That was that big bottom out. There is a long wick even further below at 1787 area. Rough estimate. So let's see if we're going to find some support level here on the daily. And let's check out so we can get some supply. All right, nice supply level right here forming. Okay, I see some nice support and resistance coming in. Daily support level of 1798. Okay. Daily resistance coming in here. Okay, coming at 1818. All right, so let's take a peek now at the 4 hours, see how she's looking. stretch this across. Okay, we're right there. All right, that's what I wanted to see. This wick, which held the support level, is exactly where price is starting to hold. Okay, so 4-hour support. And that's where we are right now. All right, we're hovering right around that 4-hour support, which is the previous wick to the left. All right, that's back in May. So I'm looking now to get some 4-hour resistance here, and then we'll break down, look at our hourly. Okay, and we're going to take a peek at the 1 hour now. Okay, see an hourly bottom wick, which is going to act as our hour support. Okay, and then some hourly resistance coming in here. Okay, I'm already in a gold buy, guys, just letting you guys know. I told that to the group before we started the call. I'm running 17, 18 pips in and out. All right, let's take a peek at the 15. Okay, 15-minute, guys. You can see we're going to trap this candle here. Nice 15-minute resistance at the rejection wick. Okay, let's take a peek now and see if we have anything below here. So 1802, we're going to pass through 1800 here. So I'm going to just gather that 1800, 1801. Okay, get a whole number. There we go. Okay, so that can be our 15-minute support. Okay, we're going to check out GU right after this, guys. Okay, GBP USD. All right, you can see, just tighten this up here. Let's take a peek on the 5. Okay, so let's monitor, see if gold is going to hold. Maybe a nice little trend here. Okay, and then I see 5-minute support level holding. So far, just at the close of the candle right here. All right, if we start to break there, guys, we're coming back down to that hourly. All right, so nice little pickup scalp. And you can see we might be kind of holding it again. I do see a nice little trend here. Nice parallel channel starting to form. Okay, so let's watch and see how we're going to get a close out of this. All right. And we're going to take a peek at GU now. Okay, we're going to take a peek at GBP USD. Just let's see what a good level is of gold. Okay. Perfect, guys. All right, so I'm looking at 1807. You can see the resistance here, and then my daily is 17, roughly 1800. Okay, take a peek at that GU. US 30 starting to rise a bit. Okay, you can see that this is before 8. Actually, we're actually at 8 a.m. now. Okay, about 2 minutes in almost. So let's watch and see this price structure. We haven't tapped anything just yet. All right, a lot of rejection, kind of hovering in and out of movements. So let's take a look at GU here. Nice GU buy coming in. Okay, this is still from yesterday, guys. Still holding down in that area. So I'm going to remove absolutely everything. Go to the daily. And we're going to go from there. Okay. All right. Who's trading GU today, guys? Anyone traded in London? Made a good move. All right, nice demand here coming in. Okay, and you can see nice resistance coming here on the daily, guys. Pretty straightforward. A lot of wicks. Yeah, news is coming in at 8:30. Unemployment claims every Thursday. Don't even need to look at it. Been doing this for too long. Okay, guys, so I got daily resistance coming here on GU. All right, you can see better resistance obviously is here, but we approached that level and we breached the support. So we're looking at roughly 22,000 area in and around here. Okay, so I'm looking at daily resistance. All right, and I see some daily support coming down at the bottom here. All right, I'm going to take a peek now at the 4 hour. To the left here, a lot of wick coming in. Okay, 4 hour support. And then we have 4 hour resistance coming up here right at the rejection. Okay, beautiful FU candle. All right, started to push up and you can see it rejected and continued down. So we have 4 hour resistance. Okay, we're going to take a peek now at the hourly. Emmanuel, I have it set so it's only going to show the face on YouTube. So if you want to see the beautiful beard, check it out. Okay, so you can see now, nice hourly coming in here, pretty straightforward. I'm looking for hourly support. All right, right there. Okay, which is previous structure. All right, they breached it, and then you can see they pushed back up. And then I'm looking for, I might move my 4 hour just to these long body candles here, rejection, and move my hourly just down a tad right here. Okay, give me a little bit better of lower time frame. Okay, so we're doing 1 hour resistance here. All right, let's go check out US 30 right after. I haven't got any alarm yet, so we'll see how this is going to move. All right, and let's take a peek now at our 15-minute rejection point. Okay, and then my support level, if we get break, I gotta go back for some big movement here. Okay, and then I see a wick coming down, and then indecision right in the middle there. Okay, so 15-minute resistance here, 15-minute support is going to be just below the 4 hour. Then we're going to take a peek at the 5. Okay, and then 5-minute resistance coming up here. I do see a nice little trend here forming on GU. See a nice little rejection happening here. Gold is running back in that 1720 pip mark. Okay, so let's go take a peek at, set some alarms here. I'm going to mark them at the midpoint at the structure. Okay, add alert. Ooh, guys, gold. Ooh. Ooh. I'm going to add my resistance here. Okay, so let's watch and see on GU here, looking pretty good. Okay, there's gold starting to hold here. Let's take a peek at US 32. People are saying it's moving. Okay, not moving just anything yet. A little rejection here. Let's focus on maybe a gold movement. Okay, nice rejection coming off the 15-minute. There's news at 8:30, guys. All right, so let's go take a peek at US. Okay, so now we're pretty much done. Let's add on our moving averages here. Got the 9 on US 30. And we got everything set up. Okay. We have news, guys. People are asking on every Thursday. Just keep in mind that there is going to be unemployment claims. It's launched every single Thursday, guys. Okay, so I know that's how it is. We have Canadian news as well. You have core PCE price index, and then you have GDP. All right, guys. Also, I got a decent amount of people on here right now. Please give Albin, all right, Albin in our moderating channel on YouTube a happy 18th birthday. Okay. Please give him a happy 18th birthday, guys. All right. So you're coming in, guys, about 8:09 here. Okay, US 30 starting to sink off again. You can see a nice little downtrend happening. All right. Going to see if we're going to get a nice little push. Okay, so gold's getting rejected right at that 9 EMA here. Albin, are you feeling the love, my man? Okay, you can see gold, nice rejection. This is the new candle coming up here. Okay, let's watch and see. Perfect, guys. Albin, if you're happy, my man, I'm happy. All right. Okay, so you can see here US 30 starting to hold, guys. It does look like it can fall some more if you look on the higher time frame. You can see the hourly. Okay, there's a low bottom wick coming down to our 15-minute and 4-hour. All right. And if you go to the 4-hour, you can see that we do have an ability to drop even further into structure, guys. All right. Have the ability to get down to the daily here, so this will be really interesting to see coming in the next little bit. So let's take a peek at the 5 again. Okay, gold is testing that 9. All right, if we close above this 9 EMA, guys, it's looking like a juicy buy here. Let's watch and see. We got to get a close above. Okay. Let's take a peek at US 30 here. Still holding. Okay, a little bit below. Lord, yeah, watch your spreads, guys. Watch your spreads. If you don't like gold here, there's no issues on gold. All right, there's plenty of other things we can trade. US 30 is a bit better spreads too, so just keep that in mind. Guys, if we do tend to break, all right, I'm a little bit indecisive right now on both. I see a nice little downtrend here. Okay, well, it could bounce off. This is an engulfing candlestick coming off the resistance. All right, but we're still looking like we're holding a little bit of support. Okay, we got about 15 minutes until news, guys. So if you guys just want to wait until then, that is completely fine. If not, you know what I mean? Just monitor everything and trade accordingly and cautiously. Let's go take a peek at GU here. Actually, let's take a peek at the DXY before we do anything. US dollar is gaining some strength, guys. It looks like it's gaining some very strong strength here. Look at where we're at now. We tapped a high of 105.5. Okay. This is a beast move here. I'm going to have to flip on the 15 minutes so you guys can see. All right. Everything that's going on. Okay, there's a long wick here that I see can be filled. All right, that was a liquidity grab. You can see DXY is oversold, or sorry, overbought. So price may be going to get a little bit of retracement here. Okay, I don't know how far it will get to. Remember that news is going to be key. So we set both support and previous resistance, and I'm looking at gathering one more area of resistance plus support. Okay, in terms of where we are in price. All right, so if we break above, guys, a 105,600, okay, will be the next leg to the upside. You can see it's just right above the high. All right, if we get rejected here, all right, we might push down. We got to get below this 9 EMA though. Okay, so just keep that in mind. We have to get below the 9 EMA. All right, let's take a peek at GU. Okay, so there's GBP USD, guys. Potential push. Okay, this looks, a couple things can come out of this. All right, you can see that there's a nice level of support at the 4 hour. All right, this can be an inverse head and shoulder pattern if price starts to pick up. Okay, all right, you can see that if they hold here, we can start to rise back to maybe the 21,100. Okay, all right, so this has an opportunity for a nice little push. We'll watch and see. Okay, if not, they're going to turn into an M pattern and break that 4 hour structure right here. Okay, BTC, guys, under 20,000. I don't know if you guys saw that. Okay, gold back 1806. You can see a little bit of rejection here. Okay, take a peek. US 30 is kind of forming the same thing. Okay, a little bit of sideways trading. I bet you they're just waiting until news, guys. All right, bet you they're just waiting until news. If we get a break here on US 30 though, if we break this level, this would be 5 minute. Okay, I'm going to look to short back down to maybe the 15 minute. All right. If not, they're going to start to hold here. We need to break above this downtrend, guys. All right, you can see that nice structural push. No, I know I wasn't a DT. I was just chilling out, having a coffee. I didn't do much trading before until now. Can I check if Stock Sniper Trading Signal Sand Stock Sniper Trading FX Telegram group belongs to you? The free Telegram group pinned at the top of the chat, that's ours. Anything else, guys, they're scammers. Okay, you know how I feel about that. I snapped almost a week and a half ago on someone trying to just manage an account. Don't like that. So guys, please, anybody else messaging you, we don't message anyone. We don't need to. We don't have the time to do that, unfortunately. So if that does happen, guys, please report and block them. All right, you know what I mean? Probably best for everyone. So, okay, guys, US 30 still testing here. All right. VWAP. I don't mind it. I've used it before. I did it at the beginning when I was trading on YouTube. People liked it, but people just like to see raw price better of, you know what I mean? It's a very good indicator though if it can be used right. There's a, where is that bad boy? It's an anchored VWAP here on trading. I gotta find it. It's very good to use. Anyways, it's on one of these ones right here. I forget which one it actually is on, but the anchored VWAP is very nice. Ooh, guys. Okay, is GU that inverse head and shoulder, or is GU that Dumpski? Okay. Looking like potential M pattern starting to form, maybe W. Okay. 819, guys. 819 is what we're coming to. That's GU. Still not looking for anything on GU right now. There's US 30. Okay, look at this flick, guys. Inverse head and shoulder. Yeah, that's what I was mentioning. Sammy looked pretty juicy. I just don't like it, guys. We're barcoding right now. Okay, you guys can see that. You've been trading with me long enough. This is just a barcode. All right, we talked about this yesterday. This is what gets you into trouble when you get into this. As you get in on a buy and a sell, I'm in gold buys right now. I've been at the bottom of 1804 and then 1805. Okay, I'm not entering anything else, and I will look to close maybe before news. Watch and see. But this is what happened yesterday. Gold pushed up, guys, and then we were in barcode. I was in a buy. It looked possible, nice breakout, and then push back in, and I was like waiting to sell, buy, sell. You know what I mean? It's tough. So this is the areas that you want to just watch and wait for. So guys, if US 30 continues to drop here, all right, I want to see if a nice little sell up, maybe not. I want to get maybe trapping these bottom wicks right here. There we go. That's a rejection. Okay, guys, and this is the thing when you're doing technicals and stuff. You want to gather. You can gather wicks or bodies. It's up to you, but make sure that you're gathering multiple touches here. Okay, 1, 2, 3 taps, 4 taps. You see what I'm saying? This rejection that I had right here, that trend line support, was based off this wick right here. Okay, so we can erase that so it doesn't really mess with people, and then move on. Okay. Okay, let's go take a peek at GU here. Okay, so GU is looking like it's slowly starting to rise a bit. That hourly is holding key. Okay, so I'm just going to remove this. I'll start to add it over here. Okay, let's go take a peek. Okay, US 30 got a nice little push up and then a wick down. Okay. So news is coming up, guys, in 8 minutes. There's US 30 pop. All right, let's see if we can get that potential continuation here, guys. Everything is falling right now. Just waiting until news, maybe picking up some volume. So let the news pass on, guys. Let the news pass through. All right, don't be buying or selling anything right now. It's too close to that time. Okay, so nice wick rejection coming in. All right, you can still see it's holding a little strength coming in from this support level here. And you can see this downtrend is holding very true. Okay, and this is drawn on the 5 minute. It's not a 15-minute trend or anything like that. So what do you guys want to trade through news? Do you guys want to do gold? Do you want to do US 30? I don't really want to do GU, guys. Just I'm not going to do NAS. I haven't done NAS. I would love to do it, but we're going to save that for a little bit of open. Okay, so there's US 30 getting pushed right back down. Okay, holding strong so far. So the gold had a heavy rejection coming back down to that hourly. Okay, so nice parallel channel here running, and you can see the bounce coming back in at hourly, testing very strong, coming in at around 34 seconds, guys. This will be 8:25 coming in. All right, you can see nice little area where price has had a couple wick bounces before, so we're going to see if this is going to have another one, or if this is just strength is going to push right back down. Okay, so we'll monitor gold here. I just want to flick around to see US 32. Okay, guys, here we go. So 8:25, there's GU. Let's see if we got a nice little push. Okay, there's GU, guys. Nice little M pattern starting to form. Sorry, inverse head and shoulder, not an M. I was looking at that structure before. So if we continue to hold here, guys, GU could be a nice little opportunity for a potential buy here leading back up. Okay, filled the wick, but watch for the retest. Okay, you can see we're just above the 50 line. I'm going to wait until news to let this thing do its thing. Okay, so GU's pushing, guys. I might take a little buy on GU here. Okay, watching for just until 3 minutes. Okay, so you can see GU, guys, if we break this 15-minute, it's going to be a nice little buy opportunity here. All right, looking for GU long, pushing back up. We'll watch and see how this is going to move price. Okay, so we'll adjust the stop loss, guys. I'll let you know. But if we get that 15-minute break, okay, you can see price can start to rise here, maybe about 15 pips. And that's at a price of roughly here to here. Okay, so don't use a large lot size, guys. You can see we have news coming up. All right. We are going to do gold throughout the news, okay? Just because it has a little bit bigger move. Okay. Let's go take a look at our Goldie here. Okay, so if G doesn't break above there, guys, remember, don't take it. Just watch price accordingly. We're looking for a close above. You can see what's going on with gold here, holding a little bit of support level on that hourly. You can see that US 30 is trying to break above here, getting a little bit of resistance. All right, so monitor both. Sorry about that. There we go. So US is holding. Gold is showing a little bit of retest on that hourly. Okay, so there's two moves here. We have a break above 15, okay, and then you have a short below hourly. All right. This is coming up in about 1 minute. Constant trend is bearish, guys. All right. So we're going to watch and see how the news initially opens up. Okay, but just under 30 seconds here. Okay, here we go. 10 seconds, guys. Okay, candle's just about to open up now. Okay, a little indecision. Okay, 9 is getting the rejection right here, guys. Okay, heavy rejection coming at that 9 EMA. Let's take a peek at that US 30. Okay, US 30, huge continuation. Okay, so they take it off. Big impulse buys on US 30, guys. Okay, a little bit of stuck on gold here. So usually gold has it and US 30 don't, but you can see it's the revolves are reversed today. Okay, let's go take a peek at GU. Big impulse buy coming in. Beautiful, guys. I'm rolling on the GU. Okay, you can see that thing's running about 15 pips. Anyone snag GU with me on that? I'm watching now gold. Okay, US 32. Everything kind of flipped, guys. Everything kind of flipped. Look at what's going on with US 30. Okay. Gold is still getting a little bit of rejection here. Okay, so a little bit of wick rejection coming on both. This is still the first couple minutes on the news, guys, so let it kind of play out. Indices were better, just how it is, how it played out. You can see US 30 starting to rise here. If we get a nice little break, guys, okay, let it load. If we get a break above this hourly, okay, it's looking pretty good for a nice little opportunity for a continuation here. All right. Gold is sleepy today. All right. Oh, we get a little bit of a rise now. Let's see. Okay, guys, there we go. I'm in from 1804 and I'm running 25 pips. Get this break above, guys. I'm looking for a 10 pip move and I'm going to secure 90%. Let's go. Guys, I also set up the GU right before and I put the numbers 21255 and then 214110. You know, so can't do everything for you guys, especially monitoring 3 different charts. And I got a Zoom channel here, I got a YouTube, right, doing like 5-6 things at once and trying to trade. So there we go. Let's go, guys. Here we go. So this thing can push down, so don't be afraid to start to secure some of this. Oh, guys, there we go. Juicy, juicy. Running 20 pips, guys. I'm running 500. Let's go, guys. Who's running on gold with me? Speak in Hindi. I can't. I would love to, but I can't. So I'm running on here. I'm running a little bit lower, but this is the opportunity I mentioned right here. This is also the Discord alert mentioned sent. Thank you to the admin who forwarded that. Much love. Great trade. Oh, guys. So for all the guys shorting gold right now, just be aware. Secure some of this, guys. Don't be afraid to take your profit. I'm going to send the Discord and then the trade taken here. Okay, see how it's pushing back? Let's see if we can hold above. Okay, so TP, guys, I would look to secure at least 80-90% of this right now. Okay. Florin, Dave, you trade against the trend? Kinda, but more like a double bottom here. You see what I'm saying? Remember I told you that hourly support is being held? If they would have broke that there, guys, I would have exited my position, but you can see, oh, horrible, horrible, horrible. You can see nice bottom here. Okay, and then your secondary bottom coming in here, which led to the neckline 106.5 breakout. Okay, so beautiful move. And it ran for maybe about 25-30 pips, depending on where you got in. Okay. All right, guys, so you can see it pushing back down. That's what I'm mentioning to you. Don't get greedy here. Look to secure. All right, if that's what we get, that's all we get. Let's take a peek at US 30. Okay, so US 30 is looking pretty bull so far. Okay, so now we're focusing on here. Okay, a little slow, guys. So you can see it, we're pushing right back to entry. Okay, both GU, guys, and gold push right back down, so you caught a nice impulse. Okay, we're going to see how this move is going to hold here. So that's why I mentioned to you right up in here. Secure, take it. If not, you can say push back down. Same with GU, guys. What's going on with GU? You can see nice little rejection area coming back down to the 9. Okay, so push back, ran 15, and now you're pushing right back down to the overall 9 EMA. Okay. So watch this accordingly. All right, you can still see that the trend is still going to be your friend. All right, higher time frame has been bearish, but again, we can see if we're going to hold at the 9 and then the structural right here. All right. Guys, I have my phone right here. Okay, you can see it's right going on. Okay, there's US 30, guys, looking pretty juicy. NASDAQ was a huge impulse break. Okay, now we're at that indecision mark. Okay, so now let's just take a peek. Got about 1 minute left here. Sorry, guys. See that gold is still holding. All right, I'm looking for a break above 1810. Okay, 60 pip candle on NAS, very similar to US 30, guys. US 30 is almost 100, but you get the retracement now coming in. Okay, so coming in new 840 candle, guys. I'm looking for the 845. All right, 845 is going to be the next candle, which I'll look for something. Okay, guys, so that NJ trade sent, it's still not even close to entry, so just be aware of that. Okay, gold is still moving, guys. Oh, sellers are gone. Sellers, where are you at? Probably should have waited a bit or held a runner, guys. I secured, but you can see that trade just popped off. You're looking at 60 plus pips. That's a big move, guys. I'm not too sure if you guys understand that, but I know there's a lot of people selling gold right now. Like there was a lot of people selling gold, and I hopefully you guys did not hold. And the reason why I'm saying that, I'm not saying that it's bad for you to sell because it looked like a sell opportunity, but if you guys didn't have a stop loss, this is why people hate gold. You know what I mean? They think it's going to come back, and it's not. This is a double bottom break and a continuation. You know what I mean? So we're coming to a key level, guys. And you can see it's still running. Ian, it can be an account killer or an account maker, one of the two. Oh, guys, look at this thing. Don't buy now, guys. Oh, guys. I don't even care if I wasn't in that. Did you guys see that? Wow. Guys, that's a move. Holy shit. Look at this. I had standards on that, guys, and I did. And I closed. That thing is 170 pip candle. So that's what I'm trying to tell you. If you guys are holding in sells here, you know, you don't want to. Because I've had it so many times on this stream. where I see people holding sells. Okay, and guys, I'll show you. Oh, guys, I'll show you the buys. Okay, this is from the Discord, and this is coming after 8:30 right here. You can see entry was 1806, sending this right now. Banked. Can I still buy? No, I don't think I would. Yesterday we caught a massive sell-off here, and you catch the buys. All right. Okay, guys, how many people smashed those gold buys? Guys, you also have OPEC meetings right now too, so that you understand that that's going to have a lot of impact on what's actually going on. Okay, US 30 is just chilling now. US 30 was the one that we thought looked real good, and then you can see it flipped over to gold. Be careful selling gold right now, guys. Just honestly. Okay, that's getting some rejection at the daily here. Okay, so we're pushing from that hourly to the daily. Okay, so watch maybe the wick fill, then the potential retracement back down again. Is it time to start taking sells? Let's just watch here. I want to see this. Here's 8:45, guys. Here's going to be the time. Okay, US 30 now, and NASDAQ are starting to fly here. Okay, so daily is getting rejected, guys. So I might take a little short here. I'm not doing it just yet, just waiting. Ooh. Okay, I might take a little bit of a short here, guys, down to the 4-hour. I'm watching and seeing this candle to see how it closes. Okay, so just under 3 minutes, and I'll look. Okay. If we hold here, guys, gold is going to push back to 1829, 1830 area. One of the two. Guys, that was a $16 move. Okay, I told you, psychological 1800 coming in. Always been a key support level, key demand. Okay. Okay, I'm just going to leave this alone for now. Okay, I'm not liking how it's just indecision. This is a spinning top candle right now. Okay, this is a spinning top candle. All right, if it continues, fantastic. It is what it is. But if it reverses, guys, the support level will be the 4-hour previous resistance. Okay, I don't buy at the highs. I don't sell. I'm gonna leave gold alone personally. If you guys want to do anything on it, please go ahead. Okay, more than welcome to. I was in those buys, so I'm like I said, I got out at 1809. Okay, and I made was 500. 1804, 1808, standard lot. All right, so just be careful if you guys are shorting this. All right, that's all I got to say to you. But the real question is, guys, is how does GU look? Nah, still selling off here. GU is going to come and test that trend that we set up, guys. Okay. This looks like another top coming in. Okay, there's gold. I told you guys be careful shorting it. It's starting to hold. It's getting right at that daily. If I were you guys, if you guys made any of those gold trades, okay, I would just wait until maybe 9:30. It's up to you though. You know, I can't control what you guys do, but it would be just advisable. You know, the news just got launched, so the next big thing, you know, we can see here. We'll go check out news. Is we have our 9:30, and then we have 9:45 Chicago PMI, which is not a very big folder. Okay, but then again, there's nothing much more coming in. We have some JPY news tonight. All right, tomorrow, guys. Not too sure if we're gonna stream. I'll let you guys know. July 1st, it's a bank holiday for me. I might start a little bit later, maybe 8:30, and we might trade through till about 10:30 here. Okay, we're gonna wait and see. I'll let you guys know and I'll update you. All right. Okay, so we're just in some consolidation here. Very similar to we were in previous structure. Guys, do you guys see this though? Okay, do you guys see on US 30 here? Okay, this is a good, this is pretty good to actually talk about. You see you have a downtrend here on the 5. Okay, you can see multiple taps here. Rejection, 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 pushing down. Okay, the RSI you can see is starting to float up. Okay, so it's a little bit of divergence. All right. So you can see when you get a bottom here, you have a couple wick touches coming in the 15-minute. That's just what I drew. Okay, you guys could draw that at anything you guys want. I don't know what you guys would do. Okay, so now you can see that as we start to follow this 5-minute uptrend here, we get into that consolidation mark. As soon as this is the key right here, guys. As soon as you see this downtrend forming, to get past that downtrend, you needed to have a lot of volume. All right. You got massive impulse candle. Do you guys understand that candle alone? You could have been done for the day. That is a 36 pip candle. All right. You can see then it held above the 9. Okay, started to retrace. A little bit of a spinning top candle here, bearish. All right, but still above the 9, retesting and holding on our trend line here. Okay, sorry, our support level, my bad. Then you can see that the next candle opened up, guys. That's a 40-50 pip candle right there. Okay, so that was a nice, beautiful break, but the only reason why this kind of came to play is because you can see the downtrend break right here. This gap candle pushed. Okay, so there's a lot of momentum force out of here, out of the trap, and then you can see the gap to the upside, which led to the continuation. Now you can see that US 30 on the 5-minute is starting to sell off. Okay, let's go take a peek at the 15. And guys, just please keep in mind here that I have over maybe 1,100 people. I know it says 840, 850 on YouTube. I also have about 300 in the private Zoom. Okay, guys, scalping, okay, may not lead to crazy long-term trades. Okay, it can, especially look Nasdaq and US 30 in the market open. Okay, but 10, 15, 20 pips. Okay, that gold candle, that gold move, guys, that doesn't happen often. Have I seen it? Yeah, I've seen it happen very often. Okay, but does it happen often? No. So if you guys are happy with 10, 15, 20 pips, okay, secure and then leave a runner. Okay, I know I say that all the time and you guys probably don't understand it. I guarantee a lot of people do, but that's going to help you. And when you're in that trade, you can move your runner stop loss to break even, so it becomes a risk-free trade. Okay, I know that's the perfect way of doing it in reality. It's hard to do, but don't always be holding these trades thinking they're going to go 40, 50, 60 pips, because the market will not really let that happen a lot of the time. Okay, that gold trade, that's coming off news, and remember we have OPEC meetings. Okay, so it's the end of the month. Okay, gold had nice divergence, and you can see there's a lot of momentum being pushed in. Okay, so I just wanted to talk about some of what happened there on US 30. Gold is the same thing, just a double bottom holding hourly support. All right, but it was a really good move, guys. We'll catch another one, guaranteed it, hopefully at market open. The indices really didn't have too much of a crazy push from what I seen. All right, the bigger move happened on gold, as you can see and you witnessed. So we just got to watch now and see if we're going to get the next big move on gold will be. Okay, because they've closed bullish spinning top. It's still holding above that hourly now support. Okay, and you can see that. Look at this shit right here. It's overbought to a T. Is coming at around 75. All right. Interdimensional media, another world's trail your stop loss. Yeah, absolutely. That's a great way to put it. Could have summarized that up in 5 words rather than the 15-minute speech. Absolutely. Good job. Houston, Texas. Everything's better in Texas, man. Lisa, yep. Hun, I can. Give me 1 sec here. Needs. I'm taking a break right now. Made 20%. I'll be back at Wall Street Open. Buddy, I don't even want you back. I'm going to ban you from my stream right now. If you make 20%, go away, bro. Go away. Don't come back on here. Okay. Lisa, I just sent you the email. Just send us that and we'll look into that for you, okay? All right, guys. So it's a bit of a chop fest right now. Let's go take a peek at that GU trade. Okay, so remember I mentioned to you about a trend line. Okay. Okay, you can see here, this is the trend line that we set. Okay, but the 9 EMA is acting as a better, more, I guess you could say, drawn to price trend line. Okay, so we're gonna watch and see how GU is gonna move. All right, Kenya, I have to disagree with that one about Texas, guys. I'm from Canada. There's a lot of good states out there. I travel to Florida quite often, South Carolina. I love the Carolinas. I love everywhere. I like Vegas, California, Arizona, Scottsdale. I'm a huge fan. Here's a good question for you guys. Can you guys name uh, the two main cities in, I guess you could say, Canada? There's two in my mind. Maybe that will, maybe I don't know if you guys would get that, but there's two of them that come to play. I got one. Yeah. Yeah, there we go, guys. I got Toronto here. Yeah, you guys are working. Ontario's the province. Yeah. I got, there we go. Delip, you got the last one. I guess you could say there's probably three here that you guys will probably hear about. It's Montreal, Toronto, Vancouver. So there we go. Do I like India? Absolutely, guys. I love Indian food. It is delicious. I'm telling you right now, I get it at least one time a week. I'm a big fan of it. I can't cook it for anything, but there's a nice little joint in London where I'm from, and I get it at least once a week. It's absolutely delicious, guys. Absolutely. Okay, let's go check with the dirty guys. Okay, so there's gold still moving. Let's see the US 30. It's looking bullish so far. and then you can see it flipping, turning into an M pattern. Okay, so it's going to challenge that trend here. This thing is going to dump, guys. It's going to continue right back into our consolidation. I guess there's a Ian, guys. There's a news event happening right now. Mr. Biden is speaking in Madrid. Thank you, Ian, for that. Ian is my news guy. Okay, so you can see US 30 push right back down. Okay, GU is starting to slowly get that retest of the option to get in profit again, guys. You can see the wick is testing that 15-minute, so it didn't drop too much. Okay. I like lamb, guys. I like lamb curry. Guys in the Zoom group, Ian just gave you guys where to find where to find this speech if you guys want to watch it. Okay. Okay, so guys, if you that would have gave you the opportunity if you guys were still holding your GU buys, okay, to maybe get out at a little break even. You can see it push back down. Inner dimension media. How long did it take you to become a profitable? A while actually. A lot of trial and error, to be honest with you. And I just realized that risk management is the most important thing. I like lamb off the bone. Off the bone. Cooked with on the bone, though. You got to get that extra little fat in there. It helps with the tenderness. Okay, as gold is still pushing up. Okay, it's going to tap that wick here. So remember I told you, you shorts to be a little bit careful here. If GU breaks up again, guys, I would like to take a small impulse, small lot buy to see if we're going to fill that wick. Okay, but I want to wait and see. We got 9 a.m. now. Here's the new hour and the new 4-hour candle, guys. Okay. Okay, guys, I am taking a small impulse, small lot size trade on GU just to see if we can get past that resistance. Thank you, my brother. That's all I need to hear. This October will be my 1 year in FX. I'm almost past my phase 1. Proper risk management is key to all new traders. Listen to this, guys. For real, 1 year trading, and he's respecting risk management. That's the key. And for you guys doing the prop firms, okay. I don't know if you saw Ron. He passed phase 2. Okay. All right. I just started one. Okay. Yesterday I did on the 100,000. I did about 500. Okay. Couple trades. Ron went 25 for 25 scalping, 5K in 1 day. That's no joke. All right. So he trades like London session with us and just does some of the other things. He's my partner. Okay, you can check in that free FX group. So that's no joke, guys. Okay, GU is starting to run. There we go. Jason hit my 1% off to work. Get off the stream. I'm running 6 pips, guys. How is spread on MFF for NASDAQ? It's fluctuating between 8 and 9 right now. No worries, guys. Respect to you guys always commenting. I don't always, get to everyone on YouTube, but like I said, doing multiple things, trying my best to get it all done. All right, gold's still running, guys. That's how GU is still running. That's why I look for even the GU buys. Okay. Daniel Olmedo, welcome to my. Hey, there he is, Miami. Shamir, it's around 25 to 50 lot. Same as Ron. Okay, a little bit of rejection coming in, guys. Okay. You can see it got rejected right at that wick right there. Okay, gold is still trying to push down. A little bit of rejection coming in. There we go. You can see it's the double top on gold. So this is what I was waiting for, coming in at 903. This is going to be the next big move on gold, I do believe. Okay. Okay, so let's watch. And the reason I'm saying this is this right here. So be careful on GU, guys. I'm right at 1 pip in profit on GU. Okay. It's fluctuating between 1 and 2 right now. All right, so we got to watch. Gold follows GU. GU kind of mimics gold. Okay, so just be aware that there's a little bit of short here. So if you guys are not comfortable with trading GU right now, you guys can close it because they might get a short-term retracement with Gustav with a 5K. It depends on what you're trading. If you're doing like a pair, maybe like a 1.0, okay, standard. If you're doing an indice, you got to go lower because that 5K can go fast, right? Okay, so I'm watching this right now. So if we short below here, guys, it's going to come back down to the 4 hour, which will be the tapping of the 9 EMA. All right, I'm still just watching. Want to see US 30. Okay, so this was US 30 reminds me of gold yesterday, guys. Gustav, yes. I would agree on your size of account if your account is the same size that you just mentioned. I would suggest that is good. Okay, so you can see we're floating in and out of supply and demand right here. Okay, you guys want, this is what you guys want to hear. I hear it all the time. There's other streamers, that's all they use: order block, supply and demand. Right, this is demand zone and supply zone. Okay, a lot of traders just trade out of this on the lower time frame. Okay, you can see demand here pushing, supply zone pulling. Demand zone pushing, we're probably gonna get supply zone and push. Okay, this is what you guys want. All right, so the buyers are sitting here with their pending orders. Okay, let me just push that one back here. You guys are gonna see what's going on with this. Okay, you can see that that trend line is still holding true. Okay, so accumulation of buyers here having their pending orders 30,650. Okay, and then you can see the distribution with the sellers even to the left if you drag it across, guys. Okay, all right, you can see 30,740. That's a rough area. You can see the wicks are a little bit higher. Okay, so you could even drag this up a little bit more if you wanted to have it right in here and use the wicks. Okay, it's totally up to you, but you can see here now that this is what you guys want to learn. Where are the pending orders holding? Okay, you can use a heat map if you want. They're not as accurate as you'd like to think, but again, if you guys can spot multiple touches in an area, okay, this is what you want to make sure that you're what you're doing. Yannick, hello from France. I don't understand damage. That's not good. Try to get a translator, my man. I wish I could put on some subtitles here. I don't speak Francais. Okay. So 907, guys. Good morning, Mr. Ace Trades. Okay, you can see gold. Kids coach cricket. Do we have a daily trading plan? Yep. Yep. We had a conversation with our group last week. Some people, they didn't like gold, which I completely understand. It can be very volatile at times if you're not fast enough. So sometimes we take a poll, but majority they like to trade the like GU, Nasdaq, US 30, and then you have the gold, right? So ça va très bien. Okay, let's take a peek. Let's go. Guys, I'm running about 4 pips on GU right now. Okay, it's still holding in. Guys, if you want to join, you're going to get the tail end of the boot camp here. Okay, let me just do that. I'll get off this in 2 seconds, guys. I got a private message on Instagram right now and a couple people on the stream. If you guys want to join, okay, you guys will see you'll get part of the boot camp. We are going to probably replace some of it this weekend for you. Okay, you can see here we've missed day 1, day 2, day 3, but that's okay. We'll play it one more time so you guys can see it. And then day 4, we're on technical indicators and strategies, which new indicators are coming in today. The ROC, okay, MFI. Maybe you guys have not heard of this kind of stuff. All right, and then 3, 6, 12 month. Use code bootcamp if you guys want to join. Okay, like I said yesterday, I got rid of some people who a little bit past due, so we open up some more spots for the bootcamp if you guys want to join. It's up to you. You don't have to, but that's where you guys would join if you want to join at all. Totally up to you. If not, you can stick with us on YouTube and go from there. Okay. Okay, so guys, if we break this daily coming back here, we're coming into that 910 candle. Price can get back down to at least the 9 EMA. All right, but the risk to reward of this trade is not the best for me. Okay. There's no real engulfing candlestick that I'm seeing here. All right, I do think that it can probably get down to 1818, maybe 1816, 1815 area before having another little push. GU's running, guys. Okay, back running about 7 to 8 pips. That wick got it up to 9, but 7 to 8 is pretty good, right? So if you guys are happy with this, don't get greedy. I'm good. I just secured this leading into market open here, okay? So US 30 is back down to 30,700. Okay, it's pushing right back in. Remember we talked about supply and demand here. Okay, guys, with it being 9/11, I'm just going to get a coffee refill here. Okay, hopefully you guys want to stay on. I'm going to do a top down on NASDAQ. Let's just see what we got going on here. Okay, I will leave it on gold. That way you guys can kind of see here. We've got about 276 likes, guys. If you want to pump it up to 300 for me, do it for that gold trade if you guys got it. It just helps with the stream. Okay, 300 is definitely the likes that we like to get to. Got around 400 or 500 yesterday. It's up to you whether you guys want to do it or not. All right, but I'm going to leave gold and then I'm going to take a quick little 2-second break and grab a coffee. Okay, so just leave it on gold and you can watch this. Okay, guys, so back at it here. One sec here. Can you guys hear me okay? Everything good? All right. Let's see what's going on with gold here. Okay, you can see it's slowly starting to get testing that daily here a little stronger. All right. Guys, GU is about to just tap again. Okay, it's tapping that wick. Let's go take a peek. Beautiful, guys. I closed, but this thing is still running here. All right. That thing is running about 18 pips. Let's see if we can get a 20 pip move here. Right here will be 20 pips if you guys held from the bottom and got in. Looking pretty juicy. Okay, just below here. Shout out to my man Trader Joe. Every single day closing it on blue. Congrats, brother. Okay, so we got gold sell here. Okay, it's broke. It's back at 1818. Okay, you can see it's starting to sell, get down to that 9. If we break here, guys, price of gold, okay, coming to that 4 hour. Once resistance will be now support, okay? And if we don't catch it, you can see the imbalance could fill right back down to that hourly. Okay, nice imbalance here. Okay, getting right near the 200. All right. So we'll keep that on there for now. It's 916, guys. I'm going to do NASDAQ here. We got the love. So, guys, just monitor gold. I didn't take anything on gold. If you guys did, huge shout out to you. Straight up. Good catch. Okay. Let's take a peek now. I'm going to erase all these moving average we got going on here. And we're going to go to the daily. Rag, trust your analysis, man. Okay. So this is NASDAQ, guys. Okay, you can see here. Nice little demand area coming in. Okay, multiple touches, wick, indecision, wick, rejection. So this is a nice area. I do see another one. Gold just sort of back to 815, guys. So if you guys are still holding, congrats. Beautiful. I told you guys yesterday, Thursdays are the best days to trade. Do you guys see why now? How many people caught those gold sells, guys? I didn't have anything there. So if you guys did, that's all on your own analysis. So you guys should be like mad friggin' happy about that. You guys caught a beautiful overbought retracement sell here. So huge shout out to you guys. That's a lot of respect. Good job. Okay, so we got daily resistance now. Okay, so let's get down to, I might just move that tad up there to the wick and use that next one as my 4 hour here. Okay, let's go take a peek at the 4 hour. beautiful support zone coming in. Guys, here's a little tip on gold, okay? Always watch the 4-hour. Always watch the 4-hour, look for 4-hour support and resistance, and same with daily. And then base your entries on pullbacks, okay? Because they're gonna try to go to 4-hour time frames. From what I've seen, that's just my personal view. Anything could happen, obviously, but higher time frames on gold is beautiful, okay? Okay, so let's go take a peek at the hourly. All right, look at what we have on, this is approaching NASDAQ here on the hour, okay? What do you guys think? We got to get through all this structure right here, okay? All of that structure, we need to push past it on NASDAQ for the potential push to the upside, guys. What are we thinking here? Do you think we can have enough momentum to push? I'm going to do NASDAQ on the 5, okay? So this is going to be what we're doing, all right? So let's see if we can get an hourly support below here, 4-hour. Will NASDAQ have that wick fillability and continue downwards, or are we going to get a nice little pump here? Okay, let's go to the 15 now. Okay, beautiful resistance here coming. Okay, it's 920 here, and then I see some support forming right on underneath. Okay, and let's go to the 5 now. Okay, see a couple things happening right here. All right, this is NASDAQ on the 5. All right, we break that 50-minute resistance, obviously going to push, but you can see the wick closes, guys. The wick closes, rejection, rejection, rejection. These rejection wicks keep getting closer to, sorry, not closer, lower. Okay, this price is starting to rise. I see this neckline opportunity right here. So if we, because remember, we're talking about supplies and demands, okay? If we come to this supply zone and get rejected, this is going to be a neckline fill for price to get pushed down to the bottom, okay? If we break above here, guys, because we do have this nice little trend starting to form, okay, pretty straightforward. We're going to ramp up and go bullish, okay? Let's take a peek at the 15. This is what we're working with right here, guys, okay? All right, nice support level. Price is making higher highs so far, just getting a little bit of push down near this general area right at that 11,540. Okay, so we'll just monitor this accordingly and watch. I'm gonna go check out, everyone's saying gold is dumping, and same with GU pumping. So let's go see. No correlation coming in. Okay, there's GU, guys. Look at that big move. Guys, that's also a trade idea that we sent to the Discord. That thing's running about 40 pips almost. 30 pips. Okay, roughly 32. Okay, let's go see the gold sell-off here. We're back at 1817, guys. So right hovering around that 200 EMA. Okay, I do believe that is the 200. What do you guys think? Is that it or what? Yeah, there it is. One, if you don't like it, dude, no one says you have to use it. They've treated our members pretty good, so that's why we recommend them. But again, there's plenty of other good opportunities for you to check out another broker. Okay. All right. So you guys, 5 more minutes. We're just gonna check out. I wanted to see what's going on with these other ones. Let's see the dirty 30 here going on. Another key level of resistance on the 30. Okay, you can see we're coming to what is that supply area again? Okay, so remember we talked about floating in and out of supply and demand. All right, this on the 5 minute. If you see the 1 minute, it's even better. Okay. GU is just a rocket, guys. Right back to, wow, that's a big move on GU, guys. Let's go check out this one more time. That's a beast. Oy, oy, oy. Look at GU. Big move right above that 200 EMA, and it's still going. Beautiful. Okay, so we're done here on GU, guys, for now. I'm going to just move all this over. You guys can see that was the entry here and running. Look to secure some of this, guys. Hey man, want to ask what's an aggressive entry and what's a conservative entry? That's a good question. Aggressive entry would be just, seeing an impulse candle open or seeing a candle open up and buying and not looking at structure. Okay. Conservative entry would be maybe like a break and retest. So if you notice the moving average right here, you broke, okay? Retested, you see that bottom wick, that means it confirmed that they're holding this structure and they're pushing back up. An impulse trade, impulse buy would be something like this, okay, right at the 200. Again, if you still held it though, you're going to go into drawdown. Not every trade just goes into blue. And then you can see the more conservative break, entry, retest, and then you have your continuation. Okay, so if you guys are in on this, guys, you can roll. This is a golden cross. Okay. KK. Do not use a regulated broker. You will regret it. Oh, man. Crazy. Can Carlos gonna do fib retracements? Yeah, we can do that after. Can't give everybody all the juicy stuff. As you can see, I don't really use them. And we're coming to a rejection area. Tammy, you're not the only one I've heard say that. Why does it matter what country you live in? Different brokers and stuff like that have different regulations. It's just based on the country's policies. You know what I mean? So that's really about it. Some of them like certain countries, some of them don't. I don't know why it would be. You just got to do your due diligence and check it out on the broker, right? Doctor of Computer Science. SST. SST is coming soon, so don't worry. Brad, I can't spoil everything. Two twice TV. Naz will dump at market open. He told me to pin this. I like it. You don't think it's going to have a 200 EMA break? You don't think it's going to have a golden cross? Ooh, guys. Ali, I have a couple of people who could do that. Okay, guys, so we're approaching that supply area again. Let's watch and see. We're coming to 828, guys. Sorry, 928. Okay, GU is getting a little bit of a pullback too. Guys, I don't know. I'm down for whatever. I don't care. This could be buy or sell. It don't matter if I'm wrong 100%. Don't matter if I'm right. As long as we get in the right trade. I think that's what everyone wants. It don't matter if it goes up or down. As long as we can get in the right trade. I think we're all feeling that here, guys. Who cares? All right, guys. I'm getting in, watching on NASDAQ right now. It's 929. Got about 37 seconds in here. Here we go. Okay, it's right around that 200, guys. I'm not doing anything until I see what's going on with this. All right. Okay, big move coming in. If we break here, guys, we can get to that hourly, no problem. Just watch and see if the rejection is going to hold true. We do have a nice little trend. Okay, let it do its thing here. 15-minute, a lot of resistance, guys. It made a higher high with the wick from this previous downtrend here, so we'll watch. Okay, let's watch and see, guys. What's going on with US 30 here? US 30 dump. Okay, NASDAQ fake pump, and now we're coming to our overall dump area right here. I'm in a short, guys. Running 250, 60 pips on the funded account. There's 300, I'm done. Good to go. 278. Okay, so let's watch and see here. If this thing dumps even further, it's going to come nice rejection. Okay, at the 4 hour. So indecision right now. right, this is heavy indecision right now, guys. All right, I just hit my target for the day on the funded. Target is 250, hit 278. All right, so let it do its thing here. Okay, indecision, guys. Wait for the first little bit of candles here. Don't be buying or selling anything. Okay, I was in already on the sell beforehand. Let's see if the 1 minute's going to flip bullish, guys. Heavy, heavy spin top candle here. GU is just a rocket, guys. Okay, let's see on the 15 how this is looking. When you see candles like this, okay, this is what you just wait on, all right? It has a lot of opportunity to sell off here, get back down to the 4 hour, okay, which is this TP. All right, the resistance is very strong. You can see the rejection coming in here. It's a lot of supply, okay, but even if you don't feel comfortable right now, just sit on your hands and knees and watch the first candle coming in. Okay, now you have the new candle, all right, flipping a bit. Let's watch and see how this is going to move. Okay, so now we're watching. I want to see if this 15-minute support level is going to break. It's right at the 9 EMA. Inga, share with us, same with James, why that happens. For real, I think it's a good thing for you to type that in the group because I don't think you're the only other person that feels like that. You know what I mean? Here we go, guys. Okay, coming into that key level here. Right, I'm in another sell. There we go. Chasing. Okay. Always stay away, guys. If you find you're having trouble with the first candle at market open, just stay away from it. Okay. Remember I mentioned that before. There we go. Okay, still dropping. Beautiful sell coming in here, guys. Where's my man? Where's the Ram? Mr. Dodge Ram. I love it. I'm going to give him a free membership. He called on the NAS sells. We go based on him. Okay, so look to TP, guys, down here. If this thing breaks further, like I said, we have a little bit of structure down here, but this thing can really start to get down to the daily if it starts to break. Members, you know where the sell was. It was a Discord trade. Okay, so this is going right here. NASDAQ will depend on your broker. It'll be US Tech, US 100, or anything like that. Okay. There you go. Guys, I got Twister and two twice. These guys are hustling us here. Thanks for the shout out, guys. I agree. You can saw the M pattern break was beautiful here. Double top, nice continuation. All right. And anyone take NASDAQ sells? It's running 45 pips. took US 30 instead. That's okay, guys. No worries. Okay, if we get a break here, guys, we're coming down to the daily. Here we go. Break this. This structure gets broken, guys. We're coming back down to the daily. Let's see what we got going on here. This thing is dumping, guys. Let's see if we can get it. Double top on gold, double top on NAS. Diego, I went from 1.7 to 6.4K. Wow. That's a beast move, man. That's a big move. TP would now be the daily time frame here. And guys, why is this? Overall indices have been bearish. Okay. Inga, your last sentence is the best sentence in that whole paragraph you just texted. Okay, so hold it, guys. You're getting some support level here. Okay, so let's see, guys. We got about 4 minutes here. Here's that 940 candle. We're going to go to about 945, guys. We got to get ready for the boot camp today. The strategies one is going to be pretty good. So whatever you invest, consider it a loss since no broker will let you cash out. That's not true. That's not true. And we're dumping on NASDAQ, guys. Here we go. Beautiful continuation here. Inga, I mentioned to you your last sentence in that paragraph that you typed. Read it again for yourself. Okay? Read it again to yourself. That'll be the best thing that you can ever do. I'm happy you actually do that. Trust me, that will really protect a lot of your introduction paragraph that you sent us, right? It's talking about stop loss, moving it to break even. So when you're in a trade and you go up about 10-20 pips, move it to break even if you feel comfortable, or move your stop loss to close 5 pips, so give it a little room to breathe, right? It'll really help you. Okay, dropping around 60-70 pips, guys. If you guys took it, like I said, if you're just watching, no issues like that. Okay, guys. Guys, if you guys took NASDAQ sells with me on this, please put it in the chat. Just like the stream if you can. Smash it. Give us some comments. Let us know how you did. Show us some love here. It's 9:45, guys. I am going to call it quits now. We don't need to do much more. The more we do, the more opportunity we have to really make a mistake and blow everything we did. Okay. I hit my daily target on the funded in one trade. Okay. The NASDAQ sell. All right. That's it. One trade. Okay. The 100K is 250 a day divided by 20 days will give you 5K profit. All right. So let's watch. Got a couple minutes here. I appreciate the love, guys. Honestly, I do. If you guys are new to the stream, please stick around for a bit. If you don't, you could be missing out on some cool stuff that we do. Maybe one day I'll show up in a Chewbacca costume and we'll trade like Star Wars. Who knows? You know what I mean? All fun and games here, but it's all seriousness as well. So we have a lot of good traders here, guys. You understand? Even in the YouTube, like my man, like really, honestly, I took a lot of this sell because we made a bet with the guy on YouTube. and we just said let's go with it, and it turned out. So guys, there's some really good people on here. We got a lot of people doing it, a lot of people, on this stream who, want to have fun with us and, join in for a real reason. So I appreciate you guys more than you know. You guys are really helping me learn a lot with trading. Doing these lives every day has upped my game, and I hope that helps you. And I appreciate all the love that you guys constantly drop in here. Okay, so guys, with that being said, we don't need to do much more. You guys understand that that thing dropped around 50 pips. Even 20 pips is more than enough. Okay, so Ben, I'm doing MFF, just trying it out. Okay, and we'll go from there. Tomorrow, guys, we might only do a little bit of an hour stream here. It's Canada Day. Surprisingly, we have a nice little holiday tomorrow, so I might be going up to a little bit of a cottage here and having a few beverages, if you guys know what I mean, and probably smoking that good green. So Jonathan Wick, which lot sizes? I did a 10.0, and I got 25 pips on NAS. Okay, you can see NASDAQ is still jumping off. It's about almost 80 pips. Okay, so cool, guys. I appreciate it. One thing here, look to secure some of this stuff. You can see it's probably going to retrace back to maybe that drop of the entry right there. Okay, guys, if you want to join up, like I said, we are going to probably be replaying the boot camp this weekend. Okay, so you guys can get in if you want. If you don't, like I said, it's up to you. I did this on the stream once already, and you guys can see it'll pop up here in 2 seconds. Okay, here we go. So psychology trading, guys, we did day 1, types of traders, day 2, smart money concepts, day 3, then today is day 4, and tomorrow we got live. Okay, so bootcamp is the code if you want to join up. We will be playing it this weekend, guys, and in about 2 weeks, I don't want to spoil the surprise here, but we're going to be doing a contest with our broker at IQOPTION. Okay, I don't want to get into it too much. We'll be releasing the details, but you could win up to $1,000 funded account, real money. We might be giving away 2 accounts based on that. So guys, make sure to stick around. Follow us on Instagram. Follow us on TikTok. You know what I mean? We'll be announcing this everywhere. To join the boot camp, guys, you can enroll here. Okay, I just want to show you all of the Instagram stuff that we do. This is our IG. Okay, this will be the contest and what gets posted. The 1 month is not closed forever, guys. No, we're just stopping it right now because of the boot camp. Okay, so guys, this is us right here. We don't have 20, 30K. We don't post Bitcoin stuff wanting to talk to you guys. We literally have 59 posts and just under 6,000 subscribers here. Okay, this is the most recent post. This was yesterday's case reel. So guys, head over to our IG, like and follow us. Okay, we will be posting the contest, rules and regulations on here, and same with our YouTube channel. All right, so check it out, guys. If you guys have any other questions, please send us an email, get in touch here, and we'll go from there. All right, you can see that Nasty is starting to reverse a bit. Okay, it tapped overall daily supply right up here. Sorry, not daily supply, but 15-minute, and now you can see the demand in terms of daily has been tapped, and you can see it's starting to push. Okay, all right, guys, well, that's a good stream here. Hope everyone enjoyed it. I'll let you guys know if we do something tomorrow. All right, but again, it's a holiday for me, so it might only go for an hour. All right, okay, guys, have a blessed day, and see you soon. Bye-bye.
Every trader's focus is to get low spreads and finding a perfect strategy. They also focus on proper entries and exits. However, before any decision is made, look for a reliable broker. We all want to have good spreads and commissions that allow us to get into the blue faster. At IQOPTION, having spreads as low as 0.0 pips with leverage available up to 500 times is just one click away. You may also choose from 3 different account types, with a minimum deposit as low as $10. Built by traders for traders. Trade in control with our recommended broker, IQOPTION.
volatility is part of the global deal at the moment.
We're about 2/3 of the way there in terms of your average bear market.
We see the weaker links, the most vulnerable, have gone down the most.
The market's really worried about recession fears. 50% chance priced in across the U.S. and other countries.
What seems to be priced in right now is a mild recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thrilled you're with us on radio, on television. Claims at 8:30. We'll do that, but much, much more to talk about. And Lisa, we've simply got to look at the bid on the markets 2 days in a row. Is this possibly a lift off the bottom?
The odd thing is, we heard from Jay Powell yesterday. He had a pretty gloomy tone, saying, yes, they can possibly avoid a recession, but that it is a distinct possibility. And here we see not only are stocks having a bit of a bid into them, but so are bonds. You're seeing bond yields down for yet another day, a sharp rally even on the front end. What does this mean in terms of expectations for the Fed and how far they'll have to go?
Off commodities is mentioned by oil, Lisa. Amrita Sen to join us later. Thrilled about that with her great work on supply and demand dynamics of oil. I've got Brent crude at a 110 level. We almost got to 99 on West Texas Intermediate.
Is oil finally responding to the recession fears?
Demand destruction.
Demand destruction, exactly. Yeah. Is this what we're seeing in markets? And if so, how far can it go given some of the tightness in the market that we've seen? RBC came out with a note yesterday that I thought was fascinating, which you've got this commodity analyst asking traders, so is this it? Is this the oil market finally falling to recession fears? And the trader said, no, they've been pricing it on all that time, and that's the reason why you're not seeing $150 a barrel and simply a range of 100 to 120.
Focused on the Westminster Dog Show, the Bloodhound winning as well. Kaylee Lyons joins us this morning in for John Farrow on a well-deserved. I teared up at the Westminster Dog Show last night. Kaylee, I look at the trophy winners out there, and the winners right now have to be the bull crowd. There's this thundering silence of the gloom crew, isn't there?
I don't know if there's thundering silence because there's still plenty of people out there. I mean, we've heard from Mike Wilson, for example, talking about the 3,000 level on the S&P 500, and the R word, as people are now referring to recession, is still very abundant in conversation, Tom. So there's definitely a certain amount of gloom out there, even if you aren't necessarily seeing that reflected in risk assets this morning. I would argue you're definitely seeing it, though, in haven assets. Lisa was referring to how yields are coming in on treasury yields. Take a look at what's happening in Europe. The 10-year German Bund yield is down something like 20 basis points after those really quite awful PMIs, the worst in 16 months.
One more thought here. I'm going to do the data check in a moment. 3.01% on the 2-year yield, under 3% is a modest big deal. Lisa, scheduled an important conversation for Bloomberg in this hour with the president of Lithuania. This is a critical conversation for the Baltic states.
Especially given the threat of Russia, especially given what's been going on with gas. We've seen Germany start to talk about possibly sanctioning or rationing gas in order to prepare for Russia curtailing some of those supplies. A really important conversation, as this does present some existential questions, certainly to Eastern Europe.
A data check right now. Let's do it with green on the screen. We were red 2 hours ago in the early morning. Futures up 11, Dow futures up fractionally as well. NASDAQ gives me 0.6% lift. The VIX critically under 30. Symbolic it is of a recovering market, 32 down to 29.17. Brent crude 110.54. West Texas 105. I mentioned the 2-year yield 3.01%. We're gonna have to watch that for the breach of a 3 down to a 299 handle. 10-year yield 3.12%. Yields just simply coming in on the recession worries. Let me close out with DXY. 104.55. Euro can't get out of its way. 104 now with a slight recovery in the last 20 minutes off the ugly PMI data. And Kit Jukes, among others, watching sterling 122.11. Juke suggesting 120 in the Boris Johnson future. We need to get briefed. It's a very brief because we're briefing on claims. Lisa.
Thank you so much, Tom. I guess I do want to just say one thing, though, about the bond rally. This idea that we're seeing even the front end rally, even as Jay Powell said he's going to hike into weakness. He is going to keep hiking to prevent inflation from getting unmoored in terms of expectations. And yet still people are expecting he won't have to go as far and fast as even he is saying. I find that really interesting. Today, we get U.S. initial jobless claims at 8:30 a.m. How much do we get a sense of the labor market starting to soften even more? And then we get at 9:45 S&P Global U.S. June manufacturing services composite, as well as a whole host of PMI data. This follows what we saw over in the Euro region. And Kaylee mentioned this. We saw PMIs over in Europe fall to the weakest in 16 months, going back to early 2021 in the face of some of these higher costs. And I think that it's important to watch whether you get the exact same kind of downside surprise in the United States. At 10 a.m., day 2 of Fed Chair Jay Powell on Capitol Hill, testifying this time to the House Financial Services panel. How does he respond to two-year yields coming down? Basically, the market is expecting less from him, even as he goes harsher and saying it is of utmost importance to get back to 2% inflation. And at 4:30 p.m., the Federal Reserve's board is going to be releasing stress tests for the banks. What are they going to look for in terms of stresses? We see year to date, the banks all down north of 20, south of 20%. And how much can they return capital to shareholders after these stress tests? That's usually what these pave the way for, Tom.
Very good, Lisa. Thanks so much. I do want to note the two-year yield in the United States through 3% to a 2.99 earlier this morning. Right now, aware of that is Deepak Puri, Chief Investment Officer for the Americas at Deutsche Bank Institutional Private Bank, joining us here on the State of Play. Deepak, I want to talk a little bit of calculus here, and that the media looks at inflation hot, and then they look at where inflation will be less hot. And yet you and I know it's a marginal story. Do we have a behavior now where we're beginning to discover that over the coming week or month or quarter, we will marginally have lower inflation, which will be optimistic for the bulls?
Good morning, Tom. Yes, I do believe that this is where, one of the things, the more narratives in the market is really panning out to be. You look at the 5-year break-even rates, for example, they are the lowest today they have been since the early part of this year. I think tomorrow's UMISH consumer sentiment, the final reading would be sort of a little bit enlightening on that aspect as well. 8.3 versus 8.6, yes, it's marginal, but I think what really took market by surprise was the uptick. And our expectation is going forward, you are going to see some moderation in that number. We are already seeing some of this demand destruction that you guys were talking about. I think overall, you're looking at a little bit of moderation, but still way above anyone's comfort level, especially the Fed's. Hence, inflation remains to be a key story in the market, especially, high level of inflation, and if it starts to accelerate even more. So overall, I think the market oscillates between inflation concerns to now, over the last couple of trading sessions, recession concerns, but none of these two themes are going to go away anytime soon.
Deepak, do you understand why the two-year yield is rallying? It's a really basic question, but it is boggling my mind right now.
Well, Lisa, I think the key narrative here is that maybe we're going to have a quick and mild recession, and by the in the next year or so, the markets are already going to be focused on the next level of Fed policy action, which might be actually a bit more market-friendly and cutting rates. So we get to the what I would call the terminal rate fairly quickly, and then you hedge back into the neutral rate. So the restrictive Fed policy may not be, we might get there quicker, but it not be something that's quite sustainable for this market. Hence, we head back to the neutral number, which then creates this kind of a narrative. It's still too early to say by any measure of certainty that that's what's going to happen. Yeah. But at least the bond market is pricing in a much more, quicker and milder recession at this point. At least that's what I think.
Is it still too early to say that we've seen the peak in yields?
I think it's too early, Kaylee. I think you could still argue, we are not really out of the inflation story. I think the recession concerns have taken a little bit over the narrative for the time being, but the inflation can create, raise its ugly head anytime. I would not be quick to judge that we're out of the woods when it comes to inflation, and hence the market, especially the bond markets, really going up in yields. It might take a while. I think the recession fears, to my mind, creates another set of opportunities and risk. And something that I've been seeing from the clients is a bit more risk appetite. It's coming from very low levels indeed. There's nervousness, but there is no panic in the markets, at least the investors that I'm talking to. They're starting to get back into the markets, and that's a relatively a good sign. Another trend is really a home bias trend that we are seeing, where investors seems to be much more comfortable, taking risk in U.S.-based equity and bond markets.
Deepak, we have to leave it there. Deepak Puri, thank you so much, with Deutsche Bank International this morning. Lisa, as Deepak mentions here, the international domestic divide, whatever your domestic is tangible. I went through 3 Pacific Rim currencies today: Thailand, Philippines, and something else I can't remember. And I'll be honest, they're just breaking out. They're leading a life of their own versus strong dollar, weak Thai baht.
I'm not laughing about the fact that they're weakening. I'm laughing at the fact that it was really notable that one other currency that whatever is also breaking out.
I mean,
it's the surveillance CFA level on this Thursday. Things are moving, and it is interesting at a time when you see, after years of trying to weaken currencies, it is now a bad thing. There was actually a Business Week story that caught my attention because it follows on to the conversation that we have been having, Tom, every day on surveillance for the past couple of months. Suddenly, the currency wars narrative has gotten flipped on its head. It is a race to a stronger currency so you don't import more inflation, and that has to be the story of 2022, Tom.
The story of this hour is we are prepared for a conversation with the president of Lithuania. We'll see if we get there. And Kaylee, the headlines come out from the press office of Mr. Putin. This is Mr. Peskov speaking here. Peace possible, but Ukraine must, quote, accept all demands.
Yeah, this is according to the IFX news agency. But of course, Tom, Ukraine has already indicated that there are certain demands of Russia's that they are not willing to accept. They don't want to cede any territory. Of course, it's interesting that these comments from the Kremlin come in light of the EU leaders meeting that is happening right now in Brussels, where they're going to talk about Ukraine joining potentially the EU as a member.
And by all reports, a brutal war in eastern Ukraine. Please stay with us through the morning on economics, finance, investment. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. It was Fed Chair Jerome Powell's most explicit acknowledgement yet that raising interest rates could lead to a recession. Powell told lawmakers that a recession is possible and a soft landing is very challenging. But he said the other risk is that high inflation gets entrenched in the U.S. economy. Powell is back on Capitol Hill today. The price of oil resumed falling today. West Texas Intermediate dropped below $105 a barrel after closing at a 6-week low on Wednesday. The U.S. benchmark has lost more than 15% since the close on June the 8th as fears of a recession increase. And in China, President Xi Jinping reaffirmed a growth target that analysts say is out of reach. It was the first reference to the target since a Politburo meeting in April. China is expected to miss its GDP goal of around 5.5%. The government's zero-tolerance approach to fighting COVID and a weak housing market are the problems. In the UK, a nationwide rail strike resumed today. The Transport Workers Union says talks broke down Wednesday. The union wants higher pay and a guarantee of no compulsory job cuts. Tuesday's walkout led to a roughly 80% cutback in rail service. The chief of the school district police in Uvalde, Texas, has been put on leave in the wake of the mass shooting there. The state's top police official criticized Chief Pete Arredondo for delaying the confrontation with the gunman at the elementary school. State and federal officials are investigating the police response. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Do you agree with the perspective that if interest rates go too high, too fast, that it could drive us into a recession?
It's certainly a possibility. It's not our intended outcome at all, but it's certainly a possibility. And frankly, the events of the last few months around the world have have made it more difficult for us to achieve what we want, which is 2% inflation and still a strong labor market.
America, Jerome Powell answering a question there from the gentleman from Montana. Senator Tester knows what it's like to fill up the tank and drive next door like 200 miles, which is what they do in much of his state of Montana. There'll be further testimony, I believe, today. Right now, Lisa Abramowitz, Kaylee Lines in for John Farrow and myself here with markets green on the screen and nudging up. We've got to get to Jack Fitzpatrick on the festivities of Washington, but first, and I really want to frame this, Maria Tadeo with us with a bit of a history lesson on the importance of her discussion with the president of Lithuania in the next hour. And what this comes down to, Maria, is if you take A7 West out of Vilnius, you run into a thing called Kaliningrad, which is Konigsberg, which is a beer from my youth, and the Russians own a hunk of land, which is a port that doesn't freeze over in the winter. That's the bottom line, is it's a port that in the winter they can get their naval ships into.
Absolutely, Tom. And of course, this also gives Russia access to the Baltic Sea. And ultimately, that is what it comes down to. When you look on a map, and you really have to look at it on a map to really understand the importance of this place, Kaliningrad is very small, but is vital, and it is crucial for the Russians. It is squeezed between Poland, which as we know has a very tense relationship with Russia, a very complex history with the Russian Federation, and Lithuania. Now, the issue here, of course, is that the Russians are accusing the Lithuanian government of blocking access to Kaliningrad, and they say don't stop doing that. We could see retaliation from the Russians. For Lithuania, this is now a real concern in terms of potential escalation that may come.
Help our American listeners and viewers, including a dummy like me. What are the distinctions between Estonia, Latvia, and Lithuania? Are they one and the same, or are they like the Swedes and the Norwegians where they barely talk to each other?
Look, Tom, I don't want to generalize on different countries and their different cultures, but I would say if there's something that the three Baltics that you alluded to really share is their dislike for Vladimir Putin. And of course, I'm being very polite using that word, because if you speak to them behind the scenes, they will use other type of language that I can't use on TV. But the thing that the three of them really share is this concern, this dislike, and of course a very, very difficult history with Russia. Remember, they were part of the USSR.
Lisa, did Maria finesse that? That was just magical.
She finessed that, and she can even pronounce Javier's last name. This issue over in Europe, we're dealing with a potential cutting off of the gas supplies from Russia into Germany, which has led to calls for possibly restricting certain types of energy usage. Jack, over in the United States, we heard yesterday about the possible removal of a gas tax, which was panned by both sides of the aisle. Is there further discussion about trying to restrict demand, to take some sort of stab at this on the other side?
There's not a lot of discussion in terms of legislation or anything that would restrict demand. There was pushback to the proposal by the president to do a 90-day gas tax holiday. The alternative, as we've seen that pushback that was mentioned by Chuck Schumer and many other Democrats, is something along the lines of a price gouging measure. But when it comes to restricting demand, really the conversation is much more broadly about fiscal policy, reducing the deficit, that kind of thing. There's not a lot that they're talking about to specifically reduce demand for gas, to target gas prices.
Jack, one thing I noticed in the hearings with Chairman Powell yesterday was that Democrats were trying to point the finger, as they have, at President Putin, at corporate greed. Senator Cortez Masto, the Democrat from Nevada, was talking about Glencore raking in billions of profits on trading on commodities. Is that a message that is resonating or landing with the American people? Do they buy that?
It doesn't seem to be making a huge difference in the big picture, especially as we look toward the midterms. The president's polling is down. The Democrats feel a lot of pressure to try to do something about gas prices and inflation more broadly. But that is clearly the line that the Democrats have settled on, as opposed to a gas tax holiday, is at least trying to spin this as an issue of corporate greed. That's easier for them to campaign on on. It hasn't lent itself to a realistic proposal that would necessarily make a difference in the short term. But if they're trying to make a show that they're doing something, that there's activity there, the price gouging, corporate greed line, it seems to be the mainstream Democratic response as they feel the desperation to come up with something.
Jeff Fitzpatrick, thank you so much from Washington. And Maria Tadeo, who is scheduled to be with us within the hour with the president of Lithuania. Lisa, I look at the screen here, equities, bonds, currencies, commodities, and I think the trap is to say it's uninteresting this morning. I don't buy it. There's some real interior dynamics to what we see.
I find this morning fascinating because I don't understand the short end bond rally. I understand why people are going into longer dated bonds. But in the near term, you've got two potential scenarios. Either the data comes in weaker than expected, the Fed does not have to hike as much, and we avoid the hard landing, right? That is not necessarily the very deep recession types of scenario that some people are putting out there, or people are just thinking that they're not going to have to raise rates as much. I don't understand why we're breaching 3% on a 2-year yield if people are expecting the Fed to follow through on the hawkish expectations, Tom.
And Kaylee, first signs of demand destruction. There's a chart floating around. It may be from Bloomberg. I can't remember. But the basic idea here of we are seeing fewer gallons of gasoline being pumped because of the behavior of consumers.
Yeah, does that affect the summer driving season? Do people decide not to just take those road trips anymore because the price at the pump is so high?
Who takes a road trip? I mean,
I love road
New
trips.
York.
I added a puppy to the family, Tom. Can't take the trainer bus with a 75-pound beast.
Some people can drive, Tom. I'm just saying. Some people actually use their cars. I think it's a really good thing. And frankly, nobody that I know has actually stopped taking a road trip.
Well, there you go. Either way, Tom, the point of the story this morning is that the narrative for commodities, for oil in particular, has shifted from supply side, supply being constrained, now to real concerns about the demand picture and whether that destruction that you speak of is going to kick in a meaningful way.
We're going to do this on oil, folks, later. Amrita Sen will join us here. She is exquisite on the microeconomic supply and demand of hydrocarbons. And Lisa, that'll be a good update.
It's really important to understand why we're seeing weakness right now, and if it's just a pause or if it's something akin to what we hear from Ed Morse over at Citi.
If you are in Helsinki, you look across the pond at Estonia, down to Latvia, and then a very much larger Lithuania. In the Potsdam Conference of World War II, they gave a hunk of land to Russia called Kaliningrad. It is surrounded, and I mean surrounded, by Poland and Lithuania. Our Maria Tadeo with the president of Lithuania in this hour. Bloomberg Surveillance. Good morning, everyone. We're waiting on a conversation with our Maria Tadeo, the president of Lithuania. We're moving that in their busy schedule. Maybe in the next 45 minutes, we'll keep you abreast of that. That is a critical conversation given the hydrocarbon turbulence that we see in the European Union. Thank you, Have Blas, which I'm mispronouncing. Lisa made note of that earlier. On radio, it's simple. All you need to know is coal has surged up again off of all these tensions. And Lisa, again, this comes back to ESG out the window. Germany is burning coal.
Well, and they have these triggers now. And if they get below certain reserves of natural gas, they'll go to coal and they'll start using coal more because they want to definitely fuel their economy. And then if that comes down also to levels that are concerning, if reserves get below another certain level, then they start to have a state-controlled decision about where there will be cutbacks to energy usage, including in recreational types of affairs. This is fascinating at a time when every politician wants to avoid these types of wear a sweater proclamations.
Some of the turmoil there, and of course, we'll see that in America today with oil and a gallon of gas. I'm going to call it quiescent as well. Lindsay Piegza knows that. She's chief economist at Stifel, joining us this morning. Lindsay, the sensitivity of a gallon of gas, what does it do to your GDP calculation? Is it like tangential, or does it really play into the consumer part, the business part of GDP?
Oh, the easiest way to derail the American consumer is sustained heightened energy costs, which is exactly what we're seeing. So when consumers look at near $5 a gallon in terms of the price of gasoline, this is going to severely retard their ability to spend in other areas across the marketplace. And that's going to have a significant impact on growth, as we're a consumer-based economy. And 70% of that growth comes directly from the consumer's ability to spend on not just non-discretionary goods, but particularly discretionary areas of activity.
Right. Lindsay, Kaylee, Lisa, and I were having a post-show mimosa yesterday, and we were all confused. It's a group effort. We were confused over Chairman Powell saying it's a strong economy, and yet people like you are hysterical about recession. Can you partition it in that the domestic economy, C plus I plus G, is pretty good, and all the angst is about the import-export dynamic X minus M?
I don't think you can argue that it's an isolated component of growth that's slowing. Right now, yes, the Fed chairman was correct. The labor market appears to be solid, but we're already seeing signs of cracking even in the labor market as companies prepare for downturn, and we're seeing layoffs pick up. Now, that's not to say that the economy is going to fall off a cliff, but we are seeing weakness in the consumer. We're seeing a slowdown in manufacturing. The housing market is taking a hard hit. And so Chair Powell seems to be micro-focused on a few statistics in the labor market as justification for this relentless backup in the federal funds rate.
I can't say enough, Lisa, how this harkens back to the conversations of 1994. It's forgotten in the mists of time, but it's a two-part American economy, domestic and foreign. And I'm sorry, the foreign numbers now are all messed up.
Which is possibly the reason why you're hearing some concerns about dollar strength by companies, not because of necessarily the currency, but because of what it represents, which is weakness abroad and a lack of buying power in other non-U.S. nations. Lindsay, when we take a look at just what you're talking about, the economic data rolling over just a touch, how much does this indicate the Fed has an easier path? They won't have to raise rates as much. How much is that the signal, frankly, from the bond market right now that's got some support on all sides of the curve?
Unfortunately, the Fed is not focused on domestic strength or domestic weakness. So even if we see a further faltering in the data, if inflation remains elevated, regardless of what we're seeing in terms of GDP, the Fed has said they will continue to raise rates. In fact, if we look at the latest forecast from the Atlanta Fed's GDP Now model, they suspect that second quarter GDP is going to come in flat. So coupled with the negative print at the start of the year, we're talking about less than 0.1 of a percentage point away from current recessionary conditions, yet the Fed is still considering an additional 75 basis point increase just a few weeks from now. So right now, the Fed is solely focused on inflation, and if we continue to see elevated prices coming down, particularly from the supply side, the Fed is going to tighten not only into recession, but potentially into a deep and dark recession.
Okay, that's where I wanted to go. As we talk about the R word and this idea that Jay Powell put out there, that it might be something that is unavoidable, how much are we looking at a much deeper recession versus a shallower one, especially if it's happening sooner?
Well, again, it's going to depend on whether or not we see price growth slow with domestic growth. The Fed's going to continue to raise the cost of capital, which will tap down consumption, tap down investment, and result in that slower growth profile. But if supply side prices slow with demand, then the Fed is likely to back off sooner than later. And this is where we get a more shallow recessionary scenario, a more run-of-the-mill recession, if you will. However, if growth slows and prices remain elevated, the Fed will continue to tighten, forcing us further into a deep and prolonged recessionary period, potentially leading to a stagflation period, which is certainly more difficult than for the Fed to alleviate with traditional monetary policy metrics.
Okay, so Lindsay, is essentially what you're saying that even if demand does moderate, if it doesn't moderate to the extent that it offsets still constrained supply, then the Fed isn't actually going to be able to achieve its goal of bringing inflation back down to something in the ballpark of 2%.
Absolutely. And so this is the conundrum that the Fed is facing. Yes, we did see some demand side pressures as a result of trillions upon trillions of federal stimulus. And that component can be addressed by raising the federal funds rate, by increasing the cost of capital. But the Fed raising the cost of capital does nothing to address the supply side pressures that we're seeing as a result of the aftermath of COVID-19, or more recently because of international conflict. These are variables outside of the Fed's control, and the Fed chairman has acknowledged as much.
Yeah, he can't print ships, right? And he can't pump more oil. That is outside of the chairman's abilities, as he tried to indicate to lawmakers yesterday on the Hill. We'll see how he fares in day 2 of that today, Lindsay. We've asked this question a few times in a few different ways over recent weeks, but we talk about the goal of getting down to 2%. What is your understanding of how quickly the Fed intends to get there?
I think the Fed has somewhat abandoned the specific 2% range target in lieu of a meaningful decline, a downward trajectory. So the Fed doesn't need inflation to retreat down closer to 2 or 2.5%, but they need to see a steep downward trend well established before they're willing to back off. And we're not talking about 1/10 or 2/10 of a percentage point of improvement, as we've already seen, remember, in the PPI and the headline CPI, but they want to see a marked reduction in prices in order to feel that the trajectory has been well established nearer that 2% target.
Lindsay, my question of the week, we asked this of a gentleman from Deutsche Bank in the hour. Let me ask you as well. The media looks at angst-like inflation, and someday it'll be less inflation. And yet, inflation's at the margin, where if we see any tick down in core inflation, expectations in the markets change. Is that the scenario we're going to see?
It could be, but that certainly doesn't represent what we saw in the latest CPI report. Remember, the core CPI actually improved. We saw that second derivative decline in terms of the annual growth rate, and yet market expectations for inflation actually ticked higher because the headline rise was larger than expected.
How critical is tomorrow's UMISH number, 5 to 10s?
Oh, it's very important, because I think that backup in expectations and inflation expectations was one of the primary drivers that drove the Fed to take that more aggressive action in June, ramping up instead from 50 basis points to that 75 basis point increase. The Fed is aware, or was aware, that inflation had not yet peaked. So expectations within Fed policy members for a higher CPI number, I think, was well established. But the market was caught off guard, and with that backup in inflation expectations, that was enough to force the Fed's hand for a larger policy move in June.
So based on the Fed's expectations for raising rates 50 to 75 basis points on July 27th, what are the odds of a hard versus a softer recession? I don't know if you can even say that, but the idea of a deep one versus a shallow one.
Well, I think right now, when we look at where supply side prices are and the limited improvement that we've seen, restoring balance to the global marketplace, establishing full resolution to international conflict, this seems to be a very complicated process at the very least. And so I do think that the prolonged nature of these factors impacting costs leads us to a higher probability of a hard landing, of a deeper recessionary scenario. So when we're trying to handicap hard versus soft, I would say at this point 60-40.
Wow.
Thank you, Lindsay. Greatly appreciate it right now. I'm typing in. We're doing work here in the terminal. We all have terminals. Even Kaylee has a terminal that shows something besides crypto. And Lisa, it's real simple. When was the last time we talked about a draw up? We have a NASDAQ draw up right now. It's a draw up of 4.79% off the bottom. That's not a drawdown.
What are you talking about? What time period are you talking about?
Like a cup of coffee, cup of Tang, we're there.
We're looking right now at a 0.9% gain ahead of the market open, at least according to my terminal.
1 day, 2 day, 3 day, 4 day.
I'd like to remind you that it's still down 28.5% year to date, Tom.
It's a drop.
Yeah, you draw the line up ahead of the open. That seems to be where we are. This could change in a cup of coffee again, Tom. And how much is this really just people trying to find a bottom? If there is some sort of rolling over in the data in a recession, you get the haven bids, the cash flows, yields come down, then you get the tech names actually start to rally again.
And Kaylee, Lisa had to get therapy this week because she went to this grocery store and there's one less tomato in the can of tomatoes. Do you know in Tang there's like a half an ounce less now?
Is there?
Yeah, in the bottle.
You checked?
I checked.
Did you write a strongly worded letter?
to the producers of Tang.
He talked with my therapist. Had a lot to talk about.
Okay, we got a draw up in the market. Come on, I'm going to get a 28 on VIX, 29.08 on VIX. That's not bad at all.
No.
Futures up 21, Dow futures up 102. John from Europe emailed and said, why are you quoting the Dow? Because we're American, that's what we do. Dow up 108 points, NASDAQ up almost a percentage point. That's actually significant. 2.99 handle in the 2-year yield. Stay with us on Foreign Exchange. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Both Republicans and Democrats in Congress are signaling there is little support for President Biden's call to suspend the federal gasoline tax. It's seen as a symbolic move by a president running out of options to ease prices at the pump. The president blames much of the increase on Russia's invasion of Ukraine. Germany has triggered the second stage of its natural gas emergency plan as Russia cuts back supplies. That is European gas prices rising in the so-called alarm phase. Berlin will tighten monitoring of the gas market and reactivate some coal-fired plants. The German government warned this week that there could be further cutbacks in Russian gas. Rescue and relief teams are struggling to reach survivors of a deadly earthquake that hit the remote southeastern region of Afghanistan. At least 1,000 people were killed and hundreds more injured. The Taliban has urged international aid agencies to help. U.S. prosecutors say British socialite Ghislaine Maxwell should spend 30 to 55 years in prison for engaging in a sex trafficking scheme with the late Jeffrey Epstein. A federal judge will sentence Maxwell next week. Prosecutors called Maxwell a sophisticated predator. Bloomberg's learned that Tesla is taking steps to ramp up output at its factory in Shanghai. The electric vehicle maker will partly suspend manufacturing at various points through early August so it can upgrade production lines. The goal is to eventually double its original planned target to 1 million cars a year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I think we're now back into a period in which it does matter, where it's the fundamentals of earnings, the fundamentals of margins, the fundamentals of inflation and interest rates, and putting that all together in terms of appropriate valuation models that will make a big difference for investors going forward.
Thank you for the response to our conversation yesterday with Abby Joseph Cohen. She, yes, is a former advisor to Goldman Sachs and now at the Columbia Business School. But I got a heated response from Global Wall Street on her parsing of alpha and beta. That was a very important conversation, a real clinic. Go look for that on Bloomberg Digital. Kaylee Line's in for John Farrow. John Farrow.
Oh, that guy.
That guy. Lisa Bramwitz and Tom Keene here. We're waiting for an important conversation with the president of Lithuania, with our Maria Tadeo. But right now on the dollar and on foreign exchange, we turn to Thanos Vanvakidis. He's global head of G10 FX Strategy, Bank of America. Thrilled he could be with us this morning. Thanos, let's start with first principles. What's wrong with a strong dollar?
Well, there's nothing wrong about it. It is consistent with the fundamentals. It is overvalued compared to the long-term equilibrium, but the fact is that the Fed is the most hawkish central bank out there. They are dealing with an overheating economy, while other economies are dealing with supply shocks. Also, risk aversion is supporting the dollar. The terms of trade, as the U.S. is energy independent, supporting the dollar. So there are specific reasons why the dollar is strong. And given that the Fed is focused on fighting inflation, a strong dollar is the result.
Thanos, this came up twice yesterday. The Bank of Japan has a policy in place. They haven't blinked. And I hearken back to 1992 and George Soros in the Bank of England. Is there somebody out there in the market overtly trying to do a Soros redux? Or is that just fiction made for Hollywood?
Not necessarily. Actually, investors have missed the yen trade. The Bank of Japan is the only G10 central bank sticking with unconventional loose monetary policies. You can justify this because the core inflation is still well below 2%. And yen has been weakening also because of the deterioration of the terms of trade, because of the increase in energy prices this year. Now, investors missed the dollar-yen trade, and then they didn't want to buy it at 125. It went to 130. They didn't want to buy it at this level. 135. They don't want to buy it at this level. So the paradox is that we had a massive move in dollar-yen, and investors are actually not long.
They're not long the yen because they see the potential for further weakness, which really drives a main question that a lot of people have in the market right now, which is everybody overly long with the dollar? Have we basically reached a peak here? Is the strength that we've seen simply a weakness in everything else that could get changed if there is a policy shift? Or is this something about a global recession, the dollar being the remaining haven and the remaining hedge for risk assets?
Positioning is not actually stretched, but obviously the question of whether the dollar has peaked is out there. Now, our view is that the dollar will remain strong for now. It can strengthen further, but the main point is that it will remain strong. For the dollar to weaken, you need the Fed to be more concerned about growth than about inflation. And we heard from Powell this week, this is not the case. We also need the ECB to be more hawkish. And so far, we're seeing a very cautious, gradual approach from the ECB, and still a lot of questions about how they will address fragmentation risks. So the conditions for the dollar to start weakening are not there yet.
Thanos, why have we not seen more calls of parity reprised as people see sort of stasis, a consistency all of a sudden at 105 for the euro?
There are two reasons, I think. First, Europe avoided sanctions on gas, which I think will have pushed euro-dollar to parity. This remains a risk looking forward. The second is that although the ECB is the most dovish central bank out there, with the exception of the Bank of Japan, they have expressed a strong will to address periphery risks. So markets don't want to short the euro before they hear the details of these new policy tools that the ECB has promised. At the same time, before they have these details, they don't want to put more money to work in Europe.
But Thanos, even if we get the details and even if the ECB follows through on the hikes that it says it will, potentially with 50 basis points come September, are higher rates enough to actually support the euro, given the kind of growth outlook we're seeing in the PMI data reflective of that today, a 16-month low?
Exactly. That's a good point. The paradox here is that if the ECB comes up with a good tool to address fragmentation risks, which is very difficult to do so, then this allows them to hike more, which makes the situation for the periphery more difficult. And at the same time, because they are dealing with negative supply shocks, the growth outlook is much weaker than in the US. So while the Fed is trying to address first-round effects from an overheating economy, the ECB is trying to address second-round effects from these shocks. The problem is that the ECB has not even started addressing them yet. So they have fallen behind and they have to move. Most likely they start moving, the euro could strengthen, but they have to be more aggressive than what we have seen so far. And it is unlikely for the euro to strengthen by too much because the US economy continues doing much better than the Eurozone economy.
Thanos, thank you so much. Greatly appreciate it this morning. Thanos Vankakidis with the Bank of America and Foreign Exchange and G10 at that. Lisa, I want to go back to EM here. I haven't talked to Damian Sassar. He never talks to me, Lisa. I mean, he just ignores me.
By never talks to, that means every other day.
Yeah, but the bottom line is EM is really intriguing right now. I did an equity look at EM back 10 years, and even at the peak, it was up only like 7% per year. And with the drawdown, seriously, the drawdown we've seen, it's up only 6% per year. That's not good enough.
Yeah, it's been lagging behind consistently, which is one reason why you don't have people flooding back in at the sign of perhaps a bit of more of a constructive look. I go back to what Bill Dudley said yesterday. He is watching some of these developing markets, and particularly the currencies, as a potential stressor that could erupt as the Fed starts to hike and continues to hike. And that, I think, is a really important concern, especially in light of what you were talking about yesterday, the strike effects in the United Kingdom bleeding out into a sentiment shift in the face of higher prices and potentially strained food supplies.
And sort of the train story in London, actually the airplane story as well, really fluid right now. Lisa, as you know, Kaylee's distracted. She's in deep planning for next Tuesday's crypto show.
Always.
Kaylee, I just put out on Twitter, Raphael Auer, who I adore at the Bank of International Settlements, and he's talking about this con job of miners' extractable value. Can you explain to mere mortals like me why crypto has a different rule book in affecting transactions from me buying the marginal share of Apple Computer?
Well, Tom, I don't think it's so much that it has a different rule book as the rule book is still being written for crypto. There are still a lot of regulations that need to be put in place as to how these markets operate, especially when you see liquidity issues rising over the last week or so that we have seen. And on the point of miners, they're not actually having to sell their Bitcoin holdings, which they never wanted to do because of these liquidity issues.
21,000 on Bitcoin. Some have had the Kool-Aid, others drink Tang. It is extraordinary, interesting weather in New York. Coming up, the president of Lithuania. This is Bloomberg.
Volatility is part of the global deal at the moment.
We're about 2/3 of the way there in terms of your average bear market.
We see the weaker links, the most vulnerable, have gone down the most.
The market's really worried about recession fears. 50% chance priced in across U.S. and other countries.
What seems to be priced in right now is a mild recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance, International Relations in this hour. A conversation with the president of Lithuania is scheduled. Very important. Maria Tadeo will handle those chores. Katie Lyons in for John Farrow. A well-deserved rest for John. Lisa, we don't even want to know where Farrow is, do we?
No, we definitely don't want to see pictures. No, I mean, we are very happy for him, except just don't tell us. That's
I'm in aisle 6 of Whole Foods looking at tuna fish up 82 cents. And you're in aisle 8 of Whole Foods looking at ginger ale going, really?
Yeah, the 7.5 ounces versus 8 ounces, which is the reality that so many people are facing, and the reality that we're going to be hearing about yet again on Capitol Hill with Fed Chair Jay Powell saying, yeah, it's bad, and we're going to fight it. And that seems to be the tone as things get a little bit darker, at least in markets and for economic projections.
It is a mess of a Thursday out there. We've got jobless claims coming up here. But, Lisa, I'm sorry, I've got a lift. And as I mentioned earlier, we've got a draw up in NASDAQ, 4 straight days up, touching 5%. Granted, it's in a bear market trend. I get that. But it's a draw up.
Okay, I'm actually not watching that, and I'm glad that you're keeping an eye on it. I'm not giving a lot of credence to the draw up that you're giving. I'm going to be really honest. No, it's not just gloom. I'm looking at oil. I think that oil is the most fascinating metric on the board today. Second day of declines at a time when people still see a shortage in the market. This is pricing in demand destruction. It is pricing in recession. Is this the last shoe to fall? Are we heading toward an Ed Morse future? Or is this just also a pause in this trajectory upward? And how does this factor in to the expectations for recession?
Kayla, let's partition that. This is really important. There's many other people out there with an academic study to 120, 150 a barrel, maybe some gloom even higher, and others, including Mr. Morris at Citigroup, really push against that and say, guess what? High prices solves its own problem.
Right. The cure for higher prices is higher prices. And Ed Morse is down at, what, $80 a barrel by the fourth quarter?
85, maybe. Who's counting?
The point of the story is it's significantly lower than where we are now. And I know we're going to talk to Amrita Sen of Energy Aspects later this hour, but she has been on this program in recent months talking about how oil could easily go north of 150 because of the supply side issues relating to the war in Ukraine. And yet we've seen oil unable to even breach 120, and that seems to be a reflection of the demand concern that's out there, even as the supply side remains incredibly tight.
We're going to do the markets right now. We're going to lead off with Russia, where there's some ruble chat out of their important finance minister, where they're going to do FX transactions in ruble, giving ruble a lift. Turkey out moments ago, holding their repo rate at 14%. In the real world, futures up 27, Dow futures up 145. The VIX, I'm sorry, it's a draw up. We've gone from 30, 29, 28.98. I'll take it. It's a 28 handle on the VIX. A 2-year yield is 3.02%. Gargi Chaudhary aged as she came in, looking at a 2-year back under 3%. Let's go to the brief right now to get to Gargi Chaudhary. Lisa, what do you have?
So we've got a bunch of data coming out today, including U.S. initial jobless claims coming at 8:30 a.m. Have we seen the best of the employment reports? Do we start to see jobless claims tick upward, as we do expect that to be the likely pathway of transmission to a softer economy, less demand, and possibly bringing inflation down? Then at 9:45 a.m., we also have S&P Global U.S. June manufacturing services and composite PMIs. How much do we see the slowdown reflected in the manufacturing and services data? 10 a.m., Fed Chair Jay Powell heading back to Capitol Hill, giving a second day of semi-annual testimony to Congress, this time in front of the House Financial Services Committee. How much does he give credence to this idea that a recession is much more likely and that a hard landing, meaning a deeper recession, is potentially more likely as well? As Lindsay Piegza was talking about, that she views it as a 60% chance that it is a deeper recession versus the 40% that we get to something shallow and brief. At 4:30 p.m., the Fed board announces results for its bank stress tests. How much do we get some sort of reprieve in the sell-off that we've seen in the bank stocks on the heels of those, as the Fed tries to come up with the worst-case scenarios? Tom, I'm more interested in what are the worst-case scenarios for the Fed at this moment? How deep does the recession go? What kinds of financial markets disruptions do they look at? I mean, if you want a gloom situation, think about what the Fed stressors have to do. I know, but I just imagine those conversations that the Fed stress testers have. Oh, let's put this in the parameters.
Not only that, but the timing of recession, the guesstimate of its depth as well. To me, it's hugely random. I'm going to go to Jeffrey Frankel at Harvard, who's done the best work on this. But I'm sorry, Lisa, it's a difficult sport. We'll let Chairman Powell do that, I believe, this morning with the House. Right now, for those of you with losses in bonds, that's called price down, yield up. Gargi Chaudhary joins us, head of iShares investment strategy at Americas. She's been in the trenches in the bond market for a good number of years. You've never seen this. And far more importantly, Gargi, I've never seen this. How is BlackRock adapting to a general U.S. total return index down some 13%?
Good morning, Tom. It's great to be here. So obviously, we came into this year expecting bond yields to be higher. And that has worked out. I think what has been harder to understand in the markets, or what has been harder to react to in the markets, has been this incredible volatility in the front end of the curve. So just last week, when you looked at what 2-year yields did, just moving 6-7 standard deviations 2 or 3 days in a row, I think that's been hard for investors. I think we are telling our clients that, number one, please don't rush to cash. Please stay invested. Maybe stay invested in a more defensive manner. Stay invested in minimum volatility sectors of the market, stay invested in more defensive sectors like healthcare. And then I actually think that moving to the front end of the markets, in the bond markets, makes some sense. And of course, inflation-linked bonds, my favorite asset class, front end of inflation-linked bonds also, especially with the backup that we've seen, make a lot of sense. But look, it's a tough market out there. I think the main thing that we're telling investors to do is not to move to all cash.
Well, Gargi, there's a lot to unpack there, and I actually wanted to get your views on oil, but let's sit on the front end of the yield curve, which we're seeing rally. People are taking up what you're putting down, saying perhaps it's a time to go into 2-year yields, for example, 2-year bonds, and send yields even lower. The volatility that we have seen, does it indicate bond market dysfunction, or does it indicate just a complete lack of understanding of what the Fed's response mechanism will be?
I wouldn't call it a dysfunction in the bond markets at all. I think that we haven't been in a situation like this where the Fed is changing their policy narrative so quickly and responding to the data as it appears. So, last week when we saw the CPI print, and right after that, we saw the University of Michigan survey, and then we got the Wall Street Journal article about a 75 basis point rate move. We haven't seen things like that for a long, long time. So it's not a dysfunction. It's just a market reacting to a Fed that is injecting, unfortunately, a fair amount of volatility into the markets. And it was interesting to hear in the testimony yesterday that Chair Powell said that they don't want to inject further volatility. But unfortunately, that is something that they have been doing. Perhaps you can argue that they've had to to do that because inflation has been so much higher than their expectations. But no, I wouldn't call it a dysfunction. I think it's just a reaction to the volatility, especially in the very front end of the yield curve.
Gargi, perhaps it is their doing that we do have this kind of volatility, but how much is it also the doing of the uncertainty of the backdrop in oil, for example? And I do go to that because a lot of people are looking at this as a canary in terms of global growth. What do you make of the sell-off in oil, even as people talk about a tight market?
Sure. So it's a sell-off in oil and the sell-off in the energy sector in the equity markets last week, down, 17%. That was sort of eye-catching. And I think part of that is obviously pricing in of a recessionary risks that are moving higher. Whether or not you expect that to happen in the next 12 months or 18 months, you have definitely, most investors have moved their expectations of a recession higher as they've responded to this higher concept of Fed funds going up to 3.5%, 3.75% at its peak. With that, I think it makes sense for oil and energy sectors in the equity markets to have a little bit of a pullback. I certainly don't think that we're going to go back to sort of levels that we've seen in the past, like $60, $70, just because the demand-supply mismatch is so high. I think there's a structural reason that we all know that oil is going to be higher for some time. But I think pullbacks are actually healthy, and I think that it allows market participants to sort of get back to some of those positions. I mean, I think the energy equities are obviously something that's going to do well for some time.
Yeah.
I think the pullback allows us to re-enter some of those positions.
Well, and energy equities have been the one safe place to hide in the equity market on a year-to-date basis, even if that hasn't been true in the case of the month of June. But as we talk about recession and growth fears, can you really be going into some of those value, more cyclically oriented areas, or is it going to be a rotation back to growth?
I think that you have to, be a little bit more thoughtful about portfolio construction, especially as you enter into a slowdown period. So some of the things that have worked in the past aren't going to work. But at the same time, it can't be as simple as value versus growth or large cap versus small cap. I think it has to be a bit more nuanced. And what I mean by that is I was talking to Tom earlier, and we were saying that, obviously the defensive sectors make a lot of sense. But then within the cyclical sectors, I do think we can make a case for energy equity. And the reason I say that is because the balance sheet improvement that has taken place over the last, decade, but more recently, the improvement that has happened because of oil prices staying at a higher level for a period of time.
So not that Larry Fink's watching, but are you predicting $150 barrel oil?
I am not predicting
the Commodity Act today for BlackRock?
Certainly not predicting any levels on the oil price, but just saying that the equities of some of these oil companies are at a better state than they have been.
Gargi, thank you. Gargi Chaudhary with us with BlackRock this morning in fixed income, not in commodities, Mr. Fink, I should point out as well. Lisa, I look at the screen, and I'm sorry, I'm looking at a VIX of 29. I mean, life is not that bad. The Bramo gloom is unfounded.
Thank you, Tom. That's your
opinion. It's not just Bramo gloom, Tom. Remember when we talked to Bill Dudley yesterday, and he said a recession is inevitable in the next 12 to 18 months?
Yeah, but honestly, Tom, let's just put this in the record. I hope I'm wrong. I hope that people just think I'm Chicken Little. I hope that we eke out something like a soft landing.
Jeff Yu in the 8 o'clock hour. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. With Fed Chair Jerome Powell's most explicit acknowledgement yet that raising interest rates could lead to a recession. Powell told lawmakers that a recession is possible and a soft landing is very challenging. But he said the other risk is that high inflation gets entrenched in the U.S. economy. Powell is back on Capitol Hill today. In China, President Xi Jinping reaffirmed a growth target that analysts say is out of reach. It was the first reference to the target since a Politburo meeting in April. China is expected to miss its GDP goal of around 5.5%. The government's zero-tolerance approach to fighting COVID and a weak housing market are the problems. In the UK, a nationwide rail strike resumed today. The Transport Workers Union says talks broke down Wednesday. The union wants higher pay and a guarantee of no compulsory job cuts. Tuesday's walkout led to a roughly 80% cutback in rail service. Ray Dalio's Bridgewater Associates has built a $10.5 billion bet against European companies. It's almost doubled its wager in the past week to its most bearish stance against the region's stock in 2 years. Bridgewater is the world's largest hedge fund. Amongst the companies it's shorting, Sanofi and SAP. The chief of the school district police in Uvalde, Texas, has been put on leave in the wake of the mass shooting there. The state's top police official criticized Chief Pete Arredondo for delaying the confrontation with the gunman at the elementary school. State and federal officials are investigating the police response. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
By suspending the 18-cent gas tax, federal gas tax, for the next 90 days, we can bring down the price of gas and give families just a little bit of relief. I call on the companies to pass this along, every penny of this 18-cent reduction to the consumers. There's no time now for profiteering.
The president, and over his left shoulder, for those of you on radio, the billboard 18 cents per gallon. Wow, what a tepid response. In the Washington Post this morning, Steny Hoyer of Maryland making very clear, maybe, or something along that line. Let me do a maybe data check here. It's sort of a nudge market here into claims. We'll do that in an hour and 10 minutes. Futures up 27, Dow futures up 146. The VIX impresses me, 29.08. It doesn't impress Lisa Bramowitz. Dollar, I'm going to call it a churn. Kit Jukes talking about weak sterling, talking 120, right now 122 on pound sterling as well, and the euro 105.02. Lisa?
Yeah, you know, this is the issue that as we see 18 cents behind Joe Biden's shoulder, how much is this an international issue that in Germany is being dealt with so profoundly differently? And we go from Europe to Washington, D.C. Bloomberg's Maria Tadeo in Brussels and Jack Fitzpatrick in Washington, D.C. As you await your interview with the Lithuanian President Maria Tadeo, we do hear about Germany preparing to ration gas supplies, to start rationing who can use energy and when, if they fall below a certain point. How is that being read in the German population as we talk about the U.S. pushing back even for 18 cents?
Well, Lisa, you could hear the panic in the voice of Mr. Habeck, the German economy minister, today, who now says we are in a situation where Russia could decide unilaterally to completely cut off gas from now until the winter. And the timing of this, it's very particular. We have seen that over the past 2 weeks, Russia has limited in major ways. They say there's a technical issue, but of course, the Italians say they lie, and the Germans don't believe it either. We have seen this reduction in gas supplies to those are the two big clients that they have in Europe. The timing, as I say, it's very peculiar because it's really this time of the year in which Europe prepares for the winter. They try to work on the storage, and of course, they want to be in good shape by the time we get to September. We know that is not the case, and we know that come winter, there's a real concern that we could see at times lights going out, that the German industry could take a big hit, and this is now a perfect storm that's facing the European economy. There's today here in the summit, behind the scenes, a real sense of concern that Russia could now really turn on the heat as a geopolitical weapon. But in many ways, Lisa, I mean, this is a penny drop. I mean, for years, you really relied on Russia. They use it as a geopolitical weapon. You've known it for years, and now prepare to pay the price.
Jack, tell me about the geopolitical or domestic political weapon that the Biden administration has. What is the next step for the president?
Geopolitically regarding oil, natural gas, you know, there are broad conversations about what they can do in terms of exports, but there's there's not a lot of progress being made in Washington on how to approach those issues. It's a tough political issue domestically for the president, which is why you saw the seemingly already failed attempt to get the gas price holiday. But in terms of what they can do with Europe, with European allies, that has kind of been put onto the back burner because of the domestic concerns. So there's not much of a plan plan being proposed regarding the U.S.'s ability to help internationally.
Jack, listening to the hearings on Capitol Hill yesterday with Jerome Powell and senators like Democrat Elizabeth Warren, who asked him directly, can the Federal Reserve bring down grocery prices? He answered, no. Can they bring down prices at the pump? Again, the answer is no. Is that not undermining the Biden administration's whole entire thesis that other than Vladimir Putin bringing prices up, it is just the Federal Reserve's job largely to bring it down?
It may undermine the talking point that you hear every once in a while from the president, emphasizing how much of inflation falls on monetary policy on the Fed. It doesn't necessarily undermine the argument that the president's hands are still tied to some significant degree, because those issues that Senator Warren is getting at are about international supply chains and a lot of things that are also beyond his control. But yeah, that speaks to the lack of a cohesive narrative response from Democrats, and it also, that's I think one area to look at in these hearings from progressives. Any amount of pushback on the Fed trying to pump the brakes on in terms of interest rate hikes, that's what to keep an eye out for, especially as they go to the House Financial Services Committee with other vocal progressives, AOC and others. But yes, it speaks to the lack of a coherent, cohesive answer from Democrats.
Maria, when we talk about the issue on a global level, how much pressure is there in Europe on the U.S. saying, give us more when it comes to gas, help us weather this storm more, and the U.S. saying, we can help you a bit, but we also need to help ourselves?
For sure, and they're very aware of that, and they're very aware of the internal dynamics in the United States. And I think we're about to see it next week. When you look at the G7, it's all going to be about energy. When they meet at NATO, this is really the centerpiece of it. And it's very difficult to separate for Europe at this stage security and energy. They really come together. So you really see the thread between that G7 meeting next week and then, of course, NATO. But I think the Europeans are very well aware that this is something they have to fix. The reality is, I have asked multiple people this morning, what is the plan B? And they don't have one. At this stage, they don't. And that's a real concern, especially when you look at the storage. You have to build it in 2 months. I mean, the clock is really ticking here.
Maria, we're really looking forward to the Baltic State and Lithuania Plan B as well with your conversation, which is scheduled here, I'm going to say within the hour, as we await the president of Lithuania. Jeff Fitzpatrick, thank you so much, in Washington as well. Lisa, we haven't spent enough on this equity market with the VIX now at a 29 level. And I'm sorry, futures elevated up 29,379.2 as well. And the NASDAQ up a sprightly 1.1%.
The NASDAQ is what's catching my attention. How much does it really trade in tandem again? Yields lower, NASDAQ up. How much are people looking for some entry point to go into big tech after the sell-off that way outstripped what we saw in the S&P? Is that sort of the deciding factor? I don't know. It could change again in a cup of tang, right? I mean, this is the issue, is that it's been all over the place. And how much is this just a brief rally as we see a further trajectory into gloom?
And Kaylee, what's so important here is, we haven't even talked about it. Get out the calendar. June 30 is upon us. And then 30 days later, the banking ballet, 3 weeks later, the banking ballet starts in earnings. I mean, we're not even there to that reset of the guesstimates of earnings.
No, we're not. You haven't seen the earnings revisions coming down as much as you would think they would, given how far this market has fallen. As seems to be so often the case, the analysts feel like they're behind the curve a little bit, Tom. JP Morgan is in what, 3 weeks from now?
3 weeks from now.
I can't believe the first half ends a week from today.
It'll give enough time for Pharaoh to have another vacation. 3.03% on the 2-year yields. Stay with us. We speak to the Biden administration. This is Bloomberg. Bloomberg Surveillance. Good morning, everyone. Lots of distractions this morning. We await a conversation with the president of Lithuania, critically important along the eastern front of NATO. We'll have that with Maria today. It's a flexible time. We'll see if we get it in this hour or the next hour. We're looking at the markets and, of course, lots of news out of Russia, Turkey as well. Turkish lira weaker fractionally. But far more, it is an equity lift in the markets. On the data check, futures advance up 33. Now SPX futures up almost 1%. NASDAQ leads up 1.2%. I'm going to keep this short because the individual stock story matters this morning. Here, Mr. Bostic of the close.
Yeah, the individual stock story, which of course lost a lot of steam yesterday, coming off the big rally on Tuesday. It'll be interesting to see how folks reset today, day 2, of course, of the Powell hearings. But other than that, kind of the all clear when it comes to any sort of economic data or commentary to hang your hat on. Most of the big cap tech stocks are moving higher here in the pre-market. Apple up about 1%, Tesla up a couple of percentage points. Also a lot of activity, of course, in the energy space. Remember, that was the big decliners that we saw yesterday. Seeing a little bit of a boost today, despite there is some sell-side notes out there saying that maybe the bloom has come off the rose. Occidental Petroleum, one of the outliers, up about 3%, and that's largely on the disclosure that Warren Buffett's Berkshire Hathaway increased its stake in the company. It already held about 140 million shares, now up to about 153 million shares. And keep an eye on Century Aluminum. They came out with a statement late last night. Those shares down about 3%. They actually shut down one of their main plants in Kentucky and laying off about 600 workers. And they're saying this is all due to power prices. Remember, out there at the main power hub in Indiana here in the United States, you're basically paying about $213 per megawatt hour. For a company like Century Aluminum, that's more than quadruple what they were paying a year ago. Meanwhile, aluminum prices down about 40% from that peak. Flip it up and real quickly take a look at some of the earnings that did cross the wire. KB Homes last night, they were good. Orders were down overall, but the backlog was actually up, and that seems to be giving a boost to the stock. Shares up about 3%. DR Horton just crossing the wire just a few minutes ago. And once again, comp sales, kind of a mixed picture. They were down a little bit slightly on some metrics, but some of the other metrics that people look at with regards to average sales price and what people are buying at the restaurant, Tom, at those Olive Gardens and the like, did show a little bit of strength. Those shares up 6%. And after the bell, Tom, FedEx. Tom, have you ever set foot in Olive Garden? I doubt it.
Romain, Le Jardin d'Olive, c'est bon.
Unlimited breadsticks.
Unlimited breadsticks. What about martinis? Are those unlimited?
Well, they're occasionally they are.
All right, Tom.
Thank you, Romain.
You're
greatly. FedEx, there's worth looking at. Lisa?
Yeah, the FedEx is going to be interesting. I think they've got a call today also that will be instructive as for the path forward. Also, the path forward, very much parsing through a hard landing versus a soft landing. What does that look like? And are we already there in a recession? And before someone accuses me of being overly gloomy, is that the better case scenario to be see the weakness now versus later? Gregory Staples has a view, head of North America fixed income at DWS Group, formerly of Deutsche Bank Investment Management. How much are we already seeing, Gregory, a slowdown that reflects a near-term shallow recession that may be the best case scenario for Jay Powell?
Lisa, I think we're already starting to see that. I mean, if you look at some of the real-time economic data, you're talking about housing starts, you're talking about construction spending, we're seeing demand destruction in the energy patch. You talked about that earlier this morning. I think some of the leading indicators are indicating right now we're probably in a slow patch, and we think that's going to continue as we go deeper into the third quarter. It's going to give Powell and the Fed a little bit more leeway to adjust, but it's still too early for them to get off their hawkish forward guidance. It's still too early for them to go wobbly. But the markets are forward-looking, and I think that's one of the reasons why we're seeing a little bit of strength in terms of bond prices over the past couple of days.
So, Gregory, the markets are forward-looking, and they're looking into a soup of unknowns. I mean, honestly, you can forward-look and get it completely wrong because the exogenous factors are moving faster than the markets can even think. How much would you lean into credit, which actually is not seeing the same kind of rally, particularly in the riskier areas, because of some of the recession fears?
Well, I think there's two things going on here. One is the fundamentals still remain quite strong within the credit patch. If you're looking, for example, upgrades to downgrades, they're still positive, whether it's in high yield or investment grade. You're looking at some of the credit metrics in terms of interest coverage. That's still pretty strong, but the flows are coming out of that space. So technically, I think it's still a little bit of a dangerous position, but you get a little bit wider, maybe a little more time. It's a space that we're looking at very closely and are thinking of going back to the long side fairly soon.
Greg, this is really important, and to have you in here with your esteemed career. Ian Lingon's over at BMO Capital Market and has just put out moments ago a blistering note which goes to the heart of your theory, which is you have to watch the Fed and watch how they express their reaction functions. Are you getting clarity from the Fed? Mr. Lingon says that we're getting a new dynamic understanding of how the Fed is going to move forward. Do you feel that to Jackson Hole, that we have a better understanding of how they will adapt to reaction functions?
Well, I think Powell is trying to finesse it. I don't think that it's very clear for him what indeed the terminal rate is right now. I think that he's got to continue to guide the market towards hawkishness. He can't go wobbly on the resolution to tackle inflation right now. If he does, I think you're going to backslide into looser economic conditions. But he's going to watch real-time data just like everybody else.
Price up, yield down. Is it marginally just within the drift function of a bear market in bonds, price much lower, or can it tangibly catch a bid like it does in equities?
And if you're talking about purely because of the possible returns at a lower price action, I don't think we're quite there yet. I'd be cautious about going against what's been a 6-month bear market so far, but I think we're in the 7th or 8th inning of that, and certainly as we get closer to the July Fed meeting, that could be a trigger point. If they go 50 or 75 and the market reverses itself saying they've gone as far as they're going to go, that's probably the time to go long duration, and after that, the time to go long credit.
Okay, so we had Emily Rowland of John Hancock Investments on yesterday, who said she wished her T-shirt arrived in time that said, "I love bonds." She sees value in treasuries at these levels currently. You're not there yet, Greg?
I'm not quite there yet. I mean, listen, one thing about bonds is they tend to trend very much like currencies, and it's very easy to get into early. A lot of us thought that 285, 295 on the 10-year was a great time to come in, and there was another 40 basis points to go. Is it impossible that we get to 3.5 sometime over the course of the summer? No, not at all. But is it possible that we saw the highs last week? It is. I just want to see a little bit more confirmation that we're slowing before we get really long in terms of our portfolios.
But given how much hawkishness has already been baked in, is it that much harder to have a catalyst for higher yields than a catalyst for lower ones, as the R word is now used so frequently?
I think that's a good point. Yesterday in Powell's testimony, he was quite hawkish, and we're seeing the market sort of shrug off some of the hawkish data that's coming through, but pay more attention to the dovish data. So I think we might be sort of maximum positioning in terms of defensiveness and duration, and that would lead, if you see data start to reverse itself, people going on the other side, and you want to get on that trend fairly early.
So Gregory, if you don't like being long bonds, at least when it comes to treasuries, and you're not particularly overwhelmed by credit, what are you buying?
Well, we're short duration overall in our portfolio, still being defensive, and that's a position that we've held basically since the beginning of the year. Still a little cautious on risk overall. We're more than willing to miss the first 5 or 10 basis points of tightening, but once we see a little bit more definitiveness in where the market's going, that's when we want to put the positions on.
Okay, so are you all in cash?
No, just short duration, more conservative, up in quality.
I look at the up in quality, and that says full faith in credit. What's the partition now in the analysis of full faith in credit versus investment grade corporate bonds?
I think the place you want to avoid still is those parts of, say, for example, the industrial space that are going to be more cyclical. If we do go into a deeper recession than the market expects, they could suffer a little bit more.
Are they giving you a coupon right now? I haven't looked, to be honest. Do I get paid to own Caterpillar debt?
You can get 10-year debt close to 5% now, and that's not too bad. Mortgages are the same place.
As we talk about a slowing economic picture, and as people use the R word, as we've already discussed a few times, Gregory, do you see adequate default risk out there that things could get so bad in credit that it actually means Jerome Powell presses pause at some point?
Well, first off, I want to point out that I've never heard the one economic term, i.e. recession, used by so many people without defining what it actually means. I mean, some people talk about recession as perhaps a negative 3% on growth. I'd say a soft recession is basically zero growth plus or minus 100 basis points. And I'd say we're probably going into a soft growth, meaning, or a soft patch, if you will. 0% growth, maybe a little bit weaker than that. I don't see much worse than that. We're not talking about a first quarter of 2020 recession or fourth quarter of 2008 recession. If that happens, of course, all bets are off, but I don't see that happening.
Greg Staples lifting the market here. Futures up 31, NASDAQ out to up 1.1%. He is in fixed income with DWS. Thank you for joining today. You know, I mentioned this yesterday, Lisa. Greg Anderson, the great Greg Anderson, and Stephen Gallo over BMO Capital Markets are writing piercing notes on EM. They gave a number, Lisa, and I know this is wicked inside baseball, but to consider India rupee at 80 stops me. I mean, all of a sudden we're seeing real EM erosion that's out there. They're looking for weaker India after intervention efforts out to 80 per dollar.
And what does this become a liability socially when you start to import oil, when you start to import food? I mean, this is an oil importing nation. This is a food importing nation, even though they do produce a lot of their own food. How do they deal with the idea that they've got less buying power, Tom?
I would suggest for our listeners and viewers in America, this is stuff I realize it's outside the box of what everybody's talking about. But all of a sudden, Lisa, Jay Powell is central banker to the world again.
And he's central banker to the world in the opposite way that he was before. And this is why I talk about the idea of a currency war being turned on its head, with the strength being heralded and celebrated rather than weakness, as it was 3 years ago, 4 years ago, and you were racing to the bottom to attract capital no longer. And that, I think, is going to be a very difficult thing for Jay Powell to parse when he's got very much of a domestic view and only one consideration: to get inflation down, when a lot of it is not even within his remit.
Kaylee, I can't stand it. NASDAQ up 1.1%. I mean, it's 4 days in a row, even 5 days in a row.
Can't stand it, Tom. It was down fractionally yesterday. It wasn't a huge loss, but we were off a couple tenths of a percent on the NASDAQ 100. The question really is going to be, at what point does the buying stick? Because we haven't seen more than, I think, 2 up days in a row on the NASDAQ 100 in quite some time. In fact, usually a big up day is then followed by a down day. When do you see the dip that you actually want to buy and that buying power stick around, given all the uncertainty that is out there?
Futures up 31, the VIX 28.98. That is important. We've come in from that 32 level sprightly, because Kaylee's with us, folks. We would not normally not quote Bitcoin, but 20,633. So Kaylee will stay around for the next section. I'm ready to send on oil. We do that next.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Both Republicans and Democrats in Congress are signaling there is little support for President Biden's call to suspend the federal gasoline tax. It's seen as a symbolic move by a president running out of options to ease prices at the pump. The president blames much of the increase on Russia's invasion of Ukraine. Germany has triggered the second stage of its natural gas emergency plan as Russia cuts back supplies. That has European gas prices rising in the so-called alarm phase. Berlin will tighten monitoring of the gas market and reactivate some coal-fired plants. The German government warned this week that there could be further cutbacks in Russian gas. U.S. prosecutors say British socialite Ghislaine Maxwell should spend 30 to 55 years in prison for engaging in a sex trafficking scheme with the late Jeffrey Epstein. A federal judge will sentence Maxwell next week. Prosecutors called Maxwell a sophisticated predator. Instagram is testing new ways to verify users' age, amongst them running users' video selfies through an artificial intelligence that can determine if they are adults. Instagram has been under fire from safety advocates to keep children off the app and prevent teens from seeing harmful content. It's owned by Meta Platforms. Bloomberg's learned that Tesla is taking steps to ramp up its output at its factory over in Shanghai. The electric vehicle maker will partly suspend manufacturing at various points through early August so it can upgrade production lines. The goal is to eventually double its original planned target to 1 million cars a year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Minority Leader McConnell has already kind of thrown cold water over it. There's very little chance that this actually does get through. This is just a kind of another rhetorical tool of the White House to sort of show that they're doing everything they can on inflation.
Libby Cantrell, she is with PIMCO, and we're thrilled that she could be with us to do analysis here of what Jerome Powell's talking about, how that was taken yesterday, I would say constructively all in all by the market. That construction after a fade, Lisa mentioned that earlier, futures up 29, Dow futures up 158, and the NASDAQ up a full percentage point. I'll call it a constructive tape this morning. This is hugely, hugely anticipated right now. Amrita Sen joins us here with Energy Aspects, and I do want to note we protect the copyright of all of our guests. I can't say enough about the acuity of Energy Aspects notes. You can get them from their people as you can. And Dr. Sen, I want to speak here about demand, which the fears are premature. And what I love about the Energy Aspects note is how geographic it is. The elasticities or responsiveness of demand, it's different on the Pacific Rim than it is in Europe, et cetera, et cetera. What part of your oil demand study now is the most important for our listeners and viewers?
I would say, first of all, thank you, Tom. Very kind words indeed. But I would say we have to focus on Asia, because all the focus right now is on the US in terms of the market, right? And obviously with the US Fed raising interest rates, everybody is now expecting a recession. The questions have moved from, oh, are we going to be in a recession, to how deep is it going to be, to how does it compare to past recessions, whereas nobody is actually looking at emerging markets. Asia is 18 months behind us in their reopening cycle. They have just started to reopen from COVID. And by the way, China hasn't even started to reopen. So there is quite a lot of upside to those demand, even our own demand numbers for 2023, depending on that cadence of the Chinese reopening.
And Lisa, this is absolutely critical. The hyper-analysis in microeconomics of Amrita Sen, different from what we see at JP Morgan, but both of them are completely focused on demand responsiveness on the Pacific Rim. That's the common feature of two different houses.
And sure, there's a lot of distinction in each region. The overall picture, though, is a tight oil market. And Amrita, you highlight that as well. How much is what we're seeing right now a brief cooling in some of the fears of the tightness of the market before we reassert price up for a barrel of crude, especially as some people think that there already is a recession, an R word, baked into the price of oil?
Yeah, I mean, look, have the balances necessarily turned out to be exactly what we had forecast after the Russian invasion? No. Russian supplies are still hitting the market, probably about 1 million barrels per day, or more or less more than what we had expected. But they are still down about 1 million barrels per day. But equally, we've had the SPR. At the same time, demand is still coming in higher. So to your point, the market is incredibly tight despite some of those moving parts. I think the bottom line is underlying inventories are so low, spare capacity is so low, that you only need a little bit of movement, like such as Libya going offline for a couple of days, can really swing balances from being solvable to unsolvable in the matter of hours. So what we are seeing right now is, again, this fear of a recession turning people to kind of doubt the demand recovery and say, okay, you know, we've got all this SPR barrels, but if demand doesn't keep up, prices are going to come down. But I will also highlight a couple of other things, more technical factors. We tend to get sovereign producer hedging at this time, you know, large producers in North America, even in Asia, and that has started. And it's a low liquidity environment, which means that even take away all the fundamentals, there will be some downward pressure on prices in the near term. But ultimately, especially going into the winter, we think prices are going to head back higher again.
So, Amrita, maybe the best way to characterize this is a head fake, if you believe that this is hedging by sovereign entities. How much of a head fake could it be? How much do you still see energy prices rising heading into the winter months?
I mean, do we think prices are going to go back to $120 or $125 to $140 range for crude? Yes, absolutely. But does that mean that we don't fall $10 first? I think we could definitely go down first. And I think for traders, that matters a lot, right? It's always about the entry point. But I think more in terms of consumers and refiners, ultimately the trajectory is higher. And again, forget crude prices for a second. Think about diesel, gasoline. Those prices have barely moved because the underlying fundamentals are so strong right now. Crude tends to move a lot more with these macro headlines. Product prices don't. And I think that really tells you where the fundamentals are. And I think going into the winter, the risk of a diesel price spike is much, much higher.
Okay, well, Amrita, as we talk about going into the winter, let's talk about whether or not Europe is going to be adequately prepared for the cold weather. You had Germany today triggering phase 2 of its emergency gas plan, the alarm phase, I believe it's called. What happens if we start to see actual gas rationing in Europe?
I think there's a real risk of that. I mean, we believe that. Our team absolutely believes that. We've already put together a list of which industry is going to be hurt. So steel, cement, fertilizer, and so on. But I would say that we are starting to see countries restart coal plants. So I think the choice has been made. Again, it was always about kind of green energy versus energy security. I do think we're starting to see the move towards guaranteeing, let's keep the lights on. And as long as whoever has coal capacity decides to bring coal capacity back, then I don't think the downturn in industry is going to be as severe as we are expecting right now, just assuming that gas gets turned off.
Amrita-san, thank you so much. Just a brilliant note from Energy Aspects this morning out of Houston and London as well. Lisa, part of that note down at the bottom is a summary, and this is something I'd say, Lisa, it's in the zeitgeist, but they're really overt about it in Energy Aspects. If we get a China reopening, what does that do to the recession gloom in the United States? Energy Aspects doesn't mince words. It will delay recession.
Because of the supply chain issues, because of some of the gears
The logistics
of the economy,
get
the
better.
logistics
Yeah.
starting to improve. With respect to oil, though, it might be the opposite. If demand picks up, you might get
There we
oil
go.
prices go up. I'm not saying it will delay, that it won't delay the R word, but it's a complicated moment. And considering that that could be the swing factor for whether it's a hard, it's a soft, it's an up, it's a down. I mean, this to me shows how much uncertainty when you look at a crystal ball. It's pretty much murky.
Come on, Kaylee, look at the gloom that's out there. And I don't mean to beat on Brammo gloom. There's a lot of different other qualities of gloom that are out there. The chairman opened his comments yesterday to Brown of Ohio and said we have a strong economy.
Yeah.
That's what came out of his mouth.
He doesn't think that the chances of a recession are all that high, but he also couldn't rule it out, Tom. And while we're talking
Of course he can. What's he going to say? I guarantee you no recession.
Well, he could have sounded less gloomy.
Yeah, and while we're talking about China, there's a question of how long it's actually going to take China to reopen. You had Chairman or Xi Jinping, the president of China, talking overnight about reaffirming that 5.5% growth target. There is very few economists who actually think China's even going to be able to achieve 5% this year.
Yeah, I would agree with that. And again, our Energy Aspects, it's all about logistics and nuts and bolts of shipping and containers and such. We have a better market. Futures up 31. NASDAQ up. I'm doing a Faro data check. I'm not mentioning the Dow. NASDAQ up 1%.
Not mentioning the Dow by mentioning
John
the Dow.
would say, oh my God, I got to
times.
quote the 2-year,
Called in.
3.04%.
Look at the Dow.
Jeffrey, you will help us next. This is Bloomberg.
The folks who get paid to do this, i.e. at the Fed, have never gotten recession forecasts correct.
We're seeing the largest amount of financial tightening that we've seen in decades.
The Fed's discovered that they can control interest rates, and they seem to like to do that.
I do think recession risks are going up each time the Fed moves.
They're definitely going for a soft landing. It's just going to be almost impossible for them to pull it off.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Parsing through the many shades of the R word. Good morning. This is Bloomberg Surveillance on Bloomberg Radio and Bloomberg Television. Tom Keene, Jonathan Farrow, and Lisa Abramowitz. John off on a well-deserved vacation. He'll be back next week. And Kaylee Lyons in, which we are very glad about. And Tom, right now, it's the R word about Jay Powell. And basically, we can move past what we're going to hear from him at 10 a.m. today and to July 27th.
It's a lot of amateur coverage, Lisa. I'm not going to mince words. Economists look at this, led by the great Jeffrey Frankel at Harvard University. Totally different. Martin Feldstein, who founded NBER, in my opinion, he would say this is all wrong. It's way more nuanced. And to get to recession is a much more nuanced, complicated exercise than just blathering about the R word.
Okay, so if I'm going to use your phrase, let's stop the show. Where are people getting it wrong? Where are they underestimating some sort of dynamic trajectory for the U.S. economy?
The partial differentials of consumption, investment, government, and critically, export-import dynamics that, Jeff, you can talk about are underestimated. The nuances between those to get to 0% or negative GDP. And the other issue that is there time and time again is how every recession has a different character. That's always underplayed.
Of course, Kaylee, does the Fed have to cause a recession in order to get inflation down? In other words, is it a self-fulfilling prophecy that the more strength there is in the economy, the further the Fed has to go?
Well, that's the question, and it was a question posed to Jerome Powell on Capitol Hill yesterday when he faced Senate lawmakers. He said he doesn't think that they have to cause a recession in order to get inflation under control. The question is whether or not the markets actually believe him. And again, you have to define it. Our John Authors, on his column on the Bloomberg Opinion piece today, was talking about how you don't necessarily know what a recession is, but you know it when you see it. And is that the kind of place that we're in right now, where we'll know it when we see it, but no one can tell us exactly what it is that we're going to see?
So, Tom, you were talking about this earlier, about how the U.S. recession may hinge entirely on China and whether they have a reopening, whether demand starts to pick back up, whether that economy starts to revive. So if you call the Bramo gloom, let's talk about the keen constructiveness or the keen optimism, and sort of how much that really hinges on what happens with supply chains and what happens over in Asia.
Yeah, I mean, I don't know how to weight that, frankly. I think there's so many uncertainties there, but certainly the core theory we see across equities, bonds, currencies, commodities is demand will come on specifically from the Pacific Rim. And that's the theory there that we heard from Amrita Sen, that China is important to the American recession discussion.
Yeah, and right now what we are seeing is a keen constructiveness in markets that you've been talking about, Tom, and help me out here. But we're looking at a NASDAQ leading the way, which I find interesting. How constructive is the NASDAQ leading the way versus perhaps trying to find a bottom after a massive bear market? Now down, up, I should say, 0.9%. I've gotten used to saying down because it has been that for so long. S&P futures up 0.7%. The dollar kind of all over the place, depending on what cross you look at. It's got a strength versus the euro declining 105, but off some of the earlier lows, and yields lower. This I find fascinating at a time when so many people are expecting the Federal Reserve to come out, Tom, and be incredibly aggressive. We're still seeing a rally into bonds, perhaps saying that the market's going to weaken, the economy is going to weaken far before the Fed has to go.
I think there is there, but has there been much curve steepening? And the answer is no. I think that, it's come in. Atlanta GDP is a 0% as well, but I think it's hugely fluid right now.
And we're looking at crude with a little bit of a bid, but it still is early. Jeffrey Yu thinks perhaps it's early to use the R word, as do many people who are accusing me of Bramo gloom, which is fine. Jeffrey Yu, senior EMEA market strategist at BNY Mellon. What's your view as far as, Jeffrey, whether we've gotten overblown with the calls for the R word?
I do think it's overblown to some extent, and let's bear in mind the S&P, NASDAQ, that is not the entire U.S. economy. Low percentage of U.S. companies, large and small and medium size, are actually listed. So I don't think it would reflect, what Main Street feels as well. So on that side of it, let's look at the labor market. Spending power is very strong. But going back to the China supply chain element, there, I would say the risks are still to the downside. We're hearing Macau locking down, for example, apart from the casinos, which is not really a surprise. But if this spreads across the Greater Bay Area again, that's 11% of China's GDP, crucial to global supply chains. So I would continue to be relatively cautious on that contribution. But the US on the domestic side is still holding well.
Well, Jeff, to the point about supply side issues that could continue to feed into inflation, I mentioned the John Author's column earlier, and he cited something from PIMCO where they said there is a risk here that we run into an anti-Goldilocks economy that will be both too hot in terms of inflation and too cold in terms of growth. Is that actually a worse outcome than just a recession, but inflation getting under control?
So it's back to the stagflation argument, right? How do you actually get inflation under control, especially if a lot of the supply side issues are beyond central banks and policy control. So I guess the least worst answer there is, try to guide towards a soft landing. So as much as central banks can push on reining in credit, on reining in demand, at the same time, you want to supplement the household as much as possible to make sure the cost of living crisis, inflation, people are feeling it, that their consumption doesn't fall off a cliff either, especially relevant in the likes of the US and UK, which are services-heavy economies.
Jeff, you started by saying that perhaps the R word, recession, is overblown. Where is it overblown in markets right now?
I think, so if you look at where market pricing is, it depends where. Maybe in the US, at best, it's 50-50 in terms of pricing in a recession. Eurozone, less so. We saw the French PMIs in an immediate reaction today within the European bond market. So there it's probably not overblown. UK, we've had GDP monthly contractions already, and the BOE is outright forecasting GDP contraction the whole year for next year. So that's where on an individual country level basis, you have to look at the idiosyncrasies. But with the US and China can stimulate, and that can lift US growth, can lift US growth and global growth, keep it going. The question is, why isn't China doing anything right now on the monetary and fiscal side? They're still very, very tight.
Jeffrey, I want you to weigh in here on the oddity that is the Bank of Japan experiment and what it means for finance. Let's start with the power that they have. Do they have the power to continue yield curve control, or do they fall to a market pushing against them?
Yes, they do have the power to continue yield curve control. Let's be very clear about this. Any JGB trader will tell you trying to short the JGB market against the BOJ has lost you money for probably like 3.5 decades right now. That'll continue to be the case. But at what cost to the underlying Japanese economy? Now, Kuroda's had to apologize to the Japanese public for inflation. You cannot, buy a meal with a 500 yen coin anymore. People will feel bad, but ultimately it's not going to be outsiders, quote unquote, people trying to go against the yen on JGB market. It's going to be domestic and domestic politics.
How important is the shift in their flows of trade and the idea that the stereotype is Toyota's abroad and the reality is there's been a change in their import dynamics, their flow dynamics? How critical is that multi-decade shift?
I think that is very, very critical. But does Japan want to rebalance? If there is a plan to increase domestic demand, I'm sure there always has been, bring down your current account surpluses, then there's going to be no less yen to recycle in any way. And then the Bank of Japan's role will actually be much, much easier. But again, going back to Governor Kuroda, is he willing to actually bite the bullet and identify domestically driven inflation? Right now, he's saying wrong kind of inflation, don't want to push it back. But the problem is you find out you're wrong when it's too late.
Jeff, I want to get you in trouble with the General Counsel of Bank of New York Mellon. Real simple here, the 2 decimal points on yen, where does Kuroda break?
Well, Kuroda break, I will be very cautious in my language about saying, but if, let's say, with a 500 yen coin, you can barely buy half a bowl of ramen, then there's going to be a problem. But the higher it goes right now, the more problems that he will face within the public, the domestic public. That's his constituency he needs to be aware of.
Jeff, you skirting General Counsel debate there as well at BNY Mellon this morning. I mean, Lisa, Jeff, thank you so much. Greatly appreciate it. Lisa, this is a huge, huge deal. And that when you go out there as an investment house, particularly the Japanese investment houses, and you start pontificating about yen 140 or yen 150, there's some real internal pressures on that.
Especially at a time when they have to import so many goods. They can't really do that for the same kind of price. And this is not exactly the Japanese economy that they saw 20 years ago. What are they going to do, though, in terms of allowing this to happen without giving traders a payday? Without saying, you were right, we couldn't do it. How do they save face? Because they want to do it on their own terms.
And the history of this is simple, going back to the rationalizing of industrial and particularly banking Japan. It took forever and ever to get to that rationalization. I'm going to say off the top of my head, it took 12 years, but it was difficult to say the least. We've really worked into a stasis market here, Lisa, 20 minutes away from claims.
20 minutes away from claims and perhaps a little bit less than 2 hours from Fed Chair Jay Powell not saying anything that he didn't say yesterday, but I think it's all countdown to July 27th. And Tom, that's what I'm looking at, especially with all of the uncertainty about oil prices. And I'm looking forward to hearing some of the guests and the commentary coming up for that perspective.
Kaylee, the survey of claims, 229 down to a better statistic, 226 as well. I guess that's still better than good. That's the strong economy Jay Powell was talking about.
Yeah, exactly. He thinks the labor market is good enough to hold in there, at least to a certain degree, while the Fed hikes. The question is for how long, and at what point do we start to see that unemployment rate ticking higher, and to what height are we talking? Now,
an important data point this morning with claims. There's some other ideas coming on S&P Global, PMI as well, but really tomorrow you'll have to be with us on a Friday for the University of Michigan statistic. That's at 10 a.m. tomorrow. The view forward 5, and then out another 5 years, out 10 years as well. Stay with us. Claims here in 19 minutes. Futures up 22. Dow futures up 118. The VIX 29.11. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Fed Chair Jerome Powell is back on Capitol Hill today for the second of 2 days of testimony. Yesterday, he made his most explicit acknowledgement yet that raising interest rates could lead to a recession. Powell told lawmakers that a recession is possible and a soft landing is very challenging. But he said the other risk is that high inflation gets entrenched in the U.S. economy. In China, President Xi Jinping reaffirmed a growth target that analysts say is out of reach. It was the first reference to the target since a Politburo meeting in April. China's expected to miss its GDP goal of around 5.5%. The government's zero-tolerance approach to fighting COVID and a weak housing market are the problems. Russia used new rules to pay its latest slate of bond coupons in rubles. However, neither of the bonds have terms that allow for settlement in that currency. Moscow has just days remaining before it potentially slides into its first foreign default in a century. Russia has billions of dollars it could use to pay, but mounting sanctions are cutting off avenues to transfer the cash. Rescue and relief teams are struggling to reach survivors of a deadly earthquake that hit the remote southeastern region of Afghanistan. At least 8,000 people were killed and hundreds more injured. The Taliban has urged international aid agencies to help. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
From the Biden administration's standpoint, I think that you could say figuratively and literally they're out of gas. You can't guarantee that that's going to make its way to consumers. The way that the gas tax is levied in the U.S., it's not at the pump level. Right now, I would think priority one is to make sure that we unleash America's potential as far as the ability to produce more oil and gas.
The Republican from Virginia, Eric Cantor there, of course, with his public service to the nation, with Mullis right now and Vice Chairman speaking to Bloomberg in London. Right now, I'm going to focus on energy here because that is the point of the moment. Futures up 23. The VIX sprightly 29.11. Brent crude, the global price of 111.67. That is down from a 124 per barrel to 112 per barrel. And West Texas Intermediate at 110, and I'm assuming Amos Hochstein, presidential coordinator for energy security for the President of the United States, would like West Texas Intermediate quickly to get back to $80 a barrel. Amos, I'm going to cut to the chase. You read the Washington Post, Steny Hoyer and others, lukewarm here on the microeconomics of price theory of an 18-cent tax on a gallon of gas. What's the plan to get oil back to $80 a barrel?
Well, good morning, Tom. First of all, thank you for having me. Look, since the late fall, when Putin had amassed his troops around Ukraine and ultimately the invasion, followed by global sanctions, the price of gasoline at the pump for Americans has gone up about $2, and diesel probably a little bit more than that. So what we are looking at is this historic increase in price as a result not of normal economic times, but under a time of war, at a time of global security instability that is affecting the market. And as a result, as we go into the driving season this summer, the president really wants to give a break to American families during these 3 months of the summer. And that's why he's asked Congress to suspend the 18-cent gas tax. And he's called on governors to do that the same. So if the governors match that, we're talking about 50 cents a gallon less. But I want to answer your question, Tom, directly. Look, we have done everything that we can to encourage the industry to increase production, which they are going to this year. We're going to get to record oil production by the end of this year or the next year's first quarter. We've released, the president has ordered the release of 1 million barrels a day from the Strategic Petroleum Reserve.
Right, okay.
And
Amos,
he led the effort to do 240 million barrels.
Amos,
that's a lot.
Here's the
Tom.
problem, and I know you're sitting in the Oval Office with a Bloomberg terminal next to you as you talk to the president, and you can bring up log West Texas Intermediate quarterly like I can. Anybody can do this. Baloney. It's about distillates, and it's about not in my backyard. How is a centrist Democrat going to explain to left Democrats that they need to come up with a not in my backyard policy to advocate greater distillate capacities in America? How do you do that?
So, Tom, you raise an excellent point that people tend to focus a lot on the oil production, but in reality, that's not the issue alone, right? during the pandemic, just during the years of the pandemic, we lost a remarkable amount of refining capacity in the United States. And those refineries that went out, some of them are gone and they're not coming back. We know that. They're, one of them is turned into a terminal. The others, though, are there, and we can invest. Before we start talking about building new refineries, we can bring back, potentially, the old refineries that have been taken out of commission that are still there. And what the president has asked is for the industry to come to Washington, to meet with Secretary Granholm, and to bring ideas. As he said in his letter, look, he has taken extraordinary measures over the last several months in a number of areas, both in energy and beyond. He is willing to take those measures again. We're asking the industry to come and to give us their ideas. What do you need from the federal government, from us, that we can to work with you to increase the capacity, the refining capacity in distillates, in order to get gasoline not only produced, but then ultimately get gasoline and diesel to the right places around the country.
I mean, Lisa, what's so important here, what Amos is talking about, is what are we going to do to politically shift the distillate debate? To me, that's the heart of the matter.
The other heart of the matter, Amos, is this idea that the response to that letter that you were talking about from the president, from Exxon, from Phillips 66, from a whole host of other companies, was that the current administration has had obstructionist policies when it comes to the oil and gas industries, and that they have not been very clear. What is your response at a time when they have been increasing production and they invested more than they brought in during the heart of the pandemic?
So, look, that's the difficulty here. People say that we are standing in the way of increased production. But look at the numbers. Look at the increase in production under the Biden administration. It's hard to argue that we have done anything to stand in the way of increased production. There's been a rise in oil production. We know that by the end of the year or the beginning of next year, we're going to hit record production. So on average, the oil production in the United States in this last year and a half has been higher than the one under our predecessor.
Excuse me, Amos, but have you met with
those records, Lisa?
Have you met with the CEOs of the big oil companies to talk about this and to talk about how things can be clearer for them to produce more? You have. And are there going to be certain scheduled?
And I can tell you. Well, sorry, go ahead.
No, I mean, are there going to be scheduled changes in terms of more specific policies that you'll put out there that you think will allow them to refine more or create more production in the near term?
Well, I think that they have, my point is that they have the tools they need. When I meet with the oil company executives and the CEOs, and I've asked them over the last several months, what do you need from us? And beyond what we've talked about the last several days in the press about the tone, what do you need? They don't need anything. They all say they have what they need. There are some labor shortages, there are some spare parts, and so on. But they don't need policy changes from the U.S. administration. They have what they need. In fact, when it comes to federal land, they have more than what they need. But as you and I both know, federal lands where government leases are less than 10% of the overall U.S. production. So the companies actually don't need anything. What they do need is bankers in New York and their funders, and their investors to say, use the profits that you're having under these record prices for the last several months and invest them back into production, invest them back into refineries, invest them back into equipment.
Almost, if I could just jump in there.
That's where the rub beats. Sure.
It's not just about the availability of the crude. It's about the ability to turn that into product, to refine it. Refining capacity is really a critical issue here. And when you speak to an oil executive, they say, why would I invest in a new refinery, which is a long-term investment, when it is known that there is an intention to get to net zero, albeit in a few decades from now? They want to pivot to clean energy. So what is your messaging to CEOs when you're asking them to pump more, also knowing that eventually you want to wean off of fossil fuels?
So 2 points. One, you're 100% right. It is not just about the crude oil production. It is about refining. And as I said before, we lost a lot of refining over the last several years, specifically during the pandemic, and we'd like to see that come back. But you raise a fair question. Why do you make those investments? And that's what we have to talk about. We need to make sure that we have enough oil and gas in the economy now over the next several years to meet the demand that we have in the economy. And you're right, we're not shying away from our climate goals, and they're aggressive, and we want to accelerate We want to see accelerate the movement to electric vehicles. The goals of 2030, I know the goal is about 50% of new car sales. 2035, you have several American companies and global car companies saying that by 2035, 100% of their vehicles will be electric. So, and that's just new car sales. So we'll have a tail on that as the rest of the industry catches up. So the argument that we don't want to invest in refining or invest in oil production now because of these policies, I don't know that that really follows through and meets the facts. We know we have the demand, so I think that we'd like to work together with the industry. Tell us what you need, and tell us how you plan to use your record profits, investing back into the industry, into production, into refining, so that Americans can pay a little bit less at the pump and have the products that they need during this time.
Amos, we just have a little bit of time left. Has there been any discussion about reducing demand or possibly putting out some sort of guideline to pull back in terms of how much people use, akin to what we're seeing in the gas space over in Germany?
Well, first, I think on natural gas, Europe and the United States are vastly different in our systems. Our price here is about $6. Theirs is about $40 on natural gas. But look, we have provided record investment through the infrastructure legislation that passed into mass transit and into rail. These are the things to convert people from, if we had a better rail and mass transit system that was efficient and fast, then all studies show people would move from using vehicles to using mass transit. So yes, we'd like to put the investments to work. That's what President Biden has been offering all along. How can we move people away from driving their cars to mass transit and to rail? And how do we move from gasoline cars to electric vehicles, which will also reduce the demand for gasoline? But we have to also be realistic that we need that supply today as we get towards that better future that you're talking about.
Thank you for the brief. Amos Hochstein is with the White House and with President Biden with energy policy this morning. Futures up 23, Dow futures up 115. It's a stasis, but a lift to the market as well. Lisa, I look at West Texas Intermediate with Dr. Hochstein, 111.63 on oil, still a long way from the comfort that we had at $80 a barrel.
There's not a lot of comfort in the transition that we're seeing right now from a world very much dependent on fossil fuels, and that transition that Amos Hochstein was talking about with more people buying electric vehicles. And this is really the tension underpinning, honestly, all the conversations that we had in Davos, Tom. How do you get there? How do you invest in some of these refineries and other things if you know that in 10, 20 years, people are going to try to phase them out?
Well, we're just going to have to see. I mean, it's a debate here. My debate is on the distillates, completely away from production. I get the constructive story on production and price will come out in that, but to me it is a distillates destruction, not only in America but worldwide. It's way more about the Baytown refinery of Exxon than it is about anything else. Futures up 20, Dow futures up 100. We're 4 minutes away from claims, 4 minutes away from Michael McKee. This is Bloomberg. Good morning. Bloomberg surveillance, and good morning to you. The chairman of the Federal Reserve said yesterday it is a strong economy, and a strong economy always starts and ends with the dynamics of our labor economy. We migrate there right now with Michael McKee as he and I await and await and await for claims data. There it is, Michael.
Okay, you want to know something weird, Tom? This is the third week in a row the jobless claims, the initial print has come in at 229,000. Last month, it was revised up a little higher. The expectation was for 226, but basically we've entered a sort of period of stasis, it appears, with jobless claims. They're at about the same level. A lot of people have been wondering, are they going to be the canary in the coal mine and start raising recession concerns? And you would expect that because basically if you look back in history at recessions, jobless claims do rise going into recessions. Now, they rise at other times and don't predict recessions, but they do definitely rise into recessions. So if we're kind of flat at this point, it doesn't look like anything's imminent, which is, of course, is what Jay Powell said yesterday. Nothing's imminent.
Claims are symmetric. You have been a genius, Michael McKee, on the JOLTS survey as well. If you were sitting with Chairman Powell, what would you say about these other surveys? Do they show his strong economy as well, JOLTS and the others that you lean on?
Well, they do show a very strong labor economy, and that's what the Fed has been talking about. The JOLTS obviously suggests that there are an awful lot of job openings that are unfilled, and therefore if you lose a job, you could probably easily find another. Of course, there's a composition effect there, but there's just so many open jobs. The question is, do companies start paring back on their hiring plans and stop posting job openings because they think there's going to be a recession? And it's hard with JOLTS to know, Tom, because those are delayed by 2 months. So it's old data.
Delayed as well was a revision. Lisa, we've got it out. McKee almost fell off his chair here, seeing it peripherally. 231,000, a shock from 229 out to 231.
Yeah, really shocking numbers. Look, they came in a little bit, and the emphasis on a little bit weaker, and we're getting a little bit of a reaction in markets. If you want to just basically, I mean, it's a CFA talk that I learned from you, Tom. We're looking right now at a little bit of retracement of some of the gains from earlier in the day. The NASDAQ futures now just up about 5 to 0.6%, and the S&P up 0.4%. Meanwhile, the 2-year getting a bit of a bid, well under 3%. But how much are these numbers really going to reflect the true softening, Tom, that we're seeing in markets with job openings just simply being taken off the market and things that people say are the stealth softening of the U.S. labor market?
We'll have to see on that. Mike McKee, very quickly here to get into Andrew Hollenhorst. How important to you is the 5-year look forward from 5 years out, the 5-10 inflation expectations at the University of Michigan tomorrow?
Oh, it's going to be very important, not because people are accurate in their predictions about inflation, but because it will inform their expectations, and that is what drives the Fed. That's why Jay Powell said we went to 75 last week.
Let's go right there now with Andrew Hollenhorst, chief U.S. economist, Citibank, of course, with an important call for a much higher rate, a terminal value, and all the other mathematical mumbo-jumbo. Andrew, I want to go to 10 a.m. tomorrow morning, which you and I agree, and Michael McKee agrees, I think all agree. Inflation expectations are important. They have spiked up. Are we unanchored in our expectations?
Yeah, critically important, Tom. I think that was kind of the last data point that the Fed could still point to and say there was some notion that we weren't on a more inflationary journey. And as that University of Michigan 5 to 10 year expectation lifts above 3%, and we'll see where it comes in tomorrow, that just increases the concern that there really is an embedded sense to this inflation. I think we already saw it in the labor market, like you were just talking about, where we have wage growth that by various different measures, 4 to 6% wage growth. Chair Powell was talking about that yesterday. And then you have price growth that is, 6% plus, depending on the measure that you look at. So I think there's a notion of a wage price spiral here. I think a little bit of what we're seeing at University of Michigan is confirming that also. Just like Mike McKee was saying, it's not that the 5 to 10 year expectation is a correct expectation, but it just tells you something about how inflation is becoming a structural factor in the economy.
Yeah, but just as quickly as people get used to that, Andrew, how much is the labor market shifting already? And we're not necessarily seeing that in claims going up, although, they ticked up a little bit, but really it's not that significant. How much are we seeing just job listings being taken down or not filled, or companies paring back some of their business ambitions?
Yeah, I think that's what's difficult here is, as an economist, you're always looking at two things. You're looking at the level of activity and the level of strength, but then you're also looking at the direction of travel. And really what you want to get right is the direction of travel, because that's going to determine where you're going. And we know a lot of things are very strong. We know the labor market has been very strong, continues to be very strong, lots of job openings, relatively few unemployed individuals. But that kind of leading edge of the direction of travel, the weekly initial jobless claims data, that's giving me a lot more of a real-time signal of the labor market than something like job openings, which has lagged a couple months. So if you look at those initial claims, again, the level's still very low. Hard to think that it's a difficult time to find a job in most sectors, at least, because the vacancies are so high. So it's not so much of a concern about the labor market being soft today. Everybody would agree it's strong today. But I'm watching those claims. I think that what we're seeing now is, kind of some seasonal noise, nothing to get too concerned about. But it's definitely the case if you bring economists like me back on this show a month from now, 2 months from now, and we've seen these initial jobless claims that have continued to trend up, we'll have a lot more pessimistic view.
Well, Tom has done a really good job today, not just talking about the domestic labor market, but looking internationally and what the ramifications from some of the global downdraft has been. And that has been in the stronger dollar. And in addition to jobless claims, we also got the current account balance out for the United States, which surprised to the downside. We have a record trade deficit once again, as the strong dollar allows the U.S. to import more goods. How does this factor into your view on the GDP level, considering the prowess of the dollar and the ongoing sort of disinflationary object of that, but not the money coming back into the U.S. economy?
Yeah, so the trade balance has really been kind of swinging around wildly, which is kind of a combination of the post-COVID reopening phase of the economy as trade kind of got more fully restarted as the economies reopen globally, and then this kind of pattern of, well, you had renewed waves of COVID, which are disrupting goods. And then you had supply chain issues, right, which on top of that. So I'm really being very careful with that trade data right now in terms of interpreting it as any kind of longer term trend and where the economy is going. If I look at the effect of the stronger dollar, I think one thing that's maybe surprising, maybe even a little bit surprising to me and how this has played out, like Tom was saying, we have revised up our terminal Fed funds policy rate forecast to above 4% now. Wow. And getting there in the first quarter of 2023. So, we're really getting rates to quite high levels in the U.S. That's not an out there view anymore. The market has been pricing something not too far off from that when we were at higher yield levels. And the dollar, yes, has strengthened. But, if you had just told me 6 months ago, we're all going to kind of think that Fed funds effective is getting above 3.5%. Where's the U.S. dollar? I would have thought a lot stronger than where it is now. So I think relative to that counterfactual, it's maybe not as much of a slowing factor for the economy.
Andrew, I mentioned this earlier in the show, but when Powell was testifying on Capitol Hill yesterday and Elizabeth Warren was asking him if a rate hike would solve higher grocery prices or higher prices at the pump, his answer obviously was no. The Fed isn't equipped to deal with some of those more supply-side driven challenges. What is your confidence that the Fed actually can get demand down enough to the extent that it actually will offset persistent tight supply?
Yeah, it's a really important question. And, those questions that Chair Powell is answering yesterday and, again today just show how difficult this moment is for monetary policy and for policymakers. When there's a supply side constraint and it's persistent, the only thing you can do is damp demand to try to bring the economy back into equilibrium and bring inflationary pressure down. I'm very confident, to answer your question, that the Fed will be able to slow demand sufficiently to bring demand down. The issue is how much slowing is that going to be? How much of an output gap does the Fed need to create? How much weakness in the labor market? If you look at the Fed summary of economic projections, they have the unemployment rate that just moves up by a few tenths of a percentage point. So if you keep moving interest rates higher, if you keep tightening financial conditions, it will slow down the economy. The real issue for the Fed is not whether or not they can slow it down. It's can they slow it down and have it be a relative moderate slowdown and still get inflationary pressure down?
Andrew, thank you so much. Andrew Hollenhorst with Citigroup here with that shocking terminal rate statistic above 4%. I'm going to call that on the edge of outlier on Wall Street. Lisa?
Yeah, well, on the edge of outlier akin to Deutsche Bank, that no longer is such an outlier, as you're seeing that priced in the Fed funds futures. We're going to be discussing this as well as a host of other market issues. Samir Samana, Senior Global Market Strategist over at Wells Fargo's Institute. We're going to be speaking with her on the open. But we are watching, and Tom, you've been talking about this all morning. I do think it's really important. Maria Tadeo sitting down with the president of Lithuania as we look ahead to some sort of tension continuing to rise in Eastern Europe, Tom.
It's going to be fascinating as well. To help you with the geography, folks, from Vilnius over by Belarus, you go west on a road to Kaliningrad, which is Russian territory surrounded by Lithuania in Poland. It is hypersensitive to all Russians, and particularly to Mr. Putin with his St. Petersburg heritage. These have all sorts of, Lisa, third-rail attributes for Russia.
And how do we deal with this situation where any escalation draws in NATO? Right? Where is that line for Russia? Where do they not want to poke the bear? Or are they getting bolder as they make more headway in the eastern part of Ukraine? I mean, these are things that we wish we were not talking about. Yet the tragedies do continue, as you talked about earlier, with some of the fighting, Tom, that we're seeing. And we hope that there is some resolution.
Well, we'll have to see on the resolution. There's fierce fighting in eastern Ukraine. Lisa?
Yeah, right now we are seeing the rally fade just a touch with the S&P up about 0.4%. The NASDAQ up less than 0.6%. Yields still lower and actually heading south of 3% on that 2-year yield. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Both Republicans and Democrats in Congress are signaling there is little support for President Biden's call to suspend the federal gasoline tax. It's seen as a symbolic move by a president running out of options to ease prices at the pump. The president blames much of the increase on Russia's invasion of Ukraine. Germany has triggered the second stage of its natural gas emergency plan as Russia cuts back supplies. That has European gas prices rising. In the so-called alarm phase, Berlin will tighten monitoring of the gas market and reactivate some coal-fired plants. The German government warned this week that there could be further cutbacks in Russian gas. U.S. prosecutors say British socialite Ghislaine Maxwell should spend 30 to 55 years in prison for engaging in a sex trafficking scheme with the late Jeffrey Epstein. A federal judge will sentence Maxwell next week. Prosecutors called Maxwell a sophisticated predator. Bloomberg's learned that Tesla is taking steps to ramp up output at its factory in Shanghai. The electric vehicle maker will partly suspend manufacturing at various points through early August so it can upgrade production lines. The goal is to eventually double its original planned target to 1 million cars a year. And in sports, the 30 teams in the National Basketball Association will be hoping to find the next Steph Curry tonight in the annual NBA draft. U.S. colleges have provided the bulk of the league's players for decades. But now teams are also looking at Africa, where the NBA started a league in hopes of developing a new generation of stars. Orlando has the top pick in this year's draft. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg Surveillance, we say good morning to all of you. Kaylee Lyons and Tom Keene in New York. Our Maria Tadeo in Brussels. And now, as the Baltic states consider Ukraine as they consider Russia, a conversation with the president of Lithuania. Maria, good morning.
Thanks, Tom. And let's go straight, of course, with the president of Lithuania, Mr. Nausėda. From day one, you've said Russia is a threat to European security. Ukraine has to win, and we need to see NATO troops deployed in big numbers on the eastern flank. But I want to ask you about a very delicate situation for you. So I appreciate you taking the time today on Kaliningrad. When you look at it on a map, it's between your country, Lithuania, Poland, but it belongs to the Russian Federation, and the Russian Federation now openly accuses you, your country, of blocking transport from the Russian Federation to Kaliningrad. They say there could be real repercussions. Are you concerned?
We got used to that kind of manipulation, disinformation, and threatening. It comes very often. And we got used to have this very dangerous neighbor very near to us. And this is nothing special. I just want to say that this issue we are talking, this is not bilateral issue between Lithuania and Russia. I would like to remind you that in March, the European Council decided on the fourth package of sanctions, which include some ferrous metals, iron, steel, and also some luxury goods. And what is Lithuania is doing? Lithuania is just implementing those sanctions according to the rules and prescriptions of European Commission. Now we are in the situation where we have to apply those sanctions imposed, and this creates, of course, some tension between Lithuania and Russia. But I think that Russia is just acting disproportionately, and they are trying to use this opportunity just to blow the propaganda bubble. I would name this like this.
But when you say it's a propaganda bubble, what specifically? Because the Russians, what they say is that you're preventing the Russian Federation from supplying a territory of the Russian Federation, that is Kaliningrad. What's the propaganda that Vladimir Putin is trying to put out?
No blockade if we are talking about passengers.
Because that could mean a belligerent action. A blockade could be seen by Russia as belligerent.
It's not blockade because if we are talking about non-sanctioned goods, we are talking about passengers, there is no blockade. There is absolutely free movement between the territory of Russian mainland and Kaliningrad region through the territory of Lithuania. Now we are talking about this concrete group, and of course we need precise setting of just specific features and reglement how we can apply this fourth package of sanctions, and we are waiting for European Commission's explanation.
To give that guidance. I wonder, ever since the war started, is Vladimir Putin always on your mind? The idea that for Lithuania, the Baltics, this is almost an existential threat, potentially, too.
No, we are concentrated on our economic progress, prosperity of our people, and, you know, we don't have the time to think all the time about Vladimir Putin. Of course, we understand that situation in the eastern part of Europe is really dangerous, and we strongly condemned this war against Ukraine. We are a very keen supporter of Ukraine, trying to help to assist them by all means, by military means, economically, humanitarian means, and of course political component is very important too. So this is the reason why Lithuania is very enthusiastic supporter of granting candidate status to Ukraine, and I hope very much, and I am looking forward that it will happen this evening.
And of course you've said Ukraine has to win because it's the right thing, but if it doesn't and it gets defeated by Russia, the repercussions of that could be enormous for the rest of Europe. What do you mean by that, and what does victory of Ukraine mean for you?
The victory of Ukraine means a victory of just historic truth, because they are fighting for their freedom, for the right of the country, of the people of the country to decide about the future, about their destiny, and nobody else, and especially external forces, cannot decide where Ukraine have to do, what Ukraine have to do and where we should go. Ukraine is, according to I am fully convinced that Ukraine is European nation, because they prove every day by fighting against the aggressor that they defend European values, they defend democratic values, and so they are fighting not only for their freedom, they are fighting for our freedom, for the freedom of European Union too.
And sir, next week there's the NATO meeting. Of course, President Biden will be there. The Baltics, your country, you've said we need more troops here stationed. The eastern flank needs to be a priority. This is not just about China. Russia's an equal threat. What are you going to tell the President of the United States?
This is very important to have very adequate evaluation of the situation, what is happening in the eastern flank of NATO. And we see the security issue is becoming more and more important. The threats are materializing very fast.
It's a new Cold War.
I don't want to talk about some threats which are theoretical, but first of all we have to spend much more attention to the security of eastern flank in order to make deterrence factors as most effective as it is possible. And this is very important, not to show our willingness in case of aggression, but to show that we are ready to increase the number of troops, to increase the military equipment in our countries. And of course, very important is to switch to the current air policing regime in Baltic countries, to air defense regime. It is very important too. And I am looking forward that conclusion text of NATO will be suitable to cooperate, to work with the leading country of our EFP troops in Lithuania, namely Germany. I signed a communique with the German Chancellor Olaf Scholz 2 weeks ago. And according to this communique, Germany is committed to send additional troops up to brigade level, so the scale up for military presence in Lithuania. And I think this is very important to increase or to scale up the military presence of other countries in other Baltic countries too, in Latvia and Estonia namely.
Well, President, thank you so much for your time. We appreciate you, of course, in Bloomberg, as always, and your message is clear. Appeasement is not going to work with Russia. Thanks so much.
Very much.
Tom?
Maria, thank you so much. Maria Tadeo, in a conversation, folks, I honestly never framed in my lifetime. I never thought we would hear that kind of tone, those statements from a member of the Baltic states. Of course, balance of power drives forward the conversation, not in the Baltic states, on the Virginia state. Glenn Youngkin will join. This is Bloomberg. Good morning.
Done quite this many people. Thank you for your patience. We'll be bringing in some more chairs. We have a packed agenda today. The start, however, is going to be particularly important. Chris Krebs joined DHS in 2017. I think you all know who he is. He's the director of CISA, the Cyber and Infrastructure Security Agency. Long career in cybersecurity, both at DHS. This is your second tour, right, at DHS, second tour? And then previously at some of the big IT companies. So without further ado, let me turn it over to Chris.
Thank you, Jim. Good afternoon, everybody. First off, I want to thank CSIS, thank Jim and Cleet Johnson for pulling this event together. This is a significant conversation we're going to have today. You're going to have a nice range of industry and government participation, a range of agencies and perspectives that are important to setting and framing where we are right now on 5G, where we are, where we've been, and where we have to go. Before I start, though, I do also want to say I have to do this introduction because I still feel like I don't, as an agency, have the brand recognition that we need or deserve. So Jim mentioned my agency. We're the Cyber and Infrastructure Security Agency at the Department of Homeland Security, established last November by a stroke of the pen by President Trump. We were a pre-existing part of the Department of Homeland Security that owned and managed a lot of the communications security functions. We owned the relationship with the Communications Information Sharing and Analysis Center, the National Cybersecurity and Communications Integration Center. A number of these legacy functions were under the roof of our former organization, but with the establishment of the agency of CISA, it really put us on the map as an operational agency on par with TSA, I would say the FBI, but we're not quite there yet. We're getting there. But over the course of the last 2 years, since I've been in the administration, joining back in March of 2017, and coming out of industry, understanding the emerging technologies and the risks associated with them, working with other industry partners, trying to get our arms around what are the things that we need to be planning for right now, what are the things that industry is already planning for, how does the government need to support and enable U.S. and allied industry innovation. What are the things we need to do, and how do we need to do them together? So that was really the charge that I brought into the space, first in the Secretary's office and then down in CISA in the agency. And so to pivot back a little bit, I want to go back to last summer. Last summer, a year ago today, we held the DHS, the first annual, meaning we're going to do it again, the first annual DHS National Cybersecurity Summit. In that summit, we touched on 5G in a number of different capacities. We had the CEO of AT&T there. We launched the National Risk Management Center. These are all things that were driving towards increased attention, focus, strategy, technical and operations support for the future deployment of 5G. To understand why we did that as the agency, you also have to understand what I see as our role as the agency and where we fit within the administration, where we fit in terms of engaging with industry. So first and foremost, I see us at the Cyber and Infrastructure Security Agency as the nation's risk advisor. We work across government, across industry, to stitch together a cross-sector coordinated understanding of what the risk landscape looks like, and then we're able to pull together initiatives, working groups, and other bodies to manage risks and deploy capabilities and resources to manage that risk. So first and foremost, nation's risk advisor. We also have a mantra. Our mantra is defend today, secure tomorrow. What does that mean? So a number of our efforts and activities right now are focused on securing today's infrastructure, whether it's 3G, 4G, but it's also focused on making sure that the next generation, tomorrow's infrastructure, is secure by design, secure by deployment. So how do we do that? Mentioned last year, the Cyber Summit in New York, we launched the National Risk Management Center. The National Risk Management Center is a concept of partnership. It really is government agency partnership almost personified. The concept was to bring together the entirety of the federal government, whether it's the civilian agencies, the intelligence community, the technical agencies, the Department of Defense, everybody together for a single storefront for engaging the private sector on managing risk. One of the top priorities for the National Risk Management Center was 5G. Telecommunications, IT, supply chain, and 5G. One of the first initiatives launched by the National Risk Management Center was the ICT Supply Chain Risk Management Task Force. A number of folks in the room, or your companies or organizations, are represented on that task force. Interesting little stat that my team pulled together. We have 20 federal agencies, 20 IT companies, and 20 comms companies. That private sector contingent within the task force represents over $8 trillion in market cap. That's a pretty significant representation across the economy. So what do we do within this task force? Well, first and foremost, I've talked about our mantra, our slogans, but also you have to understand our ethos. Our ethos is working with the private sector, not pre-baking a government solution to 98% and rolling it out to private sector and saying, what do you think about this? It's starting more at the beginning, shoulder to shoulder in partnership with private sector, saying, here's what we're concerned about. What are you concerned about? How do we address these things together? So one of the first initiatives within the task force was pulling together 4 separate work streams. 4 work streams. The first work stream was threat information sharing on supply chain risks. The second was what is a risk management framework? What is the information that risk managers need? What are the gaps? How do they break through barriers like antitrust concerns, like liability protection concerns? How do we break through those pieces? The third task, work stream was what does it look like to develop a qualified bidders list or a qualified manufacturers list? How do we develop those incentives to launch such a program? And fourth, and this resulted recently in a policy recommendation, particularly within the federal government, how do we incentivize OEM and authorized resellers? How do we get counterfeit products out of the procurement chain? Now again, I talked about defend today, secure tomorrow. This is about laying a framework so that as we shift into 5G, we have the solid foundation to make the risk management decisions. We have the tools and the techniques to execute towards a more secure delivery. Also within the task force and the National Risk Management Center, we've launched a couple of capabilities in risk assessments. First, just released today, was a risk characterization of 5G deployments. Jim, you were cited extensively within that document, including your market penetration assessment. That's important because the policy conversation often in DC is very binary. But 5G is much more than that. There are various segments, there are roles, sub-roles, and elements of what a 5G deployment looks like that requires a much richer, robust conversation. And so within this risk assessment, we've teased out three primary concerns. First, there are technical vulnerabilities in any 5G deployment. There are logistical and there are physical vulnerabilities. So to pull back on the logistical vulnerabilities, what are the supply chain concerns? Do we have trusted vendors, sufficient trusted vendors in the marketplace? Who are the untrustworthy vendors? How do we encourage and incentivize more trustworthy diversity of options going forward? On the physical vulnerabilities, 5G is going to require significant surface area, additional radios, things of that nature. So it's only going to increase the potential attack surface for adversaries. How do we mitigate and manage against that? And lastly, are those technical vulnerabilities. As we bring forward, as we deploy 5G, it's going to be built on 4G. It's going to be built on 3G. What vulnerabilities are we inheriting from the prior deployments in the immediate 5G deployment? So we developed a series of 6 mitigations and 6 recommendations. The first is, from a U.S. government perspective, continue to encourage the development and deployment of trusted 5G technology, equipment, and services. Second recommendation, continue to encourage future generations of technology, equipment, and services. The third, standards. Ensure that we're sufficiently engaging, appropriately engaging in the standards community globally to advantage open and trustworthy technologies. Fourth, we have to limit the adoption of untrusted equipment. Fifth, private-public partnership. We have to continue working together between government and industry to understand what the challenges are and to deploy mitigations that are collaborative, coordinated, and effective. And then finally, we have to continue pushing for security capabilities across applications and services. Recently, the CSDE, which is a conglomeration of corporations and interest groups, have put together an IoT security baseline. Those are the sorts of things that can contribute to ensure that applications and services going forward will be trusted. But the primary takeaway across all of this is that when you see up here today, you're going to see a range of federal government agencies. It's going to take all of us working together. No one agency is going to be able to engage in this conversation, this dialogue, and these deployments going forward. So it's going to take all of us working together. We're working on that. We're working on that at the strategic level, the policy level, and the tactical and operation levels. We are coordinating within the government. You will hear the perspectives later today from the government players. But it also requires very close coordination with government and industry. Industry, again, has informed a number of our efforts within CISA, the development of that risk characterization, the development of a risk assessment we did under the recent telecommunications executive order. It requires the technical expertise, the roadmaps, the architectures. Who knows how these deployments are going to work better than those that are engineering and deploying them now? That has to come into the government space. And lastly, it requires trusted and confidential working relationships. So in part, it's the task force, but also with the recently launched latest iteration by FCC of CISRIC. Those are venues that we can work together to understand what the challenges are, what the concerns are, and how we're able to address them all together. So again, the call to action here is government, industry continuing to work together. Today is a seminal kickoff event down that road, so thanks to Jim and Cleet for pulling it together. I'll be back around at the closing panel, but appreciate the opportunity to speak and see everybody, and enjoy the rest of the day. Thank you.
Chris, or Mr. Director, as I call him now, thanks very much for those remarks. And I think it speaks volumes to DHS's commitment that the head of this agency is going to be here for the next several hours and help us close out to talk more about that industry partnership and interagency partnership. So first, if I bring up the next panel, I want to introduce 4 terrific folks, experts, who are going to be moderated by good friend and former FCC colleague Kim Hart of Axios. Kim is probably one of the only journalists in town. I know there's some other super smart, informed journalists here who has lived and breathed the communications world and can tell you the difference between a radio access network and a core network. And she's going to be surrounded by some real leaders in this field, both on the technical and policy side. Jason Boswell, who's the head of security for Ericsson North America, and right here, Peter Lord, who's the head of strategic initiatives for Oracle. Susie Armstrong, the senior vice president for engineering at Intel. I'm sorry, Qualcomm. Intel's coming up next. And John Godfrey, the senior vice president for public policy at Samsung. Take it away, Kim. Thanks.
Afternoon. Thanks for being here, and thanks to our panelists for being here too. My job is really to just tee up the conversation to let the real experts talk, and this will go by really fast because there's so much ground to cover. So to just start with a bigger scene setting question to follow what Director Krebs laid out. John, I was wondering if you could help us kick off by kind of talking about what the 5G market looks like today. There's so much noise around it, and even I think a lot of the media reports even confuse kind of what 5G is, what it can actually enable, who the different players are. Could you maybe just give us a broad overview of where is it being deployed, by whom, what the time frame is that we're looking at, just as kind of a way to set the stage?
Sure, I'd be happy to. And today is pretty exciting because this morning Verizon announced that Washington, D.C. 5G mobile service has turned on, so I can't wait to get that signal. I have a Verizon 5G phone, and I haven't added the 5G service to the phone yet, but I hope by the end of today, I will be downloading movies in 1 second.
Of course,
that'll be fun. 5G has launched commercially in South Korea and in the United States, and they're certainly deploying it in China as well. So there's some deployments happening in Europe and the Middle East, but the United States is really in a leading position along with South Korea. And in the U.S., all the national carriers have 5G plans. The equipment provider market is very competitive here in the U.S., even without the Chinese vendors having a strong role here or any role in the 5G market here. But Ericsson, Nokia, and Samsung are all supplying 5G network equipment in the U.S. Samsung also supplies 5G chips, as Qualcomm does, and others. And we have 5G mobile phones from Samsung. So we've got all the parts of the 5G ecosystem. But it's deploying in the U.S., and it is both a mobile broadband service for consumers to enjoy on their smartphone. That's the obvious near-term thing that people will be excited about. But it goes far beyond that. We're looking at enterprise installations of 5G in a factory or a sports stadium or down a roadway for transportation applications. And we're looking at a lot more use of 5G in the Internet of Things. Right. So that's how the market's going to be evolving.
So to carry on the last point there, when we're talking about 5G security concerns, where do the biggest concerns lie for, and anyone feel free to chime in here. Oops, that was my phone, sorry. Is it more on the security of the data itself, the huge volume of data that's going to be flowing through across all of these different interconnected devices and the Internet of Things devices that it enables, or is it more on the applications that ride over the network, or is it both?
If
Go ahead.
I think it's both, and I think with 5G, as John mentioned, connecting things like with the IoT, connecting things like cars and healthcare and such. I think the use cases or the applications that run on top of 5G are very much a concern. I always joke, I'm worried about somebody hacking my pacemaker in 10 years. It's not really a joke. And then I think the amount of data that flows over 5G networks, some very high percentage of the data that it currently trains AI with machine learning already comes from mobile phones. So I think with the IoT and sensors and actuators uploading data and acting on that data, I think that's a concern as well. But I think the focus on security, I don't think it's a dystopian world right now. I think it's really good focus on security. I think there's lots of good work happening. I also think in the 5G standard itself, there's many mechanisms doing network slicing and such to be so that the air link at least is much more secure than 3G or 4G. Now you still need security in your applications and your use cases on top of that. But I think 5G represents both some risks and broadened attack surfaces, but also some opportunities.
Well, if I can pivot on that, the opportunities, as we look at how the 5G architecture changes, as it's moving towards the data center on the back end, that really allows market participants that work in the cloud, Oracle, we can actually differentiate our cloud on enterprise security. Well, wait a minute, we can apply that technology to the back end of 5G, and we actually sell 5G and telco technologies in 3 and 4G as well. And I think that's the real hidden gem here, is that this technology is pivoted to a sweet spot of the American economy, right? If you look at how many companies are innovating in cloud, how many companies are innovating in the data center, this is really a place where you can take all those things that we're learning about security, how to do it right, how to do it at enterprise-grade scale and securely, and apply that to the telco backend. I think we're in a really great position.
And Jason, to bring you into this discussion, can you kind of break down for us a little bit about the different pieces of the network and how that differs from 3G and 4G?
Well, so from an infrastructure perspective, when you think about 5G or any kind of mobile network, I always think in terms of layers. Right? And in security, we talk about a term defense in depth. And what does that really mean? Well, that means there's layers to it, right? It's not just one slice of cake, so to speak. So when we talk about, you mentioned the threats before, I think about not just the threats themselves, but how is the risk amplified or changed in different way, because that one threat may have multiple now vectors into the network, not just a single way in or a single way to disrupt traffic or service. So thinking about risk in terms of those layers, of course, we think about the RAN, the transport network in between, the routers and switches that are moving the packets along, and then the core itself. And in past days, those were kind of pretty separate things, all the way back to 3G, literally disparate physical units. But as we get closer to a service-based architecture, towards cloud-based environments, everything's virtualized, those lines between those segments start to blur a lot.
Can you stop right there and just kind of give a description of what virtualization means in this context?
Okay, yeah, so in this context, it would be taking an element that has a specific kind of function. Like say, I need to complete a call, I need to do charging and billing, I need to authenticate or authorize a subscriber, things like that, or just enable services. Each of those is functions throughout the network. We started with 3G with maybe a dozen to 15. In 4G, moved up to about 24 functions. Now 5G is going to add roughly another 24 on top of that, not replacing, but likely on top of, and predominantly virtualized. Meaning we'll take that function and we can put it on a server. That server could be decentralized from the data center, moved out to a cloud, for instance, and it still enable that same function to happen. But if that server becomes overloaded, or we need more of that function right now, we can bring more online very quickly without literally having to forklift, giant pieces of equipment out of a data center, hook stuff up. It's automated and orchestrated on the back end to enable that to happen seamlessly. So that's what virtualization, when we say that, we're spinning up or down functions on top of equipment and servers as they're needed. So from a security perspective, we can do that too. Now with things like network slicing coming into play, we can also spin up virtualized security functions on demand to tackle DDoS attacks or other types of service disruptions, or further inspect different kinds of traffic more discreetly to ensure that bad traffic is not getting through, right? We can now do that on a network slice. Think of it like a virtualized function that goes left to right across things. We also have to be mindful, though, of the vertical aspect of a network. So all throughout that core, the transport layer, the RAN, we now have vertical components too that go up and down the virtualization stack. So if you put those two things together, we have horizontal paths through the network, and now we have vertical ones up and down as well. You put that together, it kind of makes a lattice work, if you will. So as we think about risk, tying it back into the threats you talked about before, thinking about risk now, each of those points where things intersect becomes kind of a risk inflection point. And then you add it all together as the traffic flows to the network. It's an exponential risk calculation, not just a linear risk calculation. So I think that's why a trusted network and having all points that meet up with that traffic flow, having those be trusted and resilient is more important than ever as we put more services towards critical infrastructure.
So that tees up the next question perfectly, which is how are your companies and the broader industry working together to make sure that there is a trusted ecosystem and that vendors trust each other to be information sharing, or that the information or that the equipment that you're interfacing with is secure?
Yeah. We've done, I'll make a short statement there. It's been fantastic, actually. I've been in this industry for over 2 decades, and the work that has happened just in the short past few years has been moving at light speed between government and the public or the industry sectors. The progress that we made with things like the supply chain task force, but also working together with industry groups and with NIST, seeing NIST kind of reach out across the ocean and collaborate with 3GPP and with GSMA and with the IETF. It's all kind of coming together now in this wave of leading to how can we make sure that 5G is yes, fast and flexible, but also trusted and secure, and that innovation doesn't get left behind.
I think I'd add to that where the ability to participate in the standard setting process, collaborate there, but also in forums like this, as we start to talk about what are the risks, again, allows these new vendors, new entrants in the marketplace, or I guess new for this conversation, we are able to apply new technologies to that same risk calculus and actually bring new ideas to the table.
Indeed, yeah.
And the ability to go back and forth amongst industry as well as government, it's really powerful.
Like informing with concrete things. Yeah, I think that's like what Director Krebs was talking about before, like not just here's the 98%, now figure out if that works or not. Informing at the front end of it has made it, I think, a lot more, will be more effective later.
And I'd just like to say, so Qualcomm's, I've been in this industry that long too. And you can do some math on my previous role in Ethernet before that. But Qualcomm does much of the long-term upfront research that actually goes into the contributions to the standards, to the making of the products. Without that kind of research, you don't have anything to contribute to standards, and you ultimately don't have anything to make into products and nothing to deploy. And we have seen over time, so we've always worked very closely with, so we make the technology, we license the technology, we lead in the standards, and we also make chipsets that go into your phone or IoT devices. And in that ecosystem, we have worked very, very closely with the infrastructure manufacturers, with Ericsson, with Nokia, used to be with Motorola, with Lucent. We've worked very, very closely with the carriers, because even after all that technology and all that equipment is made, it's non-trivial to actually deploy it, in tough terrain systems. So the industry has always worked very closely together, and in some areas we compete as well. And to your point, in the last couple of years, it's also very good to see that governments are getting involved, and that the U.S. government realizes the importance of this piece of infrastructure, if you will, that's as important as your roads and your ports and your dams.
I would add just a couple of quick things, Kim. Definitely the first stop for all companies to collaborate in this area is the 3GPP, global standards body. That's why the world has mobile that works, and that you can roam around the world, is because of the standards process. And as Susie was saying, they've incorporated security features into 5G that didn't exist before. There's also the Open RAN initiative, which several of us are members of, which is defining some implementation profiles for how to implement the 3GPP standards in particular parts of the network to allow even more interoperability and diversity in the supply there. And as far as working with the government, we participate, as the others here do, in the DHS Supply Chain Task Force. And it has already come up with some recommendations that Director Krebs mentioned, and more will be coming. It's really important that the government act on those things. One thing I don't think we've touched on yet is, in addition to the 5G network and devices that follow the 5G protocols, there will also be a lot of IoT devices that are maybe hanging off the end of the 5G network, and it remains to be seen whether those devices will themselves have 5G chips in them and be part of the managed 5G network, or whether they might be behind some kind of a router or access point. But in any case, we would expect that 5G is going to drive a lot more adoption of IoT. So there is a multi-agency activity underway, but especially led in the Department of Commerce in NIST on developing some baseline requirements for IoT security. And those will be very important too for industry worldwide to adopt to mitigate risk in the IoT part of the system.
And so much of this conversation and security specific piece of this conversation has been focused on the global race, what other countries are doing, and particularly China and Chinese players, and what that means for the rollout, not only globally, but in the US. When we're looking at how the 5G deployment is going in the US, what grade would you actually give the security component of that? And what are some of, if there is anything, what is the bigger, is there a bigger story or question that people are missing in kind of the big obsession with China?
Well, I'd jump in on the whole race argument, and it goes back to the standards, right? It's not done yet. Right, the standards are not yet complete. And so what we're seeing is additional adoption on the radio side, and then we still have to roll out the full suite of virtualized services on the back end. And I think what we're going to find is that's still a lot of work to do, and that's going to be a great opportunity, right, for leading countries like the United States to take a real forward step and frankly keep our leadership as we roll out all these other great new services. And we talk about network slicing, we talk about all the ORAN technologies. We've got a lot more we can do, and I think we're not behind.
Kim, I think the race that matters is the race to deploy 5G and then reap the benefits that will be innovated on top of the 5G platform. And that's not what people always talk about when they talk about the race to 5G. Sometimes they say, which country has the most patents in the standard? I think that's looking at the wrong place. The fact is the standards actually do have patents from many, many different companies and many different countries, so no one is dominating the standards part of 5G. But that's not where the economic value is anyway. The economic value isn't as much in the network either. It's in the new innovations that are going to be built on top of it. It's very important for the United States to stay in the forefront, making spectrum available, streamlining cell site deployment, and doing other things to enable US deployment of 5G so the next innovation can be built there. Nobody really predicted that 4G was going to be used for social media and ride sharing, and I don't think we know what 5G is going to be used for ultimately until the platform is deployed. I would give the United States an A grade on one thing in particular, which is the cooperation that's happening between the government and the private sector. And there really is a whole lot that's happening, as Director Krebs talked about, a lot of information sharing that's happening, and I think we're doing a great job there.
If I could just comment on that. Multiple people have said here, and it's true, that it's not like a race, like a running race where you reach the finish line and you collapse or win. The standards, each release, the standards go through multiple releases, and so as you say, different features get added in over time, and then of course operators choose which features to actually deploy in the network. But John, to your comment, it is incredibly important that the U.S. maintain leadership in the standards, because leadership in the standards is a sign of leadership in the upfront R&D that has to happen. Without that upfront R&D and without that leadership in the standards, you don't have the foundational technology that equipment is actually built on, and without that equipment, you have nothing to deploy. And it's a much harder lever to grab onto, how the government and industry help support that upfront R&D, because it's not as immediate. It's things like, supporting the patent system that's given us this innovation. But without that upfront innovation, the U.S. will immediately cede, will immediately cede leadership in the R&D and ultimately in 5G and beyond to very competent people in China. And so I think you cannot underestimate, the patent counting and such is not very valid. I agree with that in the standards, and the contribution counting is not terribly valid either. But you cannot underestimate the power and the threat to innovation that is potentially happening, and what will happen regardless of what day the network gets turned on, what will happen in the long term if we cede that leadership.
I don't disagree at all. The U.S. has to stay in the game. We are in the game, and we need to stay there, for sure.
Yeah.
So in terms of staying in the game, in many ways, I think we kind of, we created part of the game. We wrote the tests if we're going to be graded, But if you look at kind of from an evidence-based standpoint of U.S. telecommunications today, based on the reliability, the speed, the security that we see throughout U.S. telecommunications infrastructure today, I think you'd have to say that we're a leader in the world in that space. And so we would get an A today. The difficulty comes in that like going to school and having to take your final every day. We have to get graded every day. So tomorrow it's another grade, and the next day it's another grade, and we have to continue to stay ahead of that pace. And when we're talking about critical infrastructure, and as we move into 5G, critical infrastructure is more and more what we'll be talking about, because the use cases will be critical. It will be things that deal with life and limb and property, autonomous vehicles and remote manufacturing, and things that we can't get wrong. So good enough as a grade has never been good enough for us, and it definitely won't be good enough in the future. So that's why I think it's important for the U.S. to, as you mentioned, work hard to maintain its leadership in telecommunications and in security, and also kind of advance and further promote what we're doing in standards organizations.
Can we pivot a little bit to the supply chain question? Because that was something that Director Krebs brought up as something that he's really focused on as well with the task force and such. What are the benefits of a robust competition when it comes to suppliers in this area, and what should the government be doing to ensure a secure and robust supply chain?
Well, I think, from a competition standpoint, what we've seen kind of illustrated in talking in terms of like public-private partnership and all the collaboration we've done is that, especially in the U.S., what we've seen is not just competition, but co-opetition almost. Working very closely with our competitors, going toe-to-toe in a market sense, but then being transparent and open enough, and in the interest of creating the best networks that we all can together, to then go sit down in a room after that market bid is done and say, okay, now how can we make the network better? How can we make the standard better? How can we work with the operators better and work with government better? And I think in the US, it's been a real good examples of that. And some of those have come out in the forms of government leadership with things like the NIST cybersecurity framework, where we all got in a room, gave our opinions on things, and NIST came to us and said, the industry, So what works here? Tell us what doesn't work. What's adoptable? What's realistic? We've looked at same things with IoT, cybersecurity now as well, with groups like CTIA and recommendations on cybersecurity testing programs, right? So we're kind of trying to give guidance on ways that we've seen from a real world perspective work. And having robust competition across the US market, I think it keeps everyone on our toes and keeps us all striving to do our collective best.
Go ahead.
I was just going to say, I couldn't agree more. And one of the things I'm really excited about in the virtualized network space is it brings in people like Oracle into the infrastructure space, which, you know, we never really thought of you in the infrastructure business. But I think, just as you said, it keeps everybody on their both on their toes, and it brings in new talent and new ways of thinking about cellular networks. You know, Motorola went away, Lucent went away, and it's very unlikely that some American company is going to come up and start to build traditional cellular infrastructure. But with virtualized networks coming in, we pull in the expertise of all these different companies. So that's a very healthy dynamic. The dystopian future, if you will, of, you know, sort of one vertically integrated you know, company or country, you know, controlling every aspect, the chipsets, the base stations, the, you know, the standards is, I think that future will not come to be if we pull in a variety of players and expertise.
I guess we're optimistic at Samsung. We've obviously been in the forefront of the mobile handset side of the business for a long time. We're relatively newer to the top ranks of the market on the radio access network equipment side, at least for the moment. Del Oro Market Research has us leading the market worldwide in 5G network infrastructure. Now, that may be largely due to our strong position in the South Korean market, where there's been a kind of very rapid deployment of 5G mobile infrastructure across the country, and you know, the United States is rapidly deploying now, as well as China and some other places. But Samsung's excited to compete in the 5G market. I think the most important thing the U.S. government can do to stimulate 5G, I thought you might have an answer, Jason. I look forward to hearing it.
I was just
the most important thing the U.S. government can do is hasten the deployment of 5G. That attracts investment and supports multiple entrants coming into the market to supply the network equipment. And then as far as the other aspects of ensuring that we have a secure and trusted supply chain, I think the DHS task force is critical to that. They're working to define recommendations on what is a secure supply chain and what is a trustworthy supply chain. And they expect to incentivize those things through education and also through changes in government procurement regulation.
Yeah. So I'd like to add something on the supply chain element. You know, when we start thinking about these interconnected networks, we've got to think about the folks who may be less cash rich, that have smaller networks, right? The rural carriers are really going to find pressure to figure out how do we get this new technology. I think that's where we can come in, and as we look at virtualization and different deployment models to the cloud, all of a sudden you can start innovating. You can start to say, hey, wait a minute, we can lower your cost of adopting this brand new technology. You know, we can provide a whole bunch of different ways to access the technology. That allows you to compete, right? You can compete against lower cost technology suppliers, right? And actually be competitive in that marketplace. And I think that allows you to really address the supply chain risk of everyone in the ecosystem, right? Not just the large players, but all the different participants, whether it be, you know, enterprise users or the small rural carriers as well.
Well, thinking about the security of a supply chain, some of the things that we talk about in security are also speed and resilience and flexibility. That also makes something reliable from a security perspective. So when we think about supply chain, sometimes we get lucky and we have market factors or business decisions that influence or that go with security drivers. And for Ericsson, that was our case. We started back in 2018 deciding, well, the US is our biggest market. How can we move closer to this market from a supply chain perspective? Because we need to be more agile. We need to be able to move faster, get product to where it needs to go quicker. So we started actually a regionalization effort, not just in the US, but throughout the world, to open up new factories, and we're opening up a factory in the US to supply 5G equipment. Because from a business decision standpoint, it makes sense. Now looking back a year plus ago when we started to make that decision, and it was a business driving decision, oh, let's just be closer to our market. Now it seems very fortuitous in that, oh, well, hey, having manufacturing that's closer to the US market has other benefits as well. But when you look at supply chain, like some of the things we're talking about in the task force, is looking at the facets of it, of how flexible is it, how resilient is it, is there a way to quantify those things and stipulate what does a trusted supplier mean? So I think it's good that the program is working through those terms and definitions, and then it helps inform everybody to make better decisions.
If there's one thing that you're all very optimistic about the grade that we have right now in the US when it comes to security and the future and how the ecosystem is working together. But if there's one thing that kind of keeps you up at night as the thing that people that you see off in the future, or the security risk that people aren't really talking about yet, what is it?
Probably the security risk that people aren't talking about is the one that we don't know about yet, in a way. I know, yeah, you're welcome. You're welcome. But no, it's true. I was thinking about this, and actually, so earlier when I talked about the concept of a risk matrix, right? Identifying areas where we can mitigate certain risks in advance, where we can identify this is where a threat vector for something might come in whether it's on the radio unit or it's a small cell tower in a dense metro area, looking at it through different lenses to say, okay, well now we have a much larger densification of small cells in urban areas, right? So it's not just one big tower. One big tower is easy to put behind, in a secure data center, behind a fence. There's physical protections that we can make for that, right? So 1,000 small cells in New York City that are on the sides of buildings have a different physical component to them in terms of accessibility or disruptability. So in security, we're trying to think of things in ways that are not just looking at the threats themselves, but the risk. So, and that's actually something that we're doing from a quantifiable standpoint in the task force right now, is going through that risk analysis, and we've got about 55 different scenarios that we've worked through in a short amount of time, and that kind of informs on, for your sector, so we're trying to look at it in terms of all of the ICT sectors, not just telecom, right? In terms of critical infrastructure, how can you take this as a takeaway and just learn how to better mitigate this kind of risk? Because it might be a different threat vector tomorrow or the next day, or a different kind of DDoS attack, and it likely will be as they keep changing and morphing. So I think changing the discussion a little bit to think about risk mitigation, not just threat avoidance, will help us stay ahead.
I'd like to focus a little bit more on the need for cross-training. Right, so we've got some cross-training, right? We have two kind of different communities that are really trying to start to work to deploy this technology, right? We've got the old world telco community where they make certain assumptions about their deployments, about how it's disconnected from the rest of the network. The control plane is actually separate from everything else. And we have some really great skill sets and knowledge on the enterprise side. How do we make sure that transfer of knowledge goes to the data center? And similarly, in the data center and the cloud, we've got some great skill sets. How do we make sure we can apply those to the operational technology we need for running these networks? And I think it's that cross-training that really provides, it's a gap that we need to, I believe, really address, because it provides a challenge for all these communities as we're adopting the technologies and pushing it out. I think there's a lot of benefits from the cross-training, right? That we're going to be able to address some of the workforce challenges that are going to be as we start deploying all of these, sites everywhere. I think about that as more of an opportunity where if you get it right, you're actually going to strengthen not only the telco networks that we require, but get a lot of benefit in the enterprise networks that we're supporting in the IT world.
I think what keeps me up at night is the fact is that as a computer scientist and an engineer, there's many vulnerabilities put there inadvertently by well-meaning software people like myself or hardware people, not necessarily malicious backdoors. And so much of the conversation right now is around malicious backdoors that I think we're missing the fact that we need to do maybe risk mitigation for all kinds of backdoors that could be exploited by state actors or by somebody in their garage. And I think in particular, what I worry about is the IoT. I mean, back to your very first question is how do we do that risk mitigation for the IoT, which has such promise, and how do we take the conversation, broaden the conversation beyond the current, concerns about particular bad actors, and realize that we need to do this sort of across the board, because security holes can very often be, and I think are most often, inadvertent bugs that are introduced.
I think it's the IoT for me as well. If it's devices that are connected to the internet that are not being managed by a network operator, then whoever set up that device needs to know what they're doing, or they need to have the tools to make it easy for them to set it up properly. We also had a great example, I think it's coming up on 3 years ago now, at the Mirai botnet attack, of what can happen, and we need to not forget about that, because that could happen again.
Yes.
And it's not a new threat because of 5G. I don't think there's something fundamentally new about moving from 4G to 5G as far as the Internet of Things related risks, except that I do think that the IoT is going to grow more rapidly and spread more ubiquitously throughout our world because of 5G. And that's really simply because there's going to be the bandwidth and the ability to connect a larger number of devices wirelessly. So make it easy to deploy the IoT a lot more broadly.
And if all those devices and that explosion of devices are all on the edge and completely out of control of the network providers and the
partly out of control. They can mitigate if they see something bad happening, but you're right.
But with the explosion of it, isn't that going to make it almost impossible for you to be able to see everything that's happening on the edge and be able to mitigate it quickly?
Well, I think that threat surface has increased for sure, but as you decentralize and distribute and virtualize a network and you move it out to the edge, like your scope from an analytics perspective and trying to find kind of what's a bad actor or what's a bad flow even, that potentially kind of shrinks a bit. So your ability to deal with it actually is amplified from a network slice. You can use things like network slicing and spin up different software loads to do other kinds of analytics or black holing bad traffic and things like that. So if like this whole stage was a network, and it used to be this one big tower, and now I have maybe these are small cells, these little tables, but I have a whole bunch of them, my threat surface is increased, but if I can limit to the attacks really only happening right here in front of me, then my ability to kind of focus on it and deal with the problem actually increases a bit. IoT is certainly still definitely a big concern because of the scale of it and the nature that something that's potentially outside of our control can negatively impact us. You mentioned Mirai 3 years ago. Every year since then, Mirai has continued to be the number 2 or number 3 top botnet for that year. It's just a variant of it. So you just take the same thing, it's a variant, and it's again, the largest or most significant botnet for that year. 3 years on, that should be alarming, right? Because that means just we're continuing to not fix certain things. So you mentioned training. I think education is important there, and DHS with their cyber hygiene and cybersecurity awareness month and pushes towards the SMB on greater cyber awareness, I think has been very helpful there. There's another one coming up in October. things like that to kind of push down towards the SMB space. It's an important decision that they have to make on quality and security and reliability sometimes of maybe making good choices of what they're buying, or in some cases not buying. If you're getting something that looks like $100 pro photo software, but it's free for you, then it's not really free, right? There's something else, there's a give and take there.
Right.
So smarter choices there, I think, will help the SMB space. It's the other side of that coin from the telco and providing the service side of it.
Got it. And I only got through half of my questions, but I know that we are running a tight ship here. So I'll end it there, and thank you so much for our panelists for being here too.
Thank you.
Well, sorry for the tight schedule, but we are moving into the next session, which will be a discussion, the international landscape in 5G security and innovation, between me, Jim Lewis of CSIS, and Ambassador Robert Strayer of the Department of State. So thank you very much for coming out today.
Thanks a lot for having me and for hosting this.
Sure. Let me start by asking you, I've been pestering Rob now for a couple months about what's up with the Prague principles. What do you think's next with them? People, you might want to remind people what the Prague principles are.
So, one thing we identified in the last several months as we started talking to a number of countries about our concerns about the importance of improving 5G network security and making it more resilient. We noticed that a lot of countries were asking us what are general principles that should be applied to improve the security of the networks. Unlike some of those who say that we're not out there just talking down a few companies from one particular country because of our concerns. We really think there's a way to adopt a set of broad-based principles to secure 5G technology. During some of our discussions with other countries, including the Czech Republic, they noted that they were thinking about hosting a conference that was going to focus on how to develop a set of principles across a number of different topic areas, including policy, security, contracting related to the economics of 5G. And so they hosted almost 40 countries in Prague during the first week of May of this year. And what came out of that conference was a set of principles, roughly 20 of them, across those different topic areas that will help ensure, if countries adopt those set of principles, a free and fair, transparent, and rule of law based technology infrastructure for 5G. Since that conference, we've been talking to countries about more specifics in how you would implement those principles. And we look forward to being part of future discussions about the implementation and what we specifically mean along different lines of those principles. One in particular that's very important is talking about the legal system and the ability of a third country to influence a particular vendor. We've reviewed the Chinese national intelligence law and are very concerned about the ability of China to influence a vendor to take actions with respect to technology that are not in a country's interest but are being driven by the intelligence services and security services in China. And I should say this all fits in a bigger framework of us saying what we need is a risk-based security approach to 5G networks. And as part of that, we need to look very closely at the supply chain, in particular because 5G is going to put the vendor in a privileged position of being able to update those networks with the massive amounts of software that are going to be more and more part of our telecom networks and the unique applications that are going to ride on top of those, including for our critical infrastructure. The additional amount of software means that there's going to be patching and firmware updates occurring on a very regular basis. So that puts a vendor in a very powerful position. We need to have only the most trusted vendors in that position with regard to the networks.
You said 40 countries. What's the lay of the land there? How are the Europeans responding to this? In particular, The Germans put out their own principles a couple months ago. They're parallel to some extent what came out of Prague, but where are they and where are the others?
Yeah, exactly. So I think the first country in Europe to come up with a set of principles was the European Union itself. It did so. The European Union Commission announced a set of principles in late March of this year. And those were across a waterfront of issues, but of course they also included a provision to look at the vendor country, the country where the vendor is located, and its model of governance and the ability of that country to influence a vendor. So that was the kind of initial movement by the European Union to look at this. And then we saw Germany come up with a set of principles for evaluating the security of their networks, which included the ability of the vendor to abide by data protection laws that apply in Germany. Since then, we've seen the European Union ask all of its member states to do a national assessment of the security posture with regard to their telecom networks, and those were to be submitted to Brussels in the middle of July 15th. The next steps are for there to be a kind of a European-wide assessment of security, and then them to develop recommendations by the end of the year on securing their 5G networks. So I think the Prague principles are well timed to work with this European Union process to identify additional measures that are being put in place to secure 5G.
What do you think the timeline is for the Europeans?
Well, they aim to reach a conclusion on recommendations by the end of the year, but we're already seeing a number of auctions start to take place. I think you could see some diversification in how different countries approach the issue within the European Union. And I think we'll continue to see evolution of the principles over time. We've seen a number of countries talk about bifurcating a process where they're looking at technical issues with regard to 5G, looking at, if you will, core 5G security, authentication, who has access, how the networks are architected to be the most secure. But they have also recognized there's a separate line of effort that needs to take place that looks at the threat, that looks at the ability of a particular vendor in a privileged position to take action that's not in that country's national interest. And as I mentioned before, because of the ability to do patches on a regular basis.
This one, you can skip this one if you don't like it, but the commission's about to turn over, at the end of October. So do you think that will change what they do on 5G, or will you see continuity there?
Well, I think every commission has a different focus, and they build on the previous commission. So I think we'll see additional sets of issues brought into this discussion. In some ways, this process was kicked off by the previous commission, so you'll likely see the new commission adopt it, but also likely amend it to meet it the way they see the world, as they do in the fall this year.
One thing you hear sometimes when you go to other countries, particularly outside Europe, is they're not aware that there's alternatives to buying what they could use for 5G technology. And in some ways that's sort of a sales issue for the US. I mean, people don't know that there is more than one company that sells this stuff. When you talk to ASEAN, for example, that's what you hear. What's the US doing?
Yeah, it's a really good point. So we're definitely out there. The first thing, we're making sure people understand. This is a security discussion. This is a economic success discussion, economic growth discussion, that we're recognizing the true high level of importance of 5G to all kinds of future critical infrastructure and the data economy, the ability to do artificial intelligence in the future, because it all depend on the data that's going to be generated by the Internet of Things devices on 5G. So we want to say we have a very positive outlook on this. That's why we need to ensure that we're securing the networks. Right now, we have a sort of market failure that's gone on, where we have a very limited number of vendors in the radio access network area that are basically supplying the basebands and the towers, the transmitters there. And there is inability for other vendors to get into that because they're using a proprietary types of technology to connect their towers and their towers and their base stations. So we're definitely sure to highlight that there are companies that are not American in this space. So we're not arguing about our concerns about certain vendors, because we're trying to benefit an American company in particular. The leading competitors to the Chinese companies are in Sweden, Finland, and South Korea. But the long-term future is to see a broader ecosystem of vendors to get into this place, that a lot more players are providing components to the larger ecosystem. We already have a number of Western companies in the core network that are supplying the base computing, the storage, the switching, the switching and routing, and those are companies that are on the panels just before us. The next step will be to think about how we can diversify the radio area network as well. So we're talking to countries and trying to explain the full scope of why we're doing this, who the players are in the space, that there are alternatives to the Chinese companies, that the technology is not any better than anybody else, that we need to sort of demystify the components. There's a great propaganda campaign out there to try to establish that there is one company that is so far ahead of everybody else that there will be no way that you could go with another set of technology than that company. Well, the truth is there's companies that basically the same number of commercial contracts out there today. And with respect to the United States, we're leading the world in commercial deployments in our medium and larger cities. And all of those are being done with non-Chinese vendors.
And I think the next panel will touch on the open radio access network and some of the open source technologies that might open the market a bit. But when you look at this, who are your best partners overseas? Who are the guys you work with most closely?
So we work with a large number of countries that are thinking about moving to 5G, and so somewhat in the eagerness they have to go to 5G, or that makes our discussions more robust. We're obviously working very closely with our Five Eyes partners, with European countries, with Japan and South Korea as well.
Who's your least favorite country to work with? Oh, he's not going to answer that.
That's the one question I want to defer on. Yeah.
Yeah. Okay.
Well, I will say that it didn't take long for Russia to say that, oh, there's a company out there that can supply surveillance technology and also supply parts from China, and that was Russia. So they sort of took Huawei up on its offer right away.
That's good to know. Sometimes you hear from some of the smaller countries, I beg your pardon, that they feel like they're being pressured by the U.S. One of them even used the word bullied sometimes. What would you say in response to that? I don't shoot the messenger.
You see smaller countries or
smaller countries?
Smaller countries. Well, we know everybody's going to make their own sovereign decision about how they want to protect their citizens and protect their economy and the future that they want to see. We are there to provide our objective analysis of how we see 5G being built out, and of the risks that we are thinking about, that we hope they are also thinking about. Our economies in this world that we live in today are increasingly more interconnected. So it's actually something that's in our interest, but it's also in their interest to make sure that their critical infrastructure is not disrupted, or there's not a diversion of data that would come from their networks and potentially be harmful to their citizens in the long run. We care very much in the United States about human rights, and many of these countries, all the countries that we really talk to, are very concerned about human rights, about the protection of privacy, about the protection of individual civil liberties. And so we're very much aligned on that front. So I think maybe some of the headlines out there might sound like we're trying to tell people what to do, but we're really having a very, I think, nuanced and sophisticated, sober conversation about the topic.
Where does human rights fit into this, and where does privacy affect what you say to people?
So, the future of 5G is somewhat a microcosm of the larger discussion about the future of data and what kind of rules and norms should apply to the uses of data and how we want to see countries use data. There's one model that we've seen that I don't think anybody who cares about human rights is happy with, and they're actually quite animated in their objections to, and that's in the Xinjiang province in China, where more than 1 million Uyghurs have been sent to re-education camps. They've been in part identified by high-tech surveillance, the use of surveillance cameras lined up with photos, and then the use of artificial intelligence to do the matching. There's also been tracking that's done that way. So there's one model that says we can use tech to suppress individual liberties and the freedom of association, the freedom of religion, freedom of expression. And then we say there's a better model that says users should have better control of their data, should have the ability to go to a rule of law set of courts, judicial system, where they can have their rights enforced in an open legal process.
Sometimes when you talk, particularly to European countries, they'll say, But what about Snowden? What do you say about? I think it's a silly argument, but you do hear it. What do you say back to them?
Well, we have a lot of protections around our intelligence activities, and that's a comparison. And in no way should there be any effort to have a moral equivalency between our intelligence activities and those in China. We have a legal system. We have independent courts that enforce that legal system with respect to intelligence activities. We have an open press, a press that can identify problems in our intelligence activities and highlight bad actors. In other countries, there's not an open press that could do anything like that. We also have oversight by our Congress, by elected members of Congress who have, through the intelligence committees and through a Privacy and Civil Liberties Oversight Board. So there's a quite different system in our country. So I think it is an effort to distract from the real issue here, which is that there's problems with the Chinese intelligence law, with the ability of the generally speaking, of the model of governments in China to have a Chinese Communist Party to be able to direct the activities of companies. There's really not a separation. There's really not truly a private sector in China that can say no to the commands of the party and of the state.
If I was mean, I would ask Rob about State Department reorganization, but I'm not going to do that. What I'm going to do instead is say you wear two hats. You wear this hat, the 5G and the telecom hat, and you wear the cybersecurity hat, and increasingly it's becoming one. How does this issue bleed over into your cyber portfolio, or vice versa?
Yeah, well, certainly our discussions about the potential vectors for compromise of 5G networks are in the discussions of best practices are really cyber discussions. You really can't have good cybersecurity unless you can trust the underlying infrastructure itself. I like to talk about all of our policies across the board in the digital space are done with our values in mind, with rule of law, with transparency. We're probably the only country in the world right now that actually has a Department of Defense cyber strategy that is in the public domain. We are transparent about our activities. That is unlike the activities of a lot of other countries around the world who don't do that. We also live up to norms of responsible state behavior in cyberspace. So we think that's very important to understand. One of those norms is that one shouldn't be using cyber means to conduct industrial espionage. And we know that China is still participating in that. Last December, 15 countries and the United States attributed probably one of the most significant thefts of intellectual property in modern history, which was what is known as the cloud hopper attacks, which was the compromise of managed service providers and cloud providers by the Chinese actor APT10. They did that in association with private sector participants, and they've been indicted and sanctioned for that activity.
How much do you have to get into the technical details in your discussions? I mean, what level do you talk about this at? I mean, sometimes I know some of the Prague meetings, some of the side meetings were very technical. What does that do for your job? I mean, what does that do for the issues?
Yeah, well, a good thing is we have a robust interagency set of experts that we can bring with us, and usually we can find our pairings in the governments that we're talking to so that we can have the more policy discussions and the more nuanced technical discussions in the same forum or in the same venues. I do think that's one of the reasons, though, why 5G is so hard and why I think some of the, if you will, propaganda and rhetoric about Huawei being this company that can't be surpassed, and that the failure to sort of acknowledge that there are competitors in the form of Ericsson, Nokia, and Samsung, because it's hard for people to understand some of the technical details, and it gets lost in the overall messaging that there are real understanding about what 5G networks will look like, why there is not really going to be a distinction between a core network and an edge network anymore, that the edge being something that people said, well, if we just put the untrusted vendors in the edge, we don't need to worry about it. Well, that might have been the case in 4G, but in 5G, because of the very low latency, because of the need to have almost instantaneous transmission with all the use cases and all the smart components, you're going to have transportation networks driven at the edge. You're going to have smart computing at the edge. So you can't protect yourself by just having untrusted vendors in the edge. You can't have them anywhere in your network. That kind of argument, I think, does rely on a technical understanding, and that gets lost, I think, in some of the some kind of high-level, like I said, rhetoric that goes around in this topic.
But the argument that you can separate core and edge and use geographic restrictions to mitigate or minimize the risk of using unsafe equipment is, at least it used to be, advocated by some of our closest allies. And so what do they say when you talk to them about this?
Well, I don't want to get into any particular discussions that I've had with allies about that, but I will say that notion that you can safely mitigate in a 5G network is one that we think does not stand. I think there's unfortunately also a lack of understanding of what 5G is going to become in some circles, where right now a lot of the 5G deployments are basically small cells, that is additional bands, additional transmitters going up in different sites. But when we actually see much more computing and those really interesting use cases that underpin our critical infrastructure, it's going to become worlds more important to have to have the entire network secured.
Where does the ITU fit into all this? Because you still own the ITU portfolio, don't you?
Yeah, I do.
Lucky you.
Yeah.
Where do they fit in on the 5G discussion?
You're going to make me explain the ITU.
Yes, and now on Section 37B of the, go ahead.
Starting in 1865, there is a UN organization called the International Telecommunications Union. They are, over the years, responsible for ensuring that we could have interoperability across borders for telecommunications, actually before that, the telegraph, and they are involved in a number of data topics now. And so my team works on these topics. They are the ones who established in 2012 as the ITU if you will, the standard that the specifications need to meet in order to be properly defined as 5G compliant. So they call that the 2020 proposal for 5G. So when the private sector process for the 3GPP, which is the third generation partnership project, results in, we'll have the release 16 this year, when it results in its final set of standards and specifications, those will have to meet the standards that were laid out in 2012 by the ITU as what 5G is expected to meet, to be performing at a certain level to be 5G compliant. So my team's involved in that all the time, along with the interagency counterparts. So the ITU does play a very important role in helping establish standards there. The other thing the ITU does is helps assign frequency bands and the uses for frequency. There's once every 4 years, there's a major conference at the ITU called the World Radio Communications Commission Conference. And that's actually a treaty-making conference that assigns these spectrum bands. So that will be coming up in Sharm el-Sheikh, Egypt this year in October.
You have to go, right? To work. Yeah.
I mean, I can go. Yeah, I haven't yet decided. There is Grace Coe from our staff is going to be leading our delegation there, but I'll likely go. But it's important that helps harmonize globally the uses of spectrum, so we can continue to see legacy uses as well as 5G uses of spectrum, because as you all know, there's more and more demand for spectrum when you're doing 5G, and especially in the millimeter wave bands.
And on that note, I'd be remiss if I didn't ask about one of the problems that's come up is that DoD has to communicate globally. DoD operates globally. Some of what they will be operating over will be on equipment that we may not trust entirely, in Africa or maybe some other places. What's the sort of State Department take on that? That we will face a situation where we're going to have to communicate in some way over untrusted networks.
Mm-hmm. Well, there's always more we can do to improve the quality of the networks and the reliability and the trustworthiness of those networks. So we're going to keep endeavoring to ensure that we see our partners develop trusted networks and trusted components, ensure that we have good pathways for our information over those networks. So whether it's DoD or State Department information, which is going to 230 posts around the world, or other types of communications that are sensitive relative to the U.S. government, or communications that are important for NATO troop mobilization, we need those to be on trusted networks. As we move forward, we're going to continue to constantly reassess the ability for us to protect information that's flowing over networks. So if countries deploy unsecure vendors in 5G, that is a serious cause for concern for us and will cause us to reassess how we're sharing information.
So that has come up sometimes as a concern that if you use untrusted vendors, that it will affect if nothing else, the intelligence sharing relationship. Are those legitimate concerns, or is it something countries should not take so seriously?
We think they should take it seriously. We take it seriously. Obviously, the intelligence that's acquired by through a variety of means has got to be very closely held. People put their lives at risk and indeed die getting that information. So we have a responsibility to protect that information. Of course, our information sharing relationships with other governments also benefit us. We want to continue to have those vibrant relationships with countries around the world for all kinds of purposes, from counterterrorism to non-proliferation to countering proliferation. So it's important we maintain those. And so we shouldn't allow the communication networks to be a reason that we're impeded in our ability to share information in the ways that we've been sharing it as of today.
I was, a couple of months ago, I was up in your old stomping grounds in the Senate, and there was a bipartisan consensus that if allies used untrustworthy equipment, we should take action against them. Where do you come out on that? I mean, it was a very stern statement by the chair and the ranking minority member, who usually don't agree. What would you say to the allies?
Yeah. Well, first, I'm glad you noted that 5G is one of the few areas where there is violent agreement on a bipartisan basis. There is no partisanship to the approach that the Congress takes with respect to 5G and protecting our communication networks and our approach internationally on this issue. You know, I think that's a further step to say what else we would do, but what we've said is we will reassess how we're sharing information. We need to really look at the means and manner by which we share information if they're going to be on networks that an untrusted vendor can cause the exfiltration of data or the actual complete compromise of the systems, or to track people who are on those networks. The 5G infrastructures that built out in the many use cases are going to provide so many more opportunities that really be a failure of imagination, which is something the 9/11 Commission said, if we don't appropriately think about how those networks could be misused against our national interests. So we really do need to think very carefully about that.
You mentioned standards, and it's on my to-do list here.
It's the bottom of everybody's to-do list, apparently.
No, it's at the top. How do you approach standards as a diplomatic issue? I mean, these bodies have usually been pretty low profile, pretty technical. How does state get involved in the standards process?
So we're involved in the ITU, which is essentially standards making body, which is a multilateral government to government. Then there's also all these private sector efforts. There's other parts of the government like NIST, the National Institute for Standards Technology, who is a member of the 3GPP standards making process. There's other parts of government involved in different standards making bodies. The one thing that many have noted is that there's been a decrease in the number of companies participating in these processes. There's been a push from China to put more and more of their proposals out there and to have a stronger engagement in these bodies. Now, the good news is most of them operate on a consensus basis, meaning there needs to be unanimity behind a proposal, but there are times when there have been votes, and so it's really important we continue to see the American private sector be very involved in the standards making process. So that is a concern, and something we're thinking through now is how we can ensure that robustness in the future.
We're almost at the end of our time, which is probably a relief. But let me ask you, what's the diplomatic agenda for the rest of the year and into 2020? What is it you'd like to see done? Don't tell us where you're going, since I know your travel schedule is insane, but what's the diplomatic agenda here? What do you want to get done?
So, and one priority relative to 5G is to keep engaged with the Europeans as they move through their process through the rest of the year, as well as countries around the globe that we're seeing very engaged as they're thinking about this decision. So that's a lot of travel, it's a lot of diplomatic effort by not just State Department, by other agencies. The other major effort is that for some time we've been working on a deterrence strategy and implementing a deterrence strategy. So we're seeking to build a coalition of like-minded governments that will act together in response to malicious activity by states We've done that 4 times in the recent history where we've actually had countries come together and do joint attributions. The next step of that will be to jointly impose consequences when appropriate against bad actors. We really need to change the calculus of the decision makers in these adversary countries, and so that they see it not in their national interest to keep using cyber as a tool to achieve their economic, military, and political desires and goals. So that requires us to have additional meetings and a lot of diplomatic work. And one area that we're seeing a great effort on our part too is at the United Nations, because there's 2 working groups in effect that are working on norms of responsible state behavior. There's been 12 norms that have been established, and there's now an effort to include more countries in thinking about how those can be applied within their borders and in their own activities. And there's also been further discussion about the applicability of international law to cyberspace, which we are certain still applies, and I think everyone would agree that international law covers cyberspace, but it's important that we continue to have understandings about exactly how it does.
Well, that's a pretty busy year. Anything I left out that you want to hit in the last minute or two?
No.
No, really?
No.
Are you?
I'll let everyone get coffee or Dasani water.
You aren't talking to the Chinese, are you? That's not on your.
Well, not directly me. I won't get into our whole diplomatic agenda there, but I will say it's important that we also do talk to our adversaries. We do, so we do talk to them. So it's important we do so, but we need to do it at the right times and with the right things on the table, and we don't just talk to talk. We talk to actually achieve an outcome.
Well, on that optimistic note, please join me in thanking Ambassador Strayer.
I am Vice President for Technology and Innovation Policy at Business Roundtable, also an adjunct expert here at CSIS. Very pleased today to be moderating this panel on innovation in 5G, and we have a very distinguished set of panelists with us. I'll just quickly introduce them. To my left is Eric Wenger, Director for Cybersecurity and Privacy Policy, Vice President and Office of the Chief Technology Officer at CommScope. Valerie Parker, Director for PE Network and Edge Compute Business and Technical Strategy at Intel, and Chris Boyer, Assistant Vice President for Global Public Policy at AT&T. So to begin this conversation, I thought that we would just sort of take a moment to level set on 5G and what really it is, how it's different from 4G, 3G, 2G, 1G. You know, is it all just blazing speeds for our smartphones? We've heard about autonomous vehicles, telemedicine, other applications. There's both consumer as well as enterprise business applications for 5G. We're going to dive a little bit deeper into these use cases, as well as talk about what really is 5G. So why don't I turn to Chris, maybe, as the carrier here deploying the network, to sort of kick us off and talking about sort of what's 5G compared to 4G, 3G, 2G, 1G? What's the evolution here?
Well, so 5G, from my perspective, the bulk of it's going to build on top of what we've been doing with LTE. So there's 2 types of 5G. There's standalone 5G and non-standalone. 3GPP, the standards body working on 5G, is finishing up the standards for non-standalone 5G, which will be used for kind of migrating off of the existing network. And the 2 big things that you're going to see with 5G, from my perspective, are going to be not only the improved speed and the bandwidth, the better throughput that you'll get with 5G, but a big part of it's going to be the benefits in latency. So in the previous network, a lot of the design was where you had basically a connectivity to the network where the content resides kind of in the cloud or in the internet, and you're kind of going across the network up to the internet, accessing the content, then it comes back to your device. With 5G, we're implementing a technology that we call mobile edge compute, where we're pushing kind of the compute functionality and the content closer to the user, which will cut down on the latency. So the round-trip latency from the user's device to the content and back to the device will be about half, if not more, what it currently is in the network. And so between the benefits with latency and the higher speeds that we're going to see, that should unleash a whole range of new applications. So Denise, as you were talking about things like autonomous vehicles, healthcare applications, we're actually doing a mock-up, I think with Samsung, I don't know if John Godfrey mentioned it today, around a smart factory. So there's all sorts of different applications you can see, but the latency benefits, I think, are a huge chunk of 5G as well, just as much as the bandwidth gains that we're going to see.
Eric.
I just want to build on one point, which is that we should recognize that this is going to be something that happens in waves, that there are different parts to the network and they're going to change at different paces. And so we're already starting to see the radio starting to change at the edge. And we will see a certain amount of speed increase that comes along with that. You have a transport layer, and then below that you have the core of the routing and switching, and this is where the Cisco gear sits. When we reach the point where we start to swap out and upgrade the core that we're using to run the 4G mobile networks and the 3G mobile networks, we're going to see another dramatic increase in speed that comes along with that and performance. And there will be applications that come from that. I think a lot of us think of this in the consumer terms, the things that we were able to deliver to the mobile endpoint devices with 4G. There are applications that are going to come with and a lot of this is going to happen at the enterprise in a different way than we've seen in the past. With the build out of the core and the speed increases and the latency gains, latency decreases that come from that. Some of this is almost impossible for us to anticipate at this moment, any more than we could have guessed that streaming services like Netflix and Hulu would have followed from delivering fiber to the home. There are just applications that they're going to come from being able to deliver with very high speed and low latency to endpoint devices that are inside of factories or industrial enterprises that will facilitate gains in productivity that we can't contemplate at the moment.
And maybe I can just add a little bit to that. We've been working with service providers. Oh gosh, how long ago? Network function virtualization started, 10 years ago or something. But over the past several years, we started working on edge compute along with 5G. And 5G is really more than spectrum. It's an innovation era. And enterprises, even Intel as a factory or hospitals, they all have their own ideas on how to personalize the network for their own use cases. They want to consolidate workloads. They want to secure their data. They want to have multiple IoT devices. How do they protect their data? And they see 5G as a way to generate more revenue because they can put multiple slices, and we can talk about slices and what that means, on top of the network. So personalizing the network has gotten a lot of the enterprises, small, medium, and large, very excited about 5G.
Slicing is one of these concepts that is going to be new to 5G. It's not something that we've seen before, where you can customize a particular set of characteristics associated with a stream, and so you might decide that a particular application requires very low latency because the most important thing is to make sure that cars are not bumping into each other or the roads, but the amount of bandwidth that's associated with that might not be that high. In other applications, you might decide that the thing that's most important to you is the amount of throughput that you have, and you can deal with latency through caching. And so if we're able to start to customize the types of services that can be offered through slicing, then we may see new innovations that come from that as well, too.
Kevin, I want to turn to you next and talk about sort of the current state of 5G deployment in the United States and also relative to other countries internationally. I think a lot of people talk about how China's ahead or Korea is ahead. Put that in perspective for us. Where do we stand in terms of 5G deployment here in the United States?
Sure. I think the interesting thing about the U.S. is kind of the profile of 5G deployment we have. I mean, we're really covering all the different spectrum options. And we go from what T-Mobile is deploying
At 600 megahertz, that low band, that they're going to have nationwide coverage that has a large reach for 5G. And then you see, like Sprint is deploying in the 3.5 gigahertz spectrum, so that important mid-band spectrum, and that gives you these large data rates, and they're deploying some advanced antenna technology there, these massive MIMO antennas that are really provide a lot of throughput, get us from that 1 gigabit per second that we have with LTE to that 10 gigabit per second throughput of 5G. And then you see companies, I'll let you speak to AT&T, Chris, but you see companies like Verizon that's deploying in the millimeter wave spectrum with its large bandwidths. And again, very advanced radios and antenna technologies that are doing this millimeter wave beamforming and delivering just fire hoses worth of bits to the handsets.
Yeah, I mean, from an AT&T perspective, I think I don't remember the exact figure, but we're either in 19 or 20 markets, or portions of 19 or 20 markets today doing 5G. We have a couple additional markets planned by the end of the year. I'm sure some of my competitors are here in the room that they're also in the process of rolling out 5G. So I think from a U.S. perspective, we're making a lot of progress on 5G. I mean, we don't.
When will 5G become like a reality? When will it become ubiquitous?
I think it's a reality now. I mean, I think there's applications of it now. There's actually, I don't know if John spoke about it in the last panel, but Samsung has a device that's out there today being deployed. So there's some aspects of 5G that are being done now, but it's going to be an ongoing rollout, and that's why we say it's in portions of markets, because to your point, or to the conversation earlier, some of it's going to be driven by enterprise adoption and use cases for 5G. So it'll be a gradual rollout. It's going to take, billions of dollars and several years before that rollout is done. So it's not like when you roll out networks, it's not like you magically say, oh, we're on, in New York or in Washington, we've got the whole area covered. It takes a gradual build out, and there are challenges with the build. I mean, one of the big policy challenges with 5G is going to be cell siting and getting permits for small cells, and in large urban areas will be a major issue as we roll out. So there's definitely going to be issues that we deal with, but I think we're making a lot of progress, and I think it will. I think the U.S. is. I think some of the concern about the U.S. being behind China is a little overstated, in my opinion. I think the U.S. is well positioned to make a lot of progress on 5G. I think on the spectrum issues, to your point, we're doing pretty well there. There's clearly a need for all three of the different types of spectrum, whether it's low, mid, or high band spectrum, that work together in 5G. Some for coverage and some for getting that higher bandwidth that's out there. But there's things happening. I think the FCC is going to be auctioning off the millimeter wave spectrum later this year. There's been discussion about doing a CBRS band auction next year. So I think we're actually making a lot more progress than people realize.
I would just add that Wi-Fi is an important piece of this as well too. So there are new innovations in what we call Wi-Fi 6 that will be part of the architectures that enterprises will use as they build out their networks. And there'll be combinations of these technologies because they have different properties to them that make them useful in different places. And so the millimeter wave spectrum is great for certain things, but it has limitations in terms of its ability to be able to be used in places where you have objects that are going to block the propagation of the waves. And so we encourage the FCC to continue to move forward on the mid-band spectrum and the allocation of 3.7 in that range. You had a point about CBRS that you wanted to raise, right? Sorry, go ahead.
Before we get there, I do want to just talk about sort of the tech stack for 5G, right? So we talked about components in an earlier panel. We talked about the RAN and the core network. What would you say are the strengths and weaknesses of sort of the U.S., the sort of key industry players in the U.S. when it comes to the tech stack? Where do we need more innovation in this tech stack here in the U.S.? And how can we drive innovation in those areas?
I think we're well represented in the chip space, of course, and in the networking space, but in the RAN space, from a U.S. vendor perspective, we don't really have any RAN vendors, and there's an opportunity with 5G. I mean, if you look how the RAN's evolving with 5G, it's take a look at the radio. With 4G, what happened with the radio is the digital part of the radio separated from the RF part of the radio. and the RF part of the radio went up the top of the tower with the antennas. Now with 5G, the radio is getting evolving a bit more. So the RF part of the radio is integrating into the antennas. So we don't have a separate antenna and radio anymore. They're quite integrated and quite advanced in terms of massive MIMO and millimeter wave. And it's really interesting what happens on the digital part of the radio that's at the base of the tower. That's splitting into two pieces, and it's also being virtualized. So it's become cloudified, and there's no longer dedicated electronic hardware there. There's software on servers for the digital radio, and it's breaking into two pieces. One part of the digital radio will be near the cell tower doing the high-speed processing. The other part of the digital radio will move back into the network towards the core to do the slower speed processing. And that architecture is enabling a lot of these interfaces or capabilities like edge compute and things like that. So, there's an opportunity with 5G to have new vendors in this virtualized RAN space with the virtualized digital radio and with the advanced antenna and radio technologies.
Yeah, I mean, if I might add to that, I think if you, to answer your question, I totally agree with all those comments. And I think if you go back to the CSIS report that was published in, I think it was December of last year, they did a nice breakdown of the RAN part of the network versus the core versus the device side, and even at the subcomponent level. And if you look at the subcomponent level, I'm talking about things like processors, chipsets, that type of stuff. The US actually is very much in the lead in almost all of those areas. The area that we are behind, or we don't really have a US provider, is kind of in these integrated solutions like what Huawei, Qualcomm, Nokia, and Ericsson provide, which are kind of fully integrated solutions today. And so to your comment about virtualizing the RAN and kind of disaggregating the RAN and breaking it up, we have felt for a long time that by doing that, we can actually unleash more innovation in that part of the network. And because the US leads in a lot of the component levels, the subcomponent levels, it kind of plays to our strengths, because now it becomes more about how can an operator like an AT&T, pick best of breed suppliers in a more modular design to build out their network. So I can go pick an antenna from one company, and or a radio from one company. I can pick a baseband unit from another company, and I can get software from a third company. And if you're a new entrant in the space, like in the last panel I did here, we had a company called Altiostar who spoke in quite detail about this issue. They only do RAN software, right? So I could conceivably configure a network where I'm using multiple players, picking best of breed components, building out the network. And a lot of those, frankly, happen to be US based or are provided by allied countries. And so I think that's a model that we think could potentially emerge over time and deal with some of the supply chain challenges that we have.
On this point, do you think that adopting open standards, interoperability, virtualizing the network, will that make it more difficult for Huawei to compete in this market? Or do you think that they're just as well positioned as all the other vendors to compete?
It's hard to say. I certainly think that they have enough. They're big enough and have enough of cash to maneuver, I think, in that space. So I wouldn't say they can't do that, but I think the challenge will be is that you'll move away from buying kind of monolithic boxes that do all the functionality to a much more disaggregated network, which will unleash more competition. Now, it's not going to be a magic solution. Like, it's going to take a lot of work, and frankly, there are other issues that need to be dealt with. Like, in addition to interoperability and open standards, there also needs to be transparency. I think Rob was just up here talking about some of the issues with China. There's issues around subsidizations that's going to have to be dealt with. These new companies that are entering the market, they can't enter the market and feel like they're competing with companies that are being supported by their governments. So there's a lot of other geopolitical issues, I think, that have to be dealt with in addition to that. But under the right policy framework of what we like to think of as interoperability, open standards, and some level of transparency about how these deals are structured, we do think that can help the market. It can level the playing field so that everyone can compete in the space, which right now we feel like the market is tilted in a particular direction. That's not healthy for the ecosystem.
Yeah, just to build on that, if I may. When Rob Stray was talking before, he pointed out that there are technical and non-technical aspects to managing risk in this space. one of the elements that is of concern is the idea of governments are trying to deal with how they achieve the right level of diversity of vendors in the marketplace so they don't feel like they're solely reliant on one source of technology. And so while this is not a silver bullet, we think that the development of the Open RAN approach will foster the ability of new entrants to compete in the marketplace over time.
How can we get more startup activity in the 5G technology space? We talked about Altio Star and a couple other companies, but what can we do to generate more startup activity?
Well, maybe I can take a stab at it. I think that the government could help with incentives. This is the enterprise starting to utilize the network more and more, so the enterprise is coming to the network. And to incentivize not only for the RAN, but if you look at the requirements from these businesses, they could, they sit very near or on top of the radio access network with MEC. Or it could sit on a distributed EPC. It could be on-prem, it could be on the edge. So incentivizing or building programs around how do we leverage these two together, I think is a good area, because these requirements are taking orchestration, which is another element or software that's in the enterprise, and orchestration from a network provider, and they need to be combined or leveraged somehow, because if you have an orchestration from an enterprise, you have an orchestration from an operator, and how could they leverage each other? I think that there's a lot of innovation that is starting to happen now, and from the RAN all the way up through to the core and then onto the data center. So incentivizing these startups and incentivizing the people who would deploy, like AT&T and Verizon and T-Mobile, incentivizing them to deploy with startups, because that process in itself can be a long time in coming.
I think in an earlier panel, there was discussion about how winning the race to 5G is really about sort of rapid deployment of 5G, right? Innovation is a big part of that, but also spectrum availability, also streamlining permits for small cell sites. What needs to be done, if you were to issue some specific policy recommendations about how the government can approach this to accelerate the deployment of 5G, what's your recommendation? Maybe just go down the line. Eric, do you want to start? Or, okay,
I
point
can
at each
start. I
other.
mean, I think Denise already hit two of the big ones. I mean, the biggest issues are making sure we have available spectrum, particularly in the mid-band space. So, there's going to be a couple auctions, as I mentioned, coming up soon. But I think in the mid-band space, that there is obviously a need for additional spectrum there, and that's been widely talked about. And then I think on cell sites and permitting issues, the FCC has taken some actions to deal with that issue, but just from my experience, that's always a challenge. You're dealing with local municipalities there, and so there's always going to be some issues with that. So I think those are two areas that would particular. And I think the third one is what others on the panel have been talking about, which is really enterprise adoption. The U.S. government, frankly, can help drive the industry to some degree by being a first adopter and helping drive through some of these solutions there. There's a lot of government facilities that are looking at the use of 5G. So I think really three things: it's use cases, adoption, it's the spectrum issues, and the permitting and cell-siting issues that are probably the big three here in the U.S. If you're talking about the supply chain issue we were talking about a minute ago, like how to incentivize more startups in the policy world, I think that's where making sure we have a real market opportunity for those startups is a big deal, and that's where things like interoperability, open standards, those are the things that come into play there.
Yeah, I would tend to agree, and add there's different things when you think about smart cities or hospitals. All different types of consumers walk into those facilities, and there's all kinds of workers. So the ability to have multiple operators in that same facility is going to be an area of innovation as well. So I think that's a place to kind of focus in the public and the government facilities would be a good option to pilot that.
Yeah, I think anything we can do to have you municipalities, accept reasonable aesthetic solutions for what a cell site or a small cell site would look in an area. I mean, right now we go and we develop a nice package and you'll go to one municipality and they'll want something 6 inches longer, or this is different certain looks. So if there were some sort of standard profiles that that could be regulated, or to help with that process, it'd go a long way than having a different custom solution for every town or city in the United States. So.
Well, I think the key point is that there's going to be a difference here from what we've seen in the consumer space, and recognizing that that's going to require some new flexibility for enterprises. I guess I have more questions than I have answers about what that's going to look like. But making sure that we are considering the needs of enterprises as they're trying to figure out what type of slices are going to work well for them, whether or not we need to have some specialized services that are focused on particular segments of industry and the types of slices that might go along with that. There may be some need for new ways to think about sharing spectrum in places that we have incumbent tenants. So I know Kevin could talk a little bit further about that, but there are some ideas for how to do that. And as well, there may be some utility that comes from giving some freedom to license spectrum to enterprises for their use inside of their spaces, and thinking about how we put this all together, as I noted before, with the next generation of Wi-Fi. I think it will be a key piece of how we spur innovation in the enterprise space, which I think would then spur demand and help to make sure that the investments that are made by the carriers in building these networks out are paid off by people actually using them.
So I do want to give the audience an opportunity to ask some questions for our panelists here. While you're thinking of your question, I do want to ask the panel one question, which is rural broadband. So we're talking about deployment. A lot of the use cases we're talking about are urban use cases, smart cities, autonomous vehicles. Most people tend to think of sort of urban environments when they think about those applications. But rural broadband is now a major political issue. We hear these stories about kids not being able to access the internet to do their homework in some rural communities. What do you think is the solution to that? What do you think ought to be done that we're not already doing, or do you think that we're on the right sort of policy track here?
Well, I think it's about spectrum, and I think there's some good news here. Is the CBRS spectrum is becoming available, and that's some of this important 3.5 gigahertz spectrum that has the large bandwidths that can help drive the sort of capacity you need for a rural deployment. And it also supports different advanced antenna technologies that can help that signal reach out further in rural areas. And of course, that's key to the economics. Have fewer cell towers as you cover rural broadband.
Any questions from the audience? Okay, right over here and here. Do we have microphones?
Name's Dave Onspach, retired. Just throwing this out there. Do you know if for, let's say, informal renters who rent rooms in people's houses, for example, and the informal renter wants a certain telecom service that has the television and the music and all that stuff, do you know if the 5G will make it easier to get that service without having to require the property owner's permission, that doesn't require hardware to be bolted on or built into the property owner's house compared to the 4G, do you know? Or will that be easier for an informal renter to get a telecom service directly to them, even if they are renting a room in somebody else's house? Thanks, that's my question, thanks.
Thank you. I'm not sure that our panel is best positioned to answer that question. I don't know if someone wants to take that one. Or
It's technically feasible.
Yeah.
We can say that. It's technically feasible. It all comes down probably to the business model.
Yeah.
But with edge computing, you can get things cached. Now, your own personal data, again, it's probably going to come down to a business model between the B&B and the operator.
That's right.
And we have a question up here in the front. Microphone, please.
And if you don't mind just introducing yourself as well.
Chris McRae, Norman McRae Foundation. So I have a question. It's really sort of about inclusivity, but also diversity, because it seems to me we're talking about so many different sorts of things that 5G could be about. And I'm wondering if there's a difference between the kind of security and everything you need for, let's say, very local things like education, compared with, global things like security and safety and whatever. And are we muddling up in a way, is there danger we might be stopping things which the vast majority of people need most, but which are not maybe the same as, international security? So is 5G really a lot of different things, and we're getting a bit muddled as to which are the priorities that different people in different places actually want?
Well, I don't think that we're taking anything away. The question was whether or not 5G is going to displace technologies in a way that are going to change our priorities, as I understood the question. And I think that I look at this as being, yes, it's a new wave of technology. It's building on things that have been there before, and then in some cases we will replace over time older technologies. But I don't believe that we are changing our priorities and making it impossible to do the things that we're currently doing by virtue of adopting these changes.
Oh, over here.
Hi, David Winks with AccuSight. As we think about the possibilities of 5G and how integral it's going to be to all of our lifestyles, one of the other areas that we might want to consider as we think about reducing risk and security is to harden these systems against electromagnetic weapons. We see them in the movies, but they're becoming real. They're being fielded. We're actually shooting down drones in the Persian Gulf with them. Have you given some thought on how you might be able to put that in your requirement set going forward?
So is that a security question?
Yeah.
So there's obviously a lot of attention being paid to 5G security in and of itself. So there's multiple security issues, but there is an effort underway at the standards body at 3GPP. There's a group called SA3 that's focused entirely on security standards for 5G deployments. So there's enhancements to security, basically taking lessons learned from LTE, 4G, 3G, et cetera, and kind of baking in security into the standard itself. How that will be applied to drones, for example, and those types of technologies, I don't know for sure. My best guess is that you'll have security in the standards for 5G, and then for specific implementations for drones and other devices, you'll see additional security layered on top of that. So the 3GPP standards are really about the network, right? How do you secure the network and all the capability? But at the device side, you're going to need additional security protections on individual devices as well to ratchet it up. And the security controls should be commensurate to whatever the functionality of the device is. So a drone will have certain security requirements in addition to what the network's doing. If you're talking about a consumer device, it might have less requirements than if it's a government type of device like what you're talking about. But I think that's all part of the conversation right now, is how do we build in better security standards into both the network side and also into the device side as well.
And part of that technology too is at Intel we put in things like secure enclaves. So you can, as you onboard a device, as that device gets onboarded, there's a secure device onboarding that happens through the network. So you know that is the right device, that it has the right ID, that has the right capabilities before any data gets transmitted across. So those security assets are coming into the network and as well as to the edge compute.
So building on from the panel that took place earlier, there was some discussion around the change in the threat landscape that comes from bringing more compute power to the edge of the network. But at the same time, I guess maybe I'm just an optimist about technology. I think as you just heard from Valerie and from Chris, we're adding security to this wave of technology right from the beginning based on lessons learned. We're building on technologies that are already in place with 4G as we move to 5G. And then, as described by Valerie, with the ability to securely onboard devices, hopefully we can leverage the power of the network as well too to add more visibility and control as we bring more compute to the edge of the network too.
Yeah, there's some really specific benefits for security in 5G that you could talk about. There's been a lot of public documents about that. You can go look at the FCC CISRIC report that was published earlier this year. They're actually doing a continuation of that in the upcoming CISRIC. So there's been a report that was done by 3G Americas. CTIA has done work on this topic. Like I said, 3GPP, SE3. There's been a lot of discussion, but one of the big things is with edge compute, we can take as an operator a lot of the security tools that we use in the core of the network and push them closer to the edge. And now you can start to do traffic monitoring. You can start looking at flows. You can try to identify things happening, closer to the user. So there's a lot of different things that are happening with 5G as we kind of push the core infrastructure closer to the user, and then we think we can bake in better security than what we've seen on previous generations of wireless technology by leveraging that infrastructure. 5G is as much about changing how the network is architected as it is about all the other parts that are going on. So that change in the network architecture, the edge computing model, I think really it could change the game for security. But a lot of that work is underway as we speak.
Yeah, you can think of it as stopping the rogue data or rogue impacts right at that edge before it ever traverses the network.
As far as electromagnetic threats to the radio, I think you asked about that. That's really not something that's been considered. I think to put the sort of chips in there, the military-grade chips, to be secure against that threat would probably make the radios in a network prohibitively expensive. So.
That's a separate matter from what I was speaking more to cyber security and hacking, but you're talking more about physical electromagnetic issues, which is a separate matter for sure.
I think we have time for one more question. Is there any in the audience over there?
Hi, Kyle Smith, Smith's Laboratories. I understand with LTE that my radio and my cell phone can connect 45 miles away. The reason why the FCC would regulate that, why the telecommunication companies would operate that. You can only connect 1,000 feet to a Wi-Fi device, and with 5G, 1,500 feet. Why is there a presumption that the telecommunication companies need to organize and provision the devices onto the network, and the FCC needs to regulate the spectrum, when it could be public spectrum like Wi-Fi, and it could be, instead of small site licensing and regulation, all these things you're talking about that are hindering the deployment? It could be operated as a Wi-Fi network.
Yeah, that gets into licensed versus unlicensed spectrum, and it's been a hotly debated topic for a number of years. But I think from an operator's perspective, we certainly think that there's benefits in both in terms of performance and capability that come with licensed spectrum. I mean, I'll just leave it at that, but that's been a debated issue for a long time.
But as I mentioned, there are innovations that are taking place in the unlicensed space too. So these things are going to work together in concert with each other. The architecture of these networks is going to incorporate elements of both of these types of spectrum sitting side by side and working hand in hand.
Yeah, and there is new technology being deployed soon in the CBRS band where their shared spectrum is going to be enabled, where the spectrum will both be handled as an unlicensed spectrum where anyone can have access to it, or as licensed spectrums with a priority license given to.
Just to give a quick example of that, the cell phone that I use today happens to be an AT&T phone, but it has the capability to backhaul some traffic over Wi-Fi networks. So these things are working together in concert today, and we're going to see more of that as we move forward.
I think one final question from me to wrap this up, which is, I think we've talked about how to generate more innovative activity in the 5G tech stack. We've talked about competition, especially with other countries. How do we get more R&D activity in this in the tech stack? So, for example, we've been talking about how Huawei is spending significantly more in R&D than many of the other players. What can the U.S. government do to help sort of coordinate R&D activity, or is this something that industry can sort of do on its own?
Well, I like something that Chris said before, which is that, and we saw this with the adoption of cloud computing, that sometimes people, the U.S. government kind of gets a bad rep as being behind the curve, but actually, in a lot of places, when the U.S. government adopts a technology, it serves as a signaling function to the rest of the rest of the market that it is worthwhile investing in. And so, seeing some uptake of the technology, some investment by the government in the adoption and use of technology would undoubtedly help to spur the rest of the market grow.
Yeah, I think that's absolutely right. I think government can play a key role in being an early adopter and kind of pushing the industry along. It can demonstrate to enterprise businesses that this is something that is useful and can be worth deploying, so they can certainly go there. I also think the issue around R&D funding and what's the role of government, we're in the process of working on an INSTAC report right now on this whole topic of emerging technologies. And it really goes beyond 5G. It goes into things like quantum computing. It goes into artificial intelligence. But it gets down to, does the U.S. have a national strategy, a cohesive national strategy across the board for these technologies, both in the U.S. and with our allies, to support R&D for these critical technologies. And we don't really do, I guess maybe we do, but I'll argue that we don't typically do industrial policy here domestically in the U.S. It's kind of not a term that we would typically use in a capitalist country, but there is some form of that. And I think having an innovative strategy, having a policy strategy around how to incentivize R&D in these critical technology areas, in particular when we're dealing with other nation states that are pooling money together in that same way, is something that we need to think about, and something that the government probably needs to pay closer attention to going forward, not just in 5G, but in a wide range of critical core technology areas.
Well, thank you. I think we have an excellent roadmap for what we need to do to make sure that the U.S. wins the race in 5G. Please join me in thanking our panelists. Thank you.
Thank you.
Had a rich day of discussions here, and we're going to close it out with something we were talking about in the background. This is in many ways an historic panel. We have the FCC, Commissioner Jeffrey Starks, who's taken in his nearly 6 months of time as a commissioner, has really jumped out in a leadership position on these issues. We're going to hear some of the things that he and the FCC more generally have in mind. He's sent here with Chairman Pai's blessing to both represent Commissioner Starks himself and also the FCC as an institution. We have Jennifer Lane from the Department of Commerce, Senior Counsel in the Office of General Counsel, works in the Secretary's office and oversees all of the elements of the Commerce Department that are working on supply chain EO, the supply chain executive order, and related issues. And then we have Director Chris Krebs of DHS at the Cybersecurity Infrastructure Security Agency, the head of agency that kicked things off. And the reason I say that this panel is historic is because having worked in and with all three of these agencies over the past 10 or 12 years, I can say that most of the time that these agencies are in the same room or on the same panel, it's usually an argument. It's fighting over territory. It's saying these are my authorities. Those are this is my lane. Please stay out. And what we're going to do today is something a little bit different, because the purpose of this panel is to talk about how these three agencies that are at the core of 5G security governance in the United States support each other, contribute to each other's work, and also contribute to the international elements that Ambassador Strayer was talking about earlier. Who does what, why, and how does it fit together? I'm not sure if it's fully a well-oiled team at this point, but I want to hear about where the partnerships are and where improvements need to be made to face this security challenge. So with that, I'd just like to ask you all, let's open things up with a discussion of what are your agency's particular areas of expertise, authority, what are your roles and responsibilities, and most importantly, how do they fit together to secure 5G in the United States?
I'm closest, I'll go
Jump
first.
off.
All right. Go for it.
Right.
Well, first of all, glad to be here, and certainly with sister agencies here. You know, at the FCC, and I fully believe that network security is national security. And that point cannot be understated as we're thinking about a 5G world. We're talking about a world where there's going to be an explosion of devices. The Internet of Things is going to have countless more devices out there. All of it's going to be interoperable. And so it is really important that we start to think about these issues right now. The most important thing, obviously, you know, we know that Commerce is clearly in charge of some of the kind of economic policies, DHS very much in charge of national security, but there is a specific FCC lane that is important. We are the regulators, of course, that are in charge of a lot of the relationships, in charge of carriers, in charge of networks. We're talking about the networks that are going to carry our financial information, our transportation information, our healthcare information, and we really are kind of the tip of the spear from the regulatory standpoint. And so I think we're always going to have a certain role here to play.
We're going to dig into that a little bit further. And I know, just start off by saying that I know that the Commission, unlike Department of Commerce and DHS, consists of 5 different Senate-confirmed commissioners, all of whom have a different approach to things. And while there is a chairman, nobody is in charge of the other commissioners. So we'll talk a little bit about some of the differences in that, but also at the how there's a commonality at the base in terms of securing the network.
Yeah, and really quickly on that point, I think that's exactly right, because some of us would read more from our statutory perspective. We certainly, under the Communications Act, you know, Section 1 tells us is animated by national defense. And says specifically that we are to have networks and communications that protect life and property. So there certainly is an animating purpose that almost all the commissioners would sign on. But we are part of a whole of government, but there is an FCC lane.
So let's talk about commerce. Is anything going on in commerce in this area right now?
We stay busy these days. So commerce, the behemoth that it is, we have multiple bureaus within the department that are geared at working on 5G. And we have, from the highest levels of the department, the mandate that when it comes to 5G, when it comes to supply chain and these issues, that we bring the best of commerce to each of these issues. And so while each of our bureaus have their specific mandates, have their specific missions, what we're doing is making sure that we're identifying those cross-bureau equities and making sure that there's collaboration across the Department of Commerce, so we leverage everyone. But specifically with 5G, when it comes to exports and exports controls, we have our Bureau of Industry and Security at the department. When it comes to the telecommunications aspect of things, we have our National Information and our Telecommunications and Information Administration, NTIA, that is highly involved. When it comes to standard settings in 5G, we have our National Institute of Standards and Technologies, which is NIST. At the department. And so therefore, and again, working with our Office of General Counsel, our lawyers, and then also with the Office of Secretary, we are coordinating on 5G to make sure that we bring a whole of commerce approach to everything. With that said, while we are doing a lot of interdepartmental coordination, we absolutely understand that all the answers to the questions as they relate to 5G do not reside in commerce. And so therefore we look to our sister agencies, DHS, the FCC, intelligence as well, to help us as we are developing our policies, rules, regulations, because we understand that really to tackle these issues, it is a whole of government approach. And so while we are very much adhered to our mission and want to make sure that we have our lane carved out, we understand that we really can't effectively even do our mission without leaning on the work of others.
And is that taking place in the executive order implementation?
Absolutely, definitely. I mean, one, by design, the executive order is meant for interagency collaboration. I think there's a laundry list of mandated agencies that we must consult with. But it will get the better product by doing it. And so while the Secretary of Commerce has been delegated specific authorities when it comes to reviewing and potentially prohibiting transactions, by no means are we going it alone. And it has been a full-blown interagency collaboration process since the executive order has come out and will continue to be so moving forward.
Is that a formal process, like through the NSC, or?
Definitely.
Yeah.
So NSC has what we call a sub-policy coordinating committee that is geared at just implementation of the executive order, the supply chain executive order, but there are many sub-PCC groups that are affecting different areas within 5G. But yes, it's NSC-led, they bring us all together, but also there are many conversations. I know I've been heavily involved in that, and I have many side conversations where I just pick up the phone and say, hey, I need to actually talk to DOJ on this issue, or I want to go and talk to the FCC about this. Also because of the breadth of that executive order specifically, it's not just telecommunications, right? And so I've had to reach out to other agencies that touch different industries to get their input as well. So lots of coordination across the board.
So, you know, the Department of Homeland Security's role here goes back to the establishment of the Department of Homeland Security and the authorities granted to the Secretary of Homeland Security, leading and coordinating the nation's critical infrastructure protection activities. Communications is a critical infrastructure sector, just like IT and financial services and energy. And what happens is now there's 16 critical infrastructure sectors, and each one of those sectors by presidential designation is assigned a sector-specific agency lead. The Department of Homeland Security, of those 16 sectors, represents 10 as a sector-specific agency. For comms and IT, DHS is the lead, and that has devolved down to me. So what that really means is this is not an enforcement or a regulatory authority, it's a partnership authority. And historically, that's a pretty cliche term in DC, but now we are very much more focused on operationalizing the partnership. So I talked earlier about the risk characterization, and I talked about bringing industry in from the beginning and helping us understand how the network is going to be deployed in 5G, what the attributes are. And then we bring that back into our risk management capability. And just to pause there, when we think about risk management, we're not just thinking about cybersecurity. I already talked about physical vulnerabilities. We think about supply chain vulnerabilities. We think about insider threat. It's truly moving towards a more holistic risk management approach, looking down across the various verticals. Again, not just the ones and zeros part. But you know, we are the ones, again, that work with industry, pull it all together. We have commerce expertise in DIA, NIST in particular, Department of Defense, the intelligence community. The IC is going to speak next, you just can't see them. They bring their threat information, they feed into our risk management analysis. We work with industry to understand what the impact is, and then we draw out this characterization. So you talk about the interplay within the executive order. The way sequentially the EO goes is that the intelligence community does a threat assessment of 5G. That then feeds into my risk assessment of 5G, which then goes into and feeds into the regulatory, whatever that ultimate decision is. So we are consumers of the intelligence community's output and exhaust. We pulled that into the risk assessment, and it's preliminary, it's going through the internal routing right now. But ultimately, the idea is, how do we characterize or how do we scope this problem, this assignment within the executive order? And it's a work in progress still, but ultimately, we look at, there are 5 key elements or roles within the ICT supply chain that feed into at least the current communications infrastructure in the way we see it. And then we were able to subdivide that into sub-roles and then get that down into elements. And ultimately that we've been able to spit out about 61 elements of the things in the ICT supply chain. And of those, we have to make criticality assessments. Then that is what then feeds into the commerce process, and commerce makes their decisions through their normal process. But again, you know, our role is to be this kind of, much like the IC is the independent arbiter of intelligence, we are that independent arbiter of risk assessment and understanding risk as it manifests across critical infrastructure.
Let me ask a specific question about, so we're talking about the supply chain executive order now, where your commerce is grappling with, you know, how, with, as I understand it, rules that will be coming out at some point before the 150-day mark. October 12th, I think is the date. There's a lot of understanding that they will come out as interim final rules, but not to get into the regulatory weeds, but that those will be rules that are issued and they're in effect upon issuance, as opposed to the way Commissioner Starks and team do it at the FCC, which is a proposed rule where you put something out, it's not in effect, but on either side there will be comments. Can we expect interim final rules or an NPRM, or is it too early to say?
So we're currently having discussions with the NSC, because while the Department of Commerce ultimately is charged with implementing the rules, it doesn't just work that way. You've got to work with your folks at OMB and the White House and NSC and work through a regulatory plan. So we're working to finalize that plan right now. And I can tell you, as far as the process goes, we are examining the full range of regulatory options, whether it's an NPRM, a notice of proposed rulemaking, where you go out with a lot of questions to the public, ask for a lot of comment back, or we do something like an interim final rule, where it is technically a final rule and does go in effect at the time, but oftentimes is accompanied with additional questions, and or better yet, the expectation that there would be refinement along the way and then a final rule issued at a subsequent date. We're looking at all of our options.
So proposed rules are on the table, though. This
Yes,
is not just interim final rules. And if it ends up being interim final rules, will they be in place subject to comment, or is that sort of the final input from the private sector?
No. We want, and I want to be very clear, we want public engagement, industry comment. Even if it is an interim final rule, we will seek industry input and comment along the way. So by no means do we want to exclude that valuable input. And that's another thing too. While we're collaborating here, and from a USG perspective, the only way that we're really going to be able to tackle these issues is with industry input. And particularly with this issue, it has national security implications, but also economic implications, and we understand that there has to be a balance. And I think that in order to really understand what the potential economic implications are, you have to be talking to businesses, you have to be talking to companies. And so therefore, that is something that we welcome, and it will be a part of this process.
So the President has declared a national emergency on this. So this is not something the government just steps in and says, here's the way we're going to do it.
I mean, it's a national emergency, and we are not undercutting that at all. And we have been mandated, get this done, and or start taking action. If you can identify a regulatory regime and get it in place, in 150 days. So there's certainly an urgency there. But again, an urgency with a balance to get this right as well, where we want to make sure that we are securing our nation's supply chain, and we will take a look. And honestly, to be clear, if you take a look at the executive order language, technically the Secretary of Commerce could act right now outside of a regulatory regime. That authority is given in the executive order, with then a requirement of in 150 days to issue implementing rules. And so therefore, I mean, if there's a need, if a national security issue is presented, we're going to take action, regardless of a regulatory regime in place. But with that said, the way that the structure is set out, 150 days, Commerce, implement. So that's what we're seeking to do.
To ask about a couple of other areas of input, Chris mentioned the DHS risk assessment that followed the intelligence community risk assessment. Commissioner Starks has jumped out of the gate as a commissioner pushing for, I'll use his brand, find it, fix it, fund it.
I like it.
Got it. I came to the workshop. And this is an issue of finding the untrustworthy equipment, fixing it / replacing it, and funding it through public funds. There's sort of a chicken or egg aspect of this. We don't necessarily, the government doesn't necessarily know what's out there until it puts some money out to say, hey, come and get it. Is this part of the thinking behind this approach, or is it something that you can just take the DHS risk assessment report and run with that?
Yeah, it's a really good point. And the fact of the matter is that from the government's perspective, going back to probably 10, 12 years ago, we have known in particular that The government has grown increasingly uncomfortable with having certain Chinese telecom equipment coming into our infrastructure, in particular Huawei and ZTE. But it wasn't until the president's executive order in May that there was a specific line drawn in the sand. There are a couple things at the FCC that we are otherwise kind of thinking through in order to create some security, and then I'll come back to your point. We voted very recently on China Mobile, which was a 214, basically an operator here in the United States, or there was their license was up, whether they were going to get a license or not. There are two other ones, China Unicom and China Telecom, that also do have 214s. And so trying to think through some of the ramifications of allowing them to operate in our networks. And then there's a specific Universal Service Fund, USF, which is a program administered by about $10 billion program administered by the FCC. And we have also done a supply chain in PRM that we're starting to work through, whether we're going to allow USF dollars to ultimately go to purchase Chinese telecom equipment. The NDAA also has focused us on this issue as well as a government-wide perspective. But what I wanted to, and what I've done in my 6 months here that I've focused here at the FCC, is that all of those are prospective, looking forward, and I completely agree with those, and full-throated believe we need to focus on those security risks. But I've also focused on the fact that we have a lot of, in particular, Huawei equipment with a number of small rural carriers, predominantly out in the middle of the country, heading out west a little bit. And so this isn't just a future threat, and we can't just treat this asymmetrically where we think, oh, let's just make sure we focus on this problem going forward. We actually know that there is infrastructure in our networks right now that we need to focus on. And so there is a 5G Leadership Act that's proposed in the Senate. Right now, we're trying to think through what the number should be. To your point, it's a little bit of a chicken and egg problem because we have had some trouble finding the carriers that have this equipment in their network to raise their hand and come forward. And so actually figuring out the scope of the problem, how many carriers have it, what is the extent of it in their network, is something that we're trying to think through, and something that we're at the FCC on a little bit of a fact-finding mission that I believe is where we need to be. And then the other part of the question that we're working with our sister agencies on is really the question of, and some of the national security expertise that they have. Is it something where we can only focus on the core of our network, the routers and switches that control that? Or do we need to make sure that we replace any insecure equipment that goes out into our radios to the very edge of our network? And of course, the dollars that would need to be marshaled in order to replace the whole network versus part of the core is something that folks are also trying to think through. And so getting folks to come forward and raise their hand and show us what they have, I think you probably are ultimately going to need some money, some type of appropriation from Congress before we really get our heads around the universe of this issue. But it's something that a lot of us are thinking through, and it's a critical issue.
I mean, I think part of this is that you're seeing the government rounding the corner in an accelerating manner on a 10-year conversation about supply chain and telecommunications. We've been talking about these things for a long time. We have more information now. We have a broader, I mean, just supply chain in general, the general pace of understanding of what needs to be done on supply chain, whether it's completely separate from this conversation, just in general. More information available, better risk assessment tools, better ability to accept and manage risk. This is just a manifestation of that, and you're seeing it done in coordination now at the operational level, at the policy level, and the strategic level. So I actually see all of these activities as fundamentally good things, because you're going to have a lot more certainty and clarity out of government that says these are the policy conversation's over. This is how we're going to act and engage and manage risk going forward. So I think it'll answer a lot of questions. And this is not, it's not just happening in Washington, D.C. Mm-hmm. These are the conversations that are happening across the globe. And from a security perspective, my sense of things is that it's pretty uniformly understood the risk posed by certain untrustworthy companies emanating from certain countries that have weaponized their tech sector. That's what I've used that term before. But there are competing economic and other interests that kind of create a tension. We don't necessarily have that tension. We just have to have more clarity within the government priority space. That said, we have to be very careful, I think, and the last panel was an excellent one on this regard. We have to be very careful that when we take these actions stepping forward, that it's not seen as just taking bad options off the table. Because God help us if we take all bad options off the table and there aren't any good options left. So we have to identify what those mechanisms we can pursue and encourage and support and incentivize that will promote and really take advantage of the U.S. innovation base. I really love the Open RAN conversation because it takes something down to the very basic dumb metal perspective and allows innovation to flourish over the top, and software-defined networks and cloud and coding. And these are just the things that the U.S., Silicon Valley, our partners in Israel, our partners in Europe really excel at. And this is where I think the future is. This is where the competition base is. So if we can figure out what introducing competition back into the equation, not just here, but principally in other geographies, it can undercut some of the artificial economic advantages that Huawei, for instance, enjoys from subsidizing 125% financing, integrated tech stacks. Those are the things that we can, if we can put the right sort of friction in there, we can compete and we can win.
So that's actually segue into another element that was a big part of your keynote and has obviously been a big part of today's discussions, and that is the partnership between companies and the government, not just the U.S. government, but other like-minded governments. So these companies are the frontline defense against tier one intelligence services, and we can't, to put it very bluntly, we can't secure our societies without these companies on the front lines doing what they can to secure us.
I'd almost fix that a little bit and say these blanks are on the front lines against tier one intelligence. You could say election officials, state and local governments. Yeah, I mean it is.
So that's right. To broaden it, the companies that are the suppliers of 5G equipment, the carriers that implement it, and they were all represented in the earlier discussions today. The producers of devices on the edge that will bring it to life. They're up against the Russians, the Chinese, the North Koreans, Iranians, et cetera. So how do we, given that we need them to secure us, how do your three agencies partner with them? And granted, two of these agencies have regulatory powers here. How do you partner with these companies and with each other to make it sort of a one team, one fight approach?
Well, from a Department of Commerce standpoint, we welcome and have our Office of Business Liaison and others that are constantly going out and talking to businesses, and specifically what concerns they are seeing as they are trying to secure their supply chain. Also, I think it's just helpful to have industry meetings and to touch base from time to time, and we've been doing a little bit of that with respect to supply chain, to just say, well, what areas of your supply chain do you think could potentially fall under this executive order? We know it's really broad, but where do you see the vulnerabilities? Where do you see what functionalities? Because it's not just this piece of equipment, it's this piece of equipment used in this certain way in this type of infrastructure that suddenly creates some type of risk. And so helping them kind of cull down and identify the types of transactions and the type of equipment in their networks is really helpful to us. And I know DHS has been very engaged with industry on determining kind of those vulnerabilities in and of itself. But certainly we welcome open dialogue through our Office of Business Liaison, also working directly with the bureaus, whether it's BIS and the export controls. Clearly, with the addition of Huawei on the entity list, there's been a lot of questions that have come into them, and they listen to that and will respond accordingly. And so I do think that it's just encouraging the industry to be proactive in reaching out to the department, and then the department will also be proactive in reaching out as well. But sometimes we can't see the blind spots, and so it's really helpful to have industry engaged.
And taking those opportunities when we engage and really operationalizing them. I mentioned earlier, it's public-private partnership has been a cliche in this town for a while, but it's about advancing it past just information sharing and all that good stuff, but really looking at what are the inherent advantages in the US government. Well, we have exquisite intelligence. Okay, let's share that over when we know something bad's happening. What are some risk management frameworks that NIST is able to develop on a consensus basis with the partners, much like they did with the cybersecurity framework. But even beyond that, what does the Department of Defense have? What does the Department of Interior have? A lot of land. What can we do with land? Well, let's go set up some test ranges and bring the equipment manufacturers and deployers in the comms companies, and let's see what network slicing can really do in a real world environment where nobody's going to get hurt. Let's just see what we can test here, and experimentation, really driving innovation by experimenting with it. I think that's the real advantage that we have, that we can keep pushing on. But again, working it back to the beginning of who knows what 5G deployments are going to look like better than the comms companies, the telcos. So have them come and say, hey, here's the architectures we're thinking about. What I'm really thinking about, in addition to what the actual communications infrastructure looks like, what we're trying to get a better understanding of what does utilization and dependency on that infrastructure look like from the perspective of other infrastructure sectors. So I want to know how transportation is going to be different. I want to know how public health and safety is going to be different. I want to know how logistics is going to be different. What are the things that are going to be enabled by 5G, and do we actually have the life safety frameworks in place? What else do I need to work with NIST on from an operational technology, from an industrial control systems perspective, to make sure that we're anticipating, so we're not sitting there, in 2025 and kind of saying, wow, we should have seen that coming. No, let's get on that today. And again, that's part of that secure tomorrow mentality that we're bringing.
Yeah, and so I would echo, my colleagues. I certainly think that 5G right now is presenting a good opportunity for us to think through the security that we need now rather than doing it on the back end. In terms of partnerships, the telecom companies, but also, again, back to, in particular, those rural carriers that we know have otherwise insecure equipment in their infrastructure. We need to be able to work with them, again, to figure out what is, how we can correct the problem. Where we're talking about a rip and replace is obviously something that some folks have started to think through. That's what, in fact, is part of the 5G Leadership Act that's pending in the Senate right now. And so trying to think through how do we work with those carriers. We know the equipment manufacturers are also starting to think through if we are in a world where we're going to rip and replace a whole lot of equipment, first of all, we need to make sure that customers are not otherwise interrupted. We know it's really important that they have the communications that they need, but it's also something where how can we do that quickly and effectively at a wholesale a wholesale market where you're trying to rip and replace a lot of infrastructure and smooth it quickly to get to a secure communication space. Is really important. And then something that I think was nibbled around as well is making sure that we're starting to think through how some of the software folks are really going to help us come to a more secure 5G world. I think that's a really ripe space for partnership and for folks to take some leadership there.
Let's dig in on that a little bit more. So Chris mentioned that DHS is the sector-specific agency for the communications sector and the IT sector. The FCC has jurisdiction pretty uncontroversially over the communications sector. When it gets into the IT sector or certain internet-based applications, it's at least controversial. I'll just leave it at that. And then the Commerce Department's the new executive order covers all of it. So discuss. Who does what? How do you work all that out when you talk about transportation and telehealth and who's got jurisdiction over what, and how recognizing that we're all interested in protecting the American people? How do you work that out?
I'll do the easy part. So the way I work is that I see frameworks everywhere. Or at least I try to see frameworks everywhere. I try to see a problem and then scope the left-right parameters, and then that provides the context by which we can tackle whether it's a commerce action. They're going to do their thing, but we help set the parameters. Part of what we did, I mentioned earlier, the National Risk Management Center launched last year. In addition to establishing the ICT Supply Chain Risk Management Task Force, was we embarked on an endeavor to get a better understanding of systemic risk. So what are those things that are truly nationally significant from a national security, economic security, and public health and safety perspective, that if degraded, disrupted, or otherwise affected would have truly that national level impact. And so about 3 months ago, we released what was known as the National Critical Functions Set. And so it takes this concept of 16 critical infrastructure sectors and breaks it down from more of a less of a organization or a building or an asset, and more of a what are the services, the functions, the cross-cutting interdependencies, to spot some of those things that may have historically fallen through the gaps. Industrial control systems is a great example. It's not a sector, but it ties sectors together where you find it within sectors. So 55 critical, national critical functions that, again, it provides a risk architecture by which we can get a better understanding of where risk is. So with these national critical functions, what I can do is I can take that, okay, why is 5G, what is going to be different in each of these functions as a result of deploying 5G? Who is going to be utilizing the capabilities? And then are we prepared? Do we know how to engage them? Do we have the right sort of mechanisms? And then we also use that as the basis for the risk assessment under the EO. I was able to look at about 7 or 8 different national critical functions on the comm side, and then distill that down to those 5 roles of, from a system administrator perspective, local access, transmission, storage, processing, and system management. Again, we've got to have an orientation by which we can start making these informed enforcement and engagement. And then I just kind of go, you got it now.
And with that, you got it now, we take that, but it's not over. We still have dialogue back and forth about, okay, what exactly does this mean? We understand DHS has an excellent ability to assess and do risk management. We want their input. As well. I mean, our silent partner here, our fellow from the Intel community, is a huge player. And we go back and forth and ask questions about the reports and the analysis and the threats as well. But you're asking, how do you start tackling these issues? I mentioned before these sub-policy coordinating committees. There's a lot of them, and they tackle various areas.
That's what I was laughing about earlier, and I looked over, and my chief of staff was like, don't do it, don't do it. Yeah. I've actually asked my teams, like, can you please enumerate all the PCCs and sub-PCCs that exist within the NSA? They're like, we tried.
Does anybody know?
I don't know if there's a spreadsheet that long.
Yeah.
But there's there's a lot. But with that said, at least for the ones that I participated on, they are well organized and well coordinated, and definitely are looking to organize and be that central kind of clearinghouse to make sure that all the agencies, 1, are at the table, 2, that their equities are weighed in on these specific issues, and then there are task and do outs. You're going back to your agency expected to produce a certain output, and that is to feed into the larger, whether it's a policy determination or whether if we're executing on policy, what the bottom line is. So it's not kind of a free-for-all in government. There is definitely centralized organization, and then amongst the departments, we each have our lane, and we make sure that we deliver on those things, but ultimately it's feeding up to address more of a centralized problem.
And I want to answer the question that I want to answer. which is, what I think is most important to the American people is that they're really not interested in the turf wars that have happened in this space for a long time. And you mentioned that as the kind of framing part of our conversation today. I think it's exactly right. Because the American people don't really care about, DHS is supposed to have this, and DOD is supposed to have this, and FCC, they're supposed to be the telecom people. Why is it they're not fully in charge? Like, what they want to know is that folks are really thinking about security and are making sure that the best choices are made for everyday Americans. And so, the Executive Steering Committee that all of us are on right here, the task forces that have been set up, the specific do-outs that are coming from the President's executive order. The good news for everyday Americans is that there is good playing in the sandbox now, that folks are working on these really complex multivariable calculus problems. And sometimes, we're an independent agency, of course, as opposed to folks that are in the executive branch. And so where Congress specifically gives us statutory points that they want us to act on, that's what we do, again, to come back to this 5G Leadership Act. That specifically says that, hey, FCC, you're going to be the folks that are going to be anointed to fund how this rip and replace is going to go. That's something that the FCC will do should Congress task us to do that. But we have to rely on national security experts, on economic experts. We bring network and carrier specific knowledge here. And the good news for everyone is that we're working collaboratively.
Would you say it's different? And I'll just say we had an event here in the same room in February, where we had an earlier but similar discussion, and it strikes me that the interagency is a lot more organized right now than it was even in February. So it was just a few months ago. Is that correct? And if correct, what's different right now as compared to a couple months ago?
I mean, there's no one single moment or thing. It's just, this is good government in action. It's the operational agencies, recognizing that the National Security Council is a policy coordination process and they set the policy, but there's actually day-to-day operational engagement that we're already doing. The good government piece is, well, let's do it together. So if DOD and DHS are going to do R&D and experimentation, well, wouldn't it make a whole lot of sense if we coordinated those efforts and saw if we couldn't find some efficiencies and some economies of scale? I might be able to save a little bit of money by putting my requirements in the DOD process, and they may be able to do the same. Standards, it's a great way for standards. NIST, state, everyone does a little bit of standards. Well, how about we get all of our standards efforts together, look how we might be able to cover the waterfront on this 3GPP meeting as opposed to that meeting. Again, it's pulling everything together like I think the American taxpayer would expect us to do, and actually doing it.
Just to put a fine point on, I'll mention something that you mentioned in your opening, and that is the CISRIC, which is for the benefit of the audience. It's the worst acronym in a city of terrible acronyms.
Nope.
Oh, you got one better.
They're worse. NPPD, that's the worst.
That's right. Right.
That's the old name of my organization.
Yeah.
I've forgotten what it
I'll
stood
admit,
for.
It sounded more like a Soviet Politburo.
Turns out it was actually a chemical compound that the Soviet intelligence agencies would use to chemically tag marks.
Right.
In Moscow and elsewhere. Yeah.
I think we're all glad that there's an agency, and with the inaugural director of that agency here on this panel, that you can understand what the agency does by its name. So here's one: the Communications Security, Reliability, and Interoperability Council.
Yeah.
It's the FCC's advisory committee that brings in private sector and nonprofit and governmental experts to advise the FCC on communication security, reliability, and interoperability. The CISRIC is in its 7th iteration. It just got rechartered a couple months ago. It just had its first meeting, July 19th, of the new iteration, and 2 of its working groups focus on 5G security. The last CISRIC put out probably the most comprehensive 5G security report anywhere in the world, with help of DHS and some other luminaries. What does this group and the 3 different agencies want to see out of this CISRIC and its 2 working groups on 5G security? How will it inform what the FCC does? How will it inform what Commerce does on the executive order? And how will it inform what the sector-specific agency does? And I'll just throw that out there. It's near and dear to my heart. It's a great group of people who don't get compensated to do this work, but they put a lot of work into putting.
And kudos to you for your long help and service on that. I mean, I know from the FCC perspective, and the chairman would tell you the same thing. I mean, we really do rely on them. This is not just one of those kind of light work councils. They really are a valued council. We rely on them to propose a lot of technical proposals to us. We do digest those. I think the most important thing that I'm going to be looking for is that they do start to deliver us some actionable deliverables that we can start to move on, and also solving some of the issues that we know, the vulnerabilities that go back to some of our legacy problems, and making sure that where there are fake base stations, that's something that I would really encourage them to focus on. 3GPP as well, and getting through some of those standards is something that we're going to be relying on them. And then something else that I know was mentioned here today that I would encourage them to also think about really is kind of helping us think through network slicing, because it is just going to be such a big important. We know that considering all the devices that we're going to have, the exposure plane that we have is just going to be amplified, and network slicing we know is going to be part of the solution and something that we really need folks to help us think through.
That's great. How can this an advisory committee at an independent agency inform what the Commerce Department is doing? Is often NIST is part of these deliberations and has been in the past. Is it something you guys will be looking for in the EO implementation?
I mean, for the supply chain implementation, I went and read the 5G report that the CISRIC 6 completed in their addendum as well, and it was very helpful to understand exactly what are the vulnerabilities that 5G lays on top, right? And with this 5G capability, what are the additional vulnerabilities and threat points that 5G exposes. So it was very helpful in that sense. And those types of reports, I think, will certainly be a part of kind of our compendium of knowledge that we have as we are looking at, okay, what transactions should we really be focusing on? And which ones warrant additional scrutiny. With that said, also through our NIST and other groups within the department, we rely heavily on NIST, and I would be bemoaned. I'm sad that I haven't mentioned more about NIST this whole entire time. It should have been a NIST rallying cry, because they are so involved in everything that we do at the department. And they touch so many different areas, both setting standards domestically, but also informing international standards bodies as well. And so NIST is certainly a group that we will use, and I know that they reach out to various agencies and departments and groups when it comes to the standard setting that they will be doing. And so certainly the work of CISRIC and others would be something that NIST would engage in to make sure that they are also looking at those areas as well.
Yeah, I mean, CISRIC is going to be a key part of the 5G risk management conversation going over. I see the task force as being more of a framework setting and actually building tools and capabilities, and when we hit thorny technical issues, chop it over the transom to CISRIC. It's almost, with the stand-up of CISRIC 7, it's like Voltron finally coming together. We've got all the pieces we need for federal government industry collaboration, the technical study side, the risk management and assessment side. It all comes together into actual action and deployment. So, really excited, and that the notice went out earlier this week, and there's going to be a lot of good work going on in the next 6 months at a minimum.
And in a lot of cases, it's the same players who are,
Yeah, they
who are
remind me of
playing
that
in both
quite often.
places. So,
and I tell you what, this is a funny point, because there are a lot of people in this town and industry that do a lot of kind of pro bono advisory work for the federal government. Yeah, maybe it's in their job descriptions, but it's almost no good deed goes unpunished. There are a few of them in this room right now, and they know who they are. But they say, hey, we're doing a lot. I think we're making a lot of progress. And I said, yeah, you are, and we're going to ask more of you. So how can we do this together to make sure that we're achieving the outcomes we want, that we're not being wasteful or duplicative? But ultimately, everybody gets what's at stake here. And I just could not be happier with the outcomes that we've achieved over the last year alone. And just again, that acceleration, you can just feel it, that we're really building up towards having much more clarity and certainty on the government side, providing a platform for American innovation to take off, really closing down any remaining risk issues across our infrastructure, pushing and helping our international partners get to where they need to be to manage their risk. I mean, we're right on the cusp of that.
I'll close out with a final question about where we need to go. We've talked a lot about there is quite a bit of progress here, but in the industry panels, we're talking a lot about virtualization and the Open RAN, network slicing, the fact that there's a very robust market that exists in the world that's very competitive in that space. So I'll close out with CISRIC and the EO and the Supply Chain Task Force and all the other activities in mind. What do you all need from the other agencies? What do you need from each other to help advance that competitive, diverse market of trusted suppliers and innovation? Or is CISRIC going to provide the answers?
So it really, as I see it, we're going to take care of the underlying risk. We'll get that part squared away. But we have to ensure that we're creating the conditions in the ecosystem for American innovation to flourish. So it's actually a lot bigger than this. It's about the National Economic Council. It's about the Domestic Policy Council. It's about the U.S. Trade Rep. It's about the Department of Treasury. It's everybody coming together and saying, what are the levers that we have as government to boost not just American, but it's this. I'm going to back out here for a second. Where I've ultimately landed on, as I'm seeing autocratic nations operationalize their tech sector, ultimately what we are in, and 5G is just a proxy for the broader conversation, but this is really a defending democracy conversation. The way technology is being used by autocratic states for surveillance, broader oppression. Rob Strayer talks about the imprisonment of Uyghurs. We are in a pivotal moment where we can either allow autocratic states to proliferate their technologies that are going to enable more countries that are on a tipping point, or we can push our own solutions out there into the world. Democracies can push their solutions out there to hold the line and really encourage democracies to continue to flourish. So what do? There is an industrial policy conversation I think is out in front of us. It says, what are the conditions that we need to create as U.S. government to generate, incentivize, and put that market forward that is going to allow that to happen?
And is that coming together in government? We have the core.
You're seeing part of this in action right now.
And so I would foot stomp that. The last thing I would say probably in closing out is that we are all working hard, we're collaborating. I think it's going to be important, and again, I see this in particular on the chicken and egg problem that you talked about, where what is going to be important is that we at the government start to offer some very clear and transparent paths forward, and I think that's going to help a lot of folks. I think there are carriers out there right now who have insecure equipment in their infrastructure, and they are remaining cloaked a little bit because they're worried about what's going to happen if they come out of, I'll say a proverbial shadow, I won't say a real shadow. And so if we can set forth some clarifying rules that, we the US government are going to be able to pay to rip and replace that equipment, I think you'll have a lot more people that are going to come forward. And so the more clarity that we can start to have and to show people, I think is going to be helpful and will redound to everybody's benefit.
And from the Department of Commerce standpoint, I think our job is to make sure that we get the balance right, to get the balance between the national security imperatives along with the economic security as well, and develop that universe of trusted partners, and making sure that as we are going forward and we are taking action and we are developing regulations and rules, that we're doing so in a targeted, thoughtful manner that will not hamper U.S. companies or our trusted partners' ability to innovate. Because ultimately, not only domestically but internationally, we need to make sure that we've created an environment that will allow them to innovate and for us to work together. And so I would say just in areas where we can continue to improve, doing exactly what we're doing right now. It's nice to be able to sit on stage and talk about how we're collaborating, and it's positive to see that we're doing it, and I think we just have to keep doing it more. So as much as we've seen it ramp up over the last year or so, I think continuing to accelerate that collaboration is going to be key in really moving this forward.
All right, so I think we might hold you guys to that and maybe bring you back and see how we're doing in
Let's do it.
Another year or so. Let me ask everybody to give them a round of applause. It's been a great discussion. And I think there's some refreshments outside.
you.